Good morning. It is 9 a.m. on a Thursday, February 24th. This is Yahoo Finance Live. I'm Julie Hyman with Brian Sozzi, and there is only one top headline that we are really focusing on today. That is the Russian invasion of Ukraine. We are seeing pressure on the futures here this morning after a steep tumble in stocks yesterday. The Dow, the S&P, and the Nasdaq are all trading sharply lower as indicated by the futures. And we are seeing a hair's breadth from correction for the Dow, very close to a bear market for the Nasdaq, depending on what happens for today's session. We've got team coverage of the events in Russia, Ukraine, and the ripple effect in markets. Our Kiko Fujita covering the latest headlines for us. And of course, our Jared Blickery, as always, manning the markets and the Yahoo Finance Interactive for us. Kiko, we start with you and the latest on the ground.
Yeah, Julie, certainly we are following this story on multiple fronts. Let's start with the reaction globally. G7 leaders currently meeting right now in an emergency meeting to discuss this next step in response to the Russian invasion. NATO allies also meeting as well, with Secretary General Jens Stoltenberg saying this morning that additional troops will now be deployed to Eastern Europe. Over in Washington, President Biden is expected to address the country later this afternoon. Now, explosions have been reported in nearly a dozen regions in Ukraine, including the capital city of Kyiv, making it clear that this is far more wide-ranging than the special military operation that was described by Russian President Vladimir Putin. Russia is insisting that the rocket attacks are aimed at military fighter jets and defense facilities, but there are multiple news outlets now reporting at least 10 civilians have been killed in the attack so far, along with 40 soldiers. Ukraine's foreign minister has called this a full-scale attack, and President Vladimir Zelensky took to Twitter this morning, vowing to give weapons to anybody who wants to defend the country, adding that Russia treacherously attacked our state in the morning, as Nazi Germany did in World War II years ago. As of today, our countries are on different sides of world history. Russia has embarked on a path of evil, but Ukraine is defending itself and will not give up its freedom, no matter what Moscow thinks. Zelensky has now declared martial law in the country. Its airspace has been closed to all commercial flights, and there are reports of panic on the ground. Let's take a look at these images of residents in Kyiv rushing to evacuate the city, bringing traffic to a standstill. There are also reports of long lines outside of gas stations as Ukrainians look to get out ahead of any additional attacks. Now, over at the White House, President Biden did speak with President Zelensky overnight and released this statement calling President Putin's actions a premeditated war that will bring a catastrophic loss of life and human suffering. The president going on to say that Russia alone is responsible for the death and destruction this attack will bring, and the U.S. and its allies and partners will respond in a united and decisive way. The world will hold Russia accountable. Now, the president is expected to announce additional sanctions later this afternoon. Within the next few hours, we should say, he's expected to address the country this afternoon. The European Union also planning to unveil additional sanctions, with European Commissioner President Ursula von der Leyen saying a short time ago that EU will hold Russia accountable for, in her words, this outrageous violation of Ukraine's sovereignty and territorial integrity. Certainly, this story, something that a lot of investors are following on the markets as well. I want to head to Jared Blickery, who's tracking the market reaction. Certainly setting up to be an ugly day today, Jared.
Yes, it is. And let's go straight to the Wi-Fi Interactive, where we can chart the overnight price action. I want to begin with the S&P 500 futures, and this is going back 2 days. So this actually covers the price decline we had yesterday afternoon into the close. We got a brief respite, and then the headlines started pouring out around 8 p.m., and they continued overnight. But you can see we've found some footing here. So I just want to go to some of the markets that are being most affected right now. Now, the Russian stock market is down 35% today alone. This is what happened overnight. And here's the 5-day price action down 43%. So Vladimir Putin knows that he is shooting himself economically in the foot, at least certain ways, willing to take that risk. You can see some of these ETFs that we have that cover the Russian sphere. That's down 23% here. RSX also down about 23%. And this 24% over the last 5 days doesn't include the overnight price action. And you can see what's happening in the metals market. Anything futures that's tied to Russia, palladium in the upper left, that's up 10% today alone. You can see over the trailing 5 days up 15%. These are huge moves. Crude oil jumping 7.5%. That is the biggest move that we've seen since November of 2020. We're at multi-year highs here. WTI actually topped $100 per barrel for the first time since July of 2014. Natural gas, here's another market, up 11% over the last 5 days. We know that the Nord Stream 2 project is put on hold right now, at least as part of the sanction efforts with Russia. And here's wheat. The breadbasket of Europe, the Ukraine, and also Russia, big wheat producers. Wheat's up 5% overnight, 17% over the last 5 days. And so we know that contributes to food inflation around the entire world because these are fungible commodities. Same deal with corn, up 10% over the trailing week. And with respect to currencies, the US dollar spiking higher. That means when this is going higher, that means the ruble is flagging. So I want to go back to some of our charts here in our quote list and go specifically to the US dollar. The US dollar is breaking higher, and we've seen it move higher at various times in this year and in response basically to the Fed. And let's not forget, we still had a structurally weak market due to the anticipation that the Fed is going to not only raise interest rates this year, but wind down its balance sheet. So this is a 2-month chart of the US dollar index, and we are right back up to the highs of 2022. Very instructive here because the US dollar can march higher, not only because of interest rate differentials, but also because of haven flows. So really interesting to see a lot of global flight into the US dollar right now, guys.
Yeah, and I was looking at interest rate futures this morning. The chances of a 50 basis point hike at the March meeting have been pretty much cut in half this morning as all of this is unfolding. Akiko Fujita, Jared Blickley, thank you so much. We'll check back in with you later. Right now, we want to get some analysis on what is happening in Ukraine and what is happening in the markets. We bring in Christopher Vecchio, dailyfx.com senior strategist, as well as Elizabeth Braw, a senior fellow at the American Enterprise Institute. Elizabeth, I want to start with you. One of your focuses is deterrence. And this action, even though it has been telegraphed, did seem to catch the international community off guard in terms of sort of the suddenness and that Putin actually took the action. Is there still a possibility of deterrence? What happens next in this situation?
It's extremely difficult. So the international community, for the most part, was assuming that Putin was just trying to frighten the West, trying to frighten Ukraine, but that he wouldn't invade the country. We were wrong. He has clearly invaded the country, and not just with some peacekeepers in the self-declared republics, but the rest of Ukraine is now under attack as well. So what can we do now? I think what we have to focus on is cutting or threatening to cut the remaining links we have with Russia. That includes, for example, not exporting some of the goods that the Russian establishment, the Russian elite likes to take advantage of, for example, luxury goods. I noticed Belgium is resisting an embargo on diamonds. I think we should certainly stop exporting diamonds, but we should also stop suspend the opportunities for Russian athletes, Russian sports teams, Russian artists to be part of the international community. They are Russia's best ambassadors, and they represent their countries. And it's not their fault that Russia is invaded, but it's one of the tools at our disposal. We could also highlight a little bit more what the Wagner Group is doing. It's up to no good, and it does operate with the cooperation of the Russian government.
Chris, the Russian ruble really fell off the map here this morning. Do you see any bottom in sight here for the Russian currency, and what does that plunge mean to the Russian economy?
I don't think it means anything for the Russian economy. This is a country with less than 18% debt to GDP ratio. Over 80% of its local debt is denominated in rubles, and higher energy prices over the past year have filled Russia's coffers. Putin doesn't really care if the ruble weakens from this point forward because the economy is so insular. You have to go back to 2018 when Russia unloaded all of their U.S. sovereign debt. They hold a paltry amount of U.S. treasuries right now, almost thinking in advance. And that's one of the benefits, if you will, of Russia's system compared to our U.S. system. Our politicians here, they think 1 quarter, 1 year ahead, the next election cycle ahead. This has been a long time coming. This has been coming since 2014. This has been coming since 2018. The clues have been there. Putin has been making these moves in advance. The economy can withstand this to a large degree, even if Russia is cut off from the rest of the world, thanks to how the economy has been structured over the past half decade.
Chris, where we see the weakness in the Russian ruble, Jared just mentioned a pop in the U.S. dollar. Do you think that move is justified, given that we have seen this really significant move higher in crude oil that could really damage the U.S. economy?
I do. When we talk about the U.S. dollar, the largest component of any dollar basket is the euro. Typical dollar index is 57.6% weighting there. And so the euro is ground zero for this in the developed world. Right now, when you take a look at the difference between Fed and ECB policy, that seems like a paltry comparison, but it drives that wedge deeper, whereby the Fed is going to be hiking rates faster, and the ECB will very much be constrained to keeping policy accommodative moving forward, given the conditions that we're seeing play out on the ground. We're really walking on a knife's edge here, where if a Polish soldier is killed, an Estonian or Latvian soldier is killed as a result of this, Article 5 from NATO could be triggered, and we could see this largest ground war in Europe since World War II expand and escalate very dramatically. So there's good reason why the euro is suffering here today. It's not just simply due to Fed ECB policy differentials, but the prospect of this becoming a much larger, more significant economic drag moving forward.
Elizabeth, I want to bring you back into this because from what Chris is saying, and certainly he's not the only one to say this, that sanctions as well, perhaps even as export controls, might not be enough here in this situation. You could still see more escalation. You still could see more on-the-ground military conflict with the U.S. involved in some capacity, with European nations involved in some capacity. What is the likelihood that this will balloon out of control in a scenario like what Chris is describing?
Chris made an excellent point that this could turn into a European war if a citizen of a NATO member state is killed. But even short of that, it's a very risky situation, very dangerous situation wherein the global community clearly wants to help Ukraine, and the different countries are sending weapons to Ukraine. There is a question about how quickly the Ukrainian armed forces can absorb this weaponry and learn to use it. And that raises a question, maybe we should send trainers, officers, soldiers who can train these Ukrainians in how to use the equipment. And that then raises the specter of a Vietnam-like scenario, which, as we I think all recall, started with the US sending officers to train and advise and assist the South Vietnamese forces. So that's where we are. And I think that's also why the US and other countries are so reluctant to commit any soldiers at this point, even though it seems like it would be the very most obvious thing they should do, because Ukraine is smaller than Russia. It needs help, but it would be extremely risky.
Well, and that raises the question as well, we've been talking about from an economic perspective, how resistant Russia is. From a military perspective, I mean, you're talking about a pretty unified front from the West, from the European Union, from the United States. Militarily, does Russia have the strength to withstand if there was a more, coordinated effort?
Certainly, if the US were to get involved, Russia would struggle to withstand that military pressure. But even short of that, the Ukrainians are a whole lot better. The Ukrainian armed forces are a whole lot better equipped, better trained than they were in 2014. And I think this is where Putin's miscalculation lies. He knows they are better trained and equipped than they were in 2014. I don't think he really calculated that Ukraine would be as united as it is, and that the West would be as united as it is. So what we're likely to see is the Ukrainian armed forces, and indeed ordinary Ukrainians, putting up a determined fight. We should remember the president of Ukraine has invited ordinary Ukrainians, to get weapons if they feel they can make a difference using those weapons. So Russia faces a very strong resistance on the Ukrainian side, which could bog the Russian armed forces down there for much longer than Putin, I think, had calculated. He seems to have calculated that this would be a swift intervention. Russia would declare victory and Ukraine would be weakened forever. Not so.
Chris, a lot of folks this morning have told me what we're seeing here in the pre-market. This is a market panic. But in the same breath, they say that investors should start to step in here and nibble at some weakness. Is that the right play?
It's possible. I mean, I want to look for some indicators. Typically during other market sell-off episodes, two things have popped out that suggest we're nearing an exhaustion point. That'd be VIX above 35 and VVIX, the volatility index, moving above 150. We didn't see that yesterday. It's likely that we're going to see that here today. Both the Nasdaq and the S&P 500 are coming into some technically significant levels, really going back to the May 2021 lows. And I do think at that point in time, given the specter of this sell-off, it becomes sensible from a risk-reward standpoint to at least try to cherry pick a short-term bottom. This all ties back to what's happening with the Fed in March, right? Russia is an accelerant here, but the conditions are in place for weaker stocks. You have declining corporate earnings, a weaker growth environment, and of course, record high inflation. That's going to bring an onset of several Fed rate hikes in back-to-back-to-back meetings now. But the Fed is not likely to go forward with 50 basis points here, regardless of what the upcoming CPI print is right before their meeting in March. And ultimately, given the scale of the decline we've seen thus far, looking into those May 2021 lows as a stopping point for further bleeding, if you will, that to me makes a lot of sense.
Yeah, at the same time, it doesn't seem like anything's going to deter the Fed from at least a 25 basis point increase. Chris, thank you so much. Chris Vecchio of dailyfx.com and Elizabeth Braw, Senior Fellow at the American Enterprise Institute. Thanks to you both very much this morning on a very fast-moving morning in terms of development out of Ukraine. Coming up next, we will zoom in on the energy implications of this invasion. We, of course, are seeing a spike in energy prices across the board, crude oil in particular, at the highest going back to 2014. We'll be right back.
Brent crude oil prices blasted through $100 a barrel on Thursday as Russia invaded Ukraine. Next guest says the rally in oil prices has just begun. Vandana Hari is the founder of Vanda Insights and has long covered the oil space. Vandana, always nice to see you here. Now, so you say this move in oil prices is not yet through here. What is or what would be a short-term top in your view?
Morning, Brian. So we've seen Brent hit $105, and the note that you're referring to when I wrote that Brent had just crossed $100, and I said, this is just the start of the rally, which proved to be correct in hindsight. But what I really mean is that, look, I think this is still a highly volatile and unfolding situation. It's become even more uncertain now how, first of all, Russia is going to what its playbook is in Ukraine, but perhaps more importantly, what kind of sanctions we're going to see now in retaliation from the European Union and the US, which will be a second phase of sanctions, if you will. And, they'll expect to do something that hits Russia far harder. So the big question for the oil markets, or the energy markets for that matter, is will Russian oil and gas supplies to Europe and perhaps even to the rest of the world be affected? And until that is clear, you can't say that crude has topped out, no matter where it reaches.
Vandana, it's Julie here. And certainly the market is reacting as though the supplies will be affected, right? We are seeing sort of a buying first and asking questions later sort of reaction here. But play out that scenario for us, if you would. If you do see a reduction or even a full stoppage of supplies from Russia to the rest of the globe, what effect does that have? What does capacity look like elsewhere?
So, Julie, all of those are very good questions and extremely difficult for the energy markets to get their arms around at this moment. So, of course, the big question is how will we see the situation unfold, right? Like one way that Russian supplies could be disrupted is, let's say, that sanctions, direct sanctions on its energy sector, or indirectly, some of the sanctions end up hitting its energy exports. Another way is that Russia deliberately curtails supplies, or perhaps even completely curbs supplies to Europe. So that's a huge uncertainty. You're absolutely right in that oil and gas supplies from Russia as of now have not been affected at all. That might come as a surprise to some people who've been watching crude rocketing up since this morning. What is happening is, of course, the market now factoring in the worst case scenario, which is, and we are not there yet. The worst case scenario would be a complete cutoff of Russian oil and gas supply to the world. And it would be absolute chaos, mayhem, because there's just no way all the oil producers and gas producers in the world put together that could replace or plug that gap if indeed Russian oil and gas supplies to the world markets get blocked off.
So let's talk a little bit more about gas in particular and the effect that is going to have on Europe. Obviously we've seen this delay for Nord Stream 2. Nord Stream 1 is still there and in effect. But what are we going to potentially see for natural gas prices in Europe specifically? Because you have less of a global market when you're talking about natural gas. So how does that sort of play out?
Absolutely. And I think here it's crucial to make a distinction in terms of infrastructure, in terms of how gas is moved from producing countries all the way to the destination, the user countries. And when it comes to Russia and Europe, the vast majority, first of all, Europe depends nearly 45% of European gas imports come from Russia. The vast majority of those come via pipelines. And when you're talking of a pipeline, it's basically point A to point B. Russia cannot just take that gas and liquefy it, turn it into LNG cargoes. Not possible, and send it elsewhere to the world. Similarly, what can Europe do? Obviously, you can't put new pipelines overnight, even if somebody else had more gas supply. You can import more LNG, but then again, you come across you run into infrastructure bottlenecks because you have a certain infrastructure in place to regasify and then to send that gas across to different parts of the continent. So this is the big problem with gas. And even when it comes to when we say, can SPR releases help? Can Iranian deal and Iranian oil help? Can OPEC plus help by putting more oil into the market? I think it's worth remembering all of that is oil. And as we've seen in the energy crisis of late last year, there is limitations on how much of gas can be replaced by oil. So, as I said, it's just an absolutely nightmare scenario if indeed gas supplies from Russia get disrupted.
We really appreciate you helping us understand this really developing situation. Vandana Hari, founder of Vanda Insights. Good to see you. We'll talk to you soon. All right, we'll stay on this developing situation out of Ukraine coming up, and we'll also take a look at a few earnings movers on the Yahoo Finance platform, notably Moderna and eBay. As you can see right now, those futures, Dow futures, now down more than 800 points at the worst of this pre-market session here. We'll be right back.
Good morning and welcome back. We are seeing futures deeply in the red on this Thursday morning. Nasdaq futures leading the way downward, off by more than 3%. The S&P and the Dow also indicating drops of about 2.5% at the open. And keep in mind, this is on top of some heavy selling that we saw yesterday. The Nasdaq is now down 18.8% from its record high back in November, so nearing a bear market. The number to watch today for the Nasdaq, now you're looking at futures there, the number to watch as a close for the Nasdaq, 12,845.95. Below that level, at or below that level, will be a bear market for the Nasdaq. And Brian Sozzi, a lot of what we've been seeing this morning, obviously we are seeing commodities sell off, we are seeing Russia ETF sell off, and we are seeing tech sell off in a very big way here this morning. Broad-based tech sell off among large cap tech, small cap tech, et cetera. We're going to take the opening bell, and then we're going to talk about all of that. And there we do indeed have the opening bell as we see, expect a plunge here at the open in U.S. stocks. Brian Sozzi, get in here. Talk to me about what we are seeing in terms of tech stocks in particular, which I know is something you've been watching closely.
Yeah, tech stocks continue to be under pressure here. The Nasdaq 100 nearing a potential bear market territory. That would be defined as 20% off its recent high. That hasn't been in a bear market, I believe, since 2020, early 2020. So that is quite striking here, and it's pressure across the board, Julie. It is that lower quality big cap tech names, and it's the names a lot of these momentum traders loved last year. It's Facebook, it's an Amazon, it's Microsoft, it's all those companies. But I will say this, we're seeing a really ugly open here for the markets, but not everything is in the red. Look at what is working. Gold prices have been strong all morning long. I have a piece on this on the Yahoo Finance homepage now. A company like Newmont Mining, one of the biggest miners in the world, that stock is working. Also, with the rise in oil prices here and gas prices, you're also seeing shares like a Chevron and an Exxon. Those trades are working not just well today, but they continue to be probably the market's best momentum trades over the past few sessions.
You're looking at the glass half full. I'm looking at all of the carnage that we are seeing in the markets here today. And I should mention, again, just to emphasize, if the Nasdaq closes at this level right now, it will be in a bear market. That is, as Brian just mentioned, defined as a 20% drop from close to close. So typically, we would look at the closing level to see if it has entered a bear market. So it could be effective as of the close today. If it does not recover, again, to close above about 12,845, just under 12,846 here. So we will be keeping an eye on those levels here today. It looks like the Dow as well has entered a correction. It was down 9.97% from its high to its low. So really, any kind of drop today was going to mean a correction for the Dow. So these are the numbers that we are watching and talking about this morning. And we are also talking about what's going on in large cap technology with the Nasdaq down the most, 2.8%. I was looking at some of the drops in pre-market trading that presumably are carrying over into the regular session. Tesla was down about 9% in pre-market trading. Apple, Amazon, Meta, all of these were down steeply in pre-market trading on this concern that these guys are already in sort of a delicate position, right? You've got the Fed raising rates, which of course the perception has been that tech is most vulnerable to that. Then you have geopolitical volatility layered on top of that, increasing commodities prices, and perhaps also continued supply chain constraints, which have been such an issue for so many companies. Definitely not good news for a lot of these stocks.
And Julie, what we have seen this week, let's zoom out as those well-paid executives continue to tell us. As we zoom out, we have seen some very ugly sessions into the close of trading in that last hour this week. Tuesday, bad. Wednesday, bad. Now, at one point in those sessions, stocks were in the green. No go here. Very ugly session 2 here to start. Seeing a complete lack of confidence here of people to come in here and buy this dip. And why? Julie, I go back to some of these crisis playbooks that you and I have probably covered and been through over the courses of our careers. I go back to the great financial crisis. It took a key positive development, a key positive comment back then from a Fed member, from a government official to really settle down markets here. And as you sit here today, I just don't see where those types of comments are coming from.
And finally, just quickly, I wanted to mention before we move on, travel and leisure stocks, which had just begun to see some light at the end of the tunnel with regard to COVID, are now also down sharply today. Anything airline related, anything cruise line related, the hotels, on concern, obviously, if, you get through the COVID wave and now are people nervous about traveling? Are these companies going to have to raise rates further because of prices further because of what's going on? Let's move on to earnings and just zoom through them a little more quickly than we normally do because of everything going on. Brian, I want to start with Moderna. Those shares talking about operating expenses above the average analyst estimate. The shares have been trading lower in pre-market trading. They've now turned higher. They're up now by 7.5%. The company did come out, I should say, with revenue above estimates, including a COVID vaccine revenue that was above estimates. Also, the company coming out with earnings per share that are above estimates. There had been some concerns, again, over those expenses, but it looks like the market has shaken them off.
Yeah, finally, Moderna getting a little bit of love here. This has been one of the worst performing stocks, really, the past 6 months. Two things, Julian, and you highlighted the first one. It is that guidance for this year for what Moderna calls advanced purchase agreements, or APAs. So they say they have $19 billion worth of those agreements, mostly as it pertains to COVID-19 vaccines, and then another $3 billion for potential booster shots. So I think the market likes to see that ongoing demand for COVID-19 vaccinations from Moderna at a time where we're seeing new cases of COVID come down. Secondarily, cash position from Moderna, very, very strong at almost $18 billion. I think the market likes that too.
And just wanted to mention as well, we in a few minutes are going to talk to Hartaj Singh of Oppenheimer to get some more insight into the quarter. And we're going to hear from Moderna CEO Stefan Bancel coming up at 11:15 right here on Yahoo Finance. Also got to talk about eBay this morning, though, because that stock is also on the move sharply downward in its case, down by 9%. The company's forecast for the current quarter for sales. It's saying sales will be as much as $2.48 billion. $2.6 billion is what analysts had been predicting. This even after revenue matched and earnings per share beat estimates. So it's really the forecast here that is of concern, and active buyers fell last quarter as well, which is not good news when you talk about a company like eBay.
Yeah, eBay's staying on my dog list, Julie. Another terrible quarter from this company. A true also-ran of an internet company, really completely irrelevant when it comes to just, I think, a lot of folks on the street wanting to get involved with this company. It's just bad. Gross merchandise volume down 10% year over year at a time when we're all flooding to the internet. We're still locked in our homes in large part, buying stuff that's not good. And neither, speaking of not good, neither is the market reaction by Wall Street analysts. You have the folks over at Wells Fargo saying this could be a multi-year journey for trying to turn eBay around, but still concerned about what their margin outlook is going to be. That outlook likely to stay somewhat concerning here for eBay. But on the positive, Julie, a lot of analysts highlighting that they had a good quarter selling a lot of shoes. So good to see eBay being able to sell a lot of shoes in this environment, but not doing much for their profits.
Yeah, no, it is not. And finally, just quickly, Alibaba here, that company also has been under pressure this morning after reporting the slowest revenue growth since the company went public. Some of it has to do with the China regulatory crackdown that we've seen on the tech sector. Part of it has to do with losses in its investment portfolio. Net income down 74% year over year. Sales did rise 9.7%. But before this crackdown, they were regularly putting up 40% growth quarters in sales. So that is what's responsible for the declines that we're seeing here. You see that sales growth, that revenue number missing estimates. Well, coming up next, we're just a few minutes into the trading day, and already we are seeing a lot of declines here across the board. There you see some of the Nasdaq laggards. We're going to go to the New York Stock Exchange, talk about what's going on the floor there. What is the word? Jared Blickery will be joining us next.
Welcome back. Let's head down to the New York Stock Exchange and check in with our very own Jared Blickery. Jared.
Yeah, let's get straight to the Wi-Fi Interactive. I'm looking at the S&P 500, a little bit of a longer-term chart. What I want to point out is this market was structurally weak 2 weeks ago before we had these Russia headlines dominating it. So this is just compounding the problem. We sold off, broke down, rallied a little bit, and then sold off into the current state. Now, everyone wants to know, what is the capitulation signal? I like the guest earlier who was saying looking for a VIX spike above 35 and also a VVIX spike, so that's VIX of the VIX above 150. If you'll notice, the VIX of the VIX barely responding here, so this could be an interesting one-off scenario, or we've barely gotten started yet. So we'll have to see how that shakes out. Here's the 10-year T-note yield dropping 9 basis points. That is an absolutely huge move for it. Also, the U.S. dollar index, advancing very strongly here. And all of this setting up for some nasty action in our heat maps. And you can see all 11 S&P 500 sectors in the red. Financials taking the biggest hit, down 3.5%. That is as the yield curve pricing in maybe a little bit less aggressive Fed. Hard to think if that would be possible, but nevertheless, that 25 basis March rate hike now much more probable than a 50 basis point rate hike. Also taking a look at some of our leaders here, EEM getting absolutely whacked in the bottom right. Then we have gambling, Chinese internet stocks, regional banks, art components, everything strongly in the red here. So just a broad-based sell-off that we're looking at. Finally, want to check in on the travel sector. As you can imagine, a lot of carnage there. United Airlines down 6%, guys.
Thanks so much, Jared. Appreciate it. And speaking about the changing perception of what the Fed is going to be doing, our Brian Chung joins us now on that aspect of things. You know, what we keep hearing from people over and over again is the Fed was already in a tight spot, and this only makes their job that much harder.
Yeah, Julie, I mean, things are moving very quickly, but it seems like some of the quick reactions to some of the developments out of Ukraine seems to point to a Fed that could be a little bit less aggressive when it starts to raise interest rates, although the Fed will still be on the course of raising interest rates. Evercore ISI and Goldman Sachs among the economics teams that are calling for the Fed to now do the standard rate hike of 25 basis points or 0.25% instead of that 0.5% or 50 basis point double rate hike that many had expected at the beginning of the month when we got that hot consumer price index print. And there are really two reasons for this. First, the uncertain spillover effects of what's going to happen in Europe as real income and then growth gets impacted because of Ukraine's importance to the continent at large. And then secondly, just financial conditions, as Jared was kind of underscoring, tightening across the board, not just in Europe, but in the United States as well. We did hear from the San Francisco Fed president, Mary Daly, yesterday. I want to read you a quote of what she told reporters, quote, "These create a lot of uncertainty and uncertainty, as we know, is a demand shock. How big the demand shock is depends on how high the uncertainty is and how long it lasts." Now, again, those remarks preceded Vladimir Putin, the Russian president's announcement that he was going to be invading Ukraine last night. So, of course, we will see if there's updated Fed commentary with a number of speakers expected today. For what it's worth, if you take a look at the betting markets for where Fed funds futures could be going, this more 87% chance of a 25 basis point hike. It seems like the odds of a 50 basis point hike have been very dramatically reduced, and we're already seeing this priced in the actual nominal 2-year yield, which has fallen 11 basis points. And as Jared highlighted, even on the longer end, the 10-year falling by 9 basis points. So very quickly changing expectations for Fed policy this year, guys.
Yeah, and very helpful story from you, Brian, now on the Yahoo Finance homepage on all of this. So I encourage everyone, do check it out. Thanks so much, Brian. All right, Moderna's earnings are also in focus today. We'll be right back with a hot take on the quarter from Oppenheimer pharma analyst Hartaj Singh. But before we go, take a look at pharma stocks, see how they're performing on this busy Thursday morning. Some mixed action, but Moderna solidly in the green here. We'll be right back.
A little more than 15 minutes after the opening bell, and things don't look quite as bad as they did in the futures market, but nonetheless, some pretty deep selling here. The Dow off by 2.5%, and if it closes at these levels, will be in correction. The Nasdaq likewise will have entered a bear market as of today's close. If it closes at this level, the S&P off by 2%. It already had entered correction. It's still there. We are also watching shares of Moderna today, and they have been bucking the downtrend that we've been seeing in broad markets here. The company's revenue last quarter came in ahead of estimates. There was initially some negative reaction to expenses for the year, but now that has turned around. Let's talk to Hartaj Singh about all of this. He's an analyst at Oppenheimer, covers the biotech industry. Hartaj, good morning. So what do you make of the sort of turnaround that we saw in the Moderna shares there, where there initially seemed to be concern about expenses and then investors shrugged it off?
Yeah, Julie, it's, honestly, I mean, we're neutral rated on Moderna, right? But we've always really liked the story from a long-term perspective. To me, this is a good sign, actually. There's been a lot of negative sentiment around the name, around COVID-19, companies in general, companies related to the COVID-19 epidemic. Moderna being at the forefront of that. And I think this sort of reversal is a good sign because investors now are starting to pay attention to fundamentals. And in that regard, this was a good quarter. They had a good quarter. Probably the guidance for the full year is maybe not what people were expecting, maybe slightly weaker, but they'll keep on adding sales. I said the second half of this year, the sales will be stronger. And then, they're starting to get back market share from Pfizer. That's the key thing. You could argue that their vaccine is slightly better than Pfizer-BioNTech's, and the fact that now they're starting to claw back some market share was a good sign.
Hartaj, Moderna mentioning something pretty interesting in their earnings release. They say, quote, the virus will evolve to an endemic phase in 2022. What does that mean for this company's sales and profits? How fast are they likely to grow in this endemic phase?
One of the things I really like about this company, Brian, is that they're not prone to sort of, overplaying their hand or overstating things. They're very careful in what they say. And part of that is they don't want to raise expectations. And the other part is they don't want to alarm people. I think what the company is saying, and from their development, what you can look at is that they still expect, potentially variants to occur. An endemic phase is more like the flu, sort of happens, in the Northern Hemisphere once every year, usually in the fall and the winter. But they are paying attention to the Southern Hemisphere. They are seeing, could the virus, mutate again. But they've got quite a few, vaccines in development, and they showed some data on a bivalent vaccine that goes against the ancestral strain and against the Omicron strain that could be better, and that could be the booster for the fall of this year. So, to me, this is a company that's very close to the ground, not alarming people, but yet being, letting people know that, we have to stay, we have to be careful and we have to prepare for the fall where, people, should be getting shots again.
Hartaj, we are going to be speaking to Stefan Bancel of Moderna in the next hour. And I should say 2 hours from now, excuse me. And I should mention, I wanted to ask you what you would ask him. What do you think is the sort of key question for Moderna going forward?
Julie, honestly, look, while the pipeline kind of builds itself out, and this kind of harks back to what Brian just asked me, is not so much what do you think your sales are going to be in 2022? That's because he can't really tell us, right, with high degree of certainty. But the real question to him is, how come you've got the better vaccine and commercially Pfizer and BioNTech are, for lack of a better term, still taking you to the woodshed, right? How are you going to claw back that market share? How are you going to actually get ahead? If they can, get to pole position, should be ideal by the end of this year. I mean, that'll be a huge boost to their share price. So I think that's the critical question for Stefan this year: is how do his commercial teams execute worldwide and get some of this, market share back?
Well, we'll ask him that. Thanks so much, Hartaj. Good to see you. Be well. Hartaj Singh of Oppenheimer on Moderna. And as we mentioned, we're going to be hearing from Stefan Bancel, the CEO, at 11:15 this morning. Coming up next, we're going to be checking on the crypto fallout from what's been going on today. Crypto not immune from the selling that's been going on in risk assets. We'll be right back. We are watching a broad sell-off in risk assets today, and that is extending to crypto. Bitcoin, as you can see, is down 8% today. Our David Hollerith covers this space. And David, you've been watching the correlation between stocks and crypto.
Right, that's sort of the major theme to sort of explain what's going on here. Cryptocurrencies are sort of considered, higher risk, similar to higher risk equities. In the actual correlation in direction and price movement that reached an all-time high yesterday. So with the S&P 500. So sort of what we saw last night, this drop in cryptocurrency value is very much tied into the risk-off behavior that's been happening. And such a high correlation is really not that big of a surprise if you've been following sort of what's been happening with the asset class since the start of 2022. Now, I have spoken with some OTC brokers too, who have sort of just explained, offhandedly that they've seen higher selling volumes after the fall in crypto prices that occurred last night, which sort of signals to me that there's a chance that the market could have further to fall. Bitcoin fell as low as it fell below $34,000 earlier this morning, last night, and so it was almost a 9% decline, and there has been a little bit of a recovery. Now it's trading above $35,000. We'll see sort of how that continues to shake out. Other major cryptocurrencies that have been hit hardest by the market's risk-off behavior include Avalanche, Dogecoin, and Cardano, which have each fallen down about 17% on the day. Now, just going back, Julie, to sort of some technical language that the analysts have given me, it looks like Bitcoin itself has stronger resistance around $33,000, which is sort of its previous bottom last month, as well as sort of the $30,000 mark. So that's sort of what I've been seeing in the market as of this morning.
We'll be watching those levels very, very carefully and attentively. Thank you so much, David. Appreciate it. We know you're going to keep tabs on what's going on in crypto there. We're going to take a quick break. When we come back, much more for you in the next hour as we follow this developing situation and the sell-off in the markets.
Good Thursday morning and welcome back to Yahoo Finance Live. I'm Brian Sozzi alongside Julie Hyman. And we have lots to get to over the next hour of market action as the major indices are tanking on news. Russia has invaded Ukraine. It's a risk-off environment across the board, notably for the Nasdaq as it flirts with bear market territory. Markets in Europe and Asia also under considerable pressure. Yahoo Finance's Jen Schomburger is here with the latest on the situation out of Ukraine, and our very own Inez Ferre is stationed at the Wi-Fi Interactive. Jen, over to you first.
Good morning, Brian. President Biden, along with Western allies, are poised to impose steep coordinated sanctions against Russia after Moscow launched a full-scale invasion against Ukraine earlier this morning. The president was scheduled to speak with his G7 counterparts and is expected to address the nation today and provide an update on the U.S. response. The president, in concert with Western allies, have repeatedly threatened crippling sanctions and are discussing a large package of sanctions that they've been working on for weeks now. The European Union this morning extending a second set of sanctions that target Russia's financial sector, freezing Russia's assets and banning the export of technology to Russia. President Biden said in a statement overnight, quote, "President Putin has chosen a premeditated war. Russia alone is responsible for the death and destruction this attack will bring, and the United States and its allies and partners will respond in a united and decisive way." Now, the U.S. and Europe imposed sanctions earlier this week after Russian President Putin sent troops into 2 regions of eastern Ukraine, including shutting Russia out of access to the Western financial system and imposing sanctions on Putin's inner circle. Wednesday, the U.S. imposed sanctions on the company behind the Nord Stream 2 natural gas pipeline after Germany halted that pipeline. The White House warned earlier this week that they are poised to impose further sanctions and export controls if Putin were to escalate actions, which is what we are seeing today. Though SWIFT has not been employed yet, officials say that option is still on the table. When asked whether Putin himself could be sanctioned, officials say that is also on the table. They say there is no Russian financial institution that is safe and that they are ready to press a button to take further action on the very largest Russian financial institutions. So we'll hear more from the president later today on those specific actions. And as I'll toss it over to you with the market reaction.
And Jennifer, stocks have been tumbling worldwide. We want to show you some of those markets around the world. The London FTSE down more than 3%. The Asian markets also lower. The Russian market down 34%. And taking a look here at home at the Dow, the Nasdaq, the S&P 500, all in red territory. Taking a look at the 10-year Treasury note, that yield is lower, down about 9 basis points at 1.89%. A big move. Also, the U.S. dollar index is higher. Also, taking a look at commodities, where we're at with oil, WTI, Brent crude, all of those higher, with Brent earlier touching $105 per barrel. Right now, you can see Brent crude prices on your screen. Also, taking a look at WTI futures, those are up 5%. We've also been watching the precious metals going higher, gold higher, palladium is higher. Russia is the biggest exporter of palladium, the precious metal. Also, we're looking at silver futures that are higher, and also wheat higher, as well as Russia and Ukraine are key exporters of wheat. Looking at the sector action, all 11 sectors of the S&P 500 are in red territory. You've got financials that are leading to the downside the most. You've got utilities that are losing the least, but all are in the red. And the Dow, all components of the Dow in the red except for one. Brian, Julie.
Nesfaret, thanks so much. Shares of big cap tech names are still trying to find their footing as the sector continues to be weighed down by dreary earnings reports from Meta and Roku. Looming rate hikes from the Fed and the Russian invasion of Ukraine isn't helping sentiment for these stocks either. Mark Mahaney is Evercore ISI's Senior Managing Director and Head of Internet Research and joins us now. Mark, always good to get some time with you. Is what we're seeing right now in tech something similar to what we saw back when the internet bubble burst in 2000, where investors should be using these opportunities to buy names at a major discount?
Okay, well, thanks, Brian. I think the analogy is more like the end of 2018, where you had a correction in the market that was kind of 15 to 20%. Nasdaq is just about in bear territory now, down almost just around 20%. And then you had three things kind of come together. You had a trade war. You had slowing in global GDP growth, and then you had the beginning of what was presumed to be at the time a series of interest rate hikes. Instead of a trade war, you've got a real war this time. And instead of unknown certainty about interest rate hikes, you've got known certainty about interest rate hikes. The question is just the magnitude of them this time. So I think you put all that together, it's a pretty negative cocktail, if you can say that word, for growth equities, for tech stocks. And it's hard to see why there's a floor in them, or at least why there's going to be a major bid in them until later in the spring, after we get a sense from the Fed, and then after we get about the pace of rate hikes, and after we get some greater visibility in how Russia-Ukraine is going to play out.
Yeah, for right now, Mark, it's very, very murky, obviously, as to what is going to happen. There's sentiment, and then there is reality. And obviously, sentiment is very powerful, and that's a lot of what the depressive pressure of what we're seeing right now. And then there's trying to piece out what is the actual effect of this. What is the implications for rates? What's going to happen then to tech as a result? There's also some talk about the semiconductor supply chain being affected because of some raw materials that come out of Russia. How are you sort of thinking about the quote unquote real effect, if you will, of this conflict?
I'm not sure to tech there's a real effect. I think it really is much more of a technical effect. And again, what I mean by that is, the fear is the rising rate environment. So rising rates negatively impact future growth, high multiple stocks, which is where a lot of tech finds itself. And now that you've got more supply chain disruptions, costs are going to be rising in Europe. That'll bleed through. So yeah, you're going to have, if you had inflation concerns late last year, they're much elevated versus then. But I want to also get back to what something that Brian was asking about, which is, so is this an opportunity to step in and buy these stocks? Yes, if you have a 9 to 12 month outlook, and look, you're going to be able to, you'd start off buying the highest quality names. And that would probably be, it would be Google and Amazon, and then maybe Facebook. There's a lot of company-specific controversy around that. But Google and Amazon are trading at trough multiples now because of market concerns. When those market concerns fade, and they inevitably will at some point, I don't know whether it's months or it's quarters, but they will fade, you're going to get a chance to buy Google and Amazon at bargain prices. So if you've got a long enough duration investment outlook, absolutely, you should be stepping in and buying some Amazon, buying some Google today.
That's really interesting, Mark. And you also said in the short term, at least, it's going to be difficult for these stocks to find a floor. When market concerns sort of fade, that could happen. What would that look like to you? What would be the signal that market concerns were fading, or that things were going to, I mean, I know we're looking down the road a little bit here, but what signals do you look for that that's set to happen?
Well, technically, you'd be looking for some clear path on what's going to happen with interest rates. Just, Julie, if we go back here 6 months ago, we were talking about one rate hike in 2022, and then we were talking about 2 or 3. Now it's 4 or 5 or 6, and the question is, we're doing 25 bips, we're doing 50 bips. This is an enormous amount of uncertainty. The Fed, after the next Fed meeting in middle of March, maybe we'll get a little bit more visibility. We may have to wait until we see a series of hikes go through the market, and so that would take us to the summer. So I think there's part of it is just getting some cadence from the Fed as to the direction. We know what the direction of rates is, but the pace at which rates are going to increase. Once the market feels comfortable with that, or at least has visibility into that, then I think you'll see a return to growth equities. And the other unknown, of course, is just how extended and how long, how damaging the Russia-Ukraine war is going to be. So I have no real way to handicap that. The first one, I think there's plenty of precedence in history for how long it takes stocks to react to once the Fed gets consistent with what the rate hike increase path is going to look like.
Mark, to the extent you can discuss this, are there companies in your coverage that are better equipped to handle any potential cyber attacks than others?
I hadn't really thought about that, Brian. I would assume, I don't know, I would assume that the biggest companies, the Googles, Facebooks, Amazons, because they've got the largest operations, and so therefore cyber attacks would be a smaller percentage of total spend, could be a smaller percentage of total spend for them. They could probably absorb that kind of spend. And it's not like they haven't dealt with cyber attacks in the past. Most of these companies have. But I would assume that the bigger the company, the greater their opportunity to fend off those risks. But it's a good question, Brian. I hadn't really thought about it. Maybe that's another operational risk. Maybe that's where the real impact of Russia-Ukraine is on these companies' fundamentals. So that's something to keep in mind.
We'll look for your next note maybe on that, Mark. But originally we had booked you to talk about some earnings reaction today, among other things. And so I am curious to get your thoughts on eBay. That definitely was not among the list of stocks that you said you would recommend stepping in to buy right now. And we are seeing eBay under a lot of pressure here. How sort of structural are some of the issues at eBay, and how likely are they to persist?
Yeah, Julie, the issue with eBay is, the guidance they gave last night, and look, the stock's got a lot of valuation support. It trades in a mid-teens PE multiple on GAAP earnings. And unfortunately, this is one of the very few companies that I cover, maybe the only one that still reports non-GAAP earnings. I just think they need to move beyond that. The rest of the sector and the street has. But leaving that aside, their guidance implied that they're going to exit 22 with kind of low single-digit revenue growth. And that's just, frankly, not that, that means that they're still going to be underperforming the overall e-commerce market. And this company has taken a lot of steps to streamline their portfolio, to return cash to shareholders. So they've done the right strategic steps. But in terms of the actual business itself, what after several years of tweaks to the products, trying to expand into new categories, the market wanted to see kind of better growth coming out of it, and that's not what we're going to see. And I just think the competitive intensity is so great, not just with the large companies like your Amazons and maybe your Shopify's, but also with a lot of the kind of the ankle biters, a lot of the vertical players in this space, whether it's a RealReal, a Stitch Fix. There's just a lot of different ways that people can purchase products. So the competitive intensity is just much greater for eBay. So it's a stock that even at these valuations, which I think is close to our market multiple, I think you have market-like growth, maybe even worse than market-like growth. And valuation's not compelling.
Speaking of valuations, Mark, the valuation on Facebook continues to shrink after that quarter a couple weeks ago. What signs are you looking for that a bottom might be in here?
Yeah, and Brian, let me also do this. And when it comes to thinking about what to do with kind of consumer internet stocks, the path is going to be this: you're going to buy the highest quality assets first, then you're going to buy the recovery assets. So that's your Uber and Lyft. And then third, you're going to work your way back into the higher growth, higher multiple stocks. At the end of that list are names like Trade Desk and Roku and Shopify, names that have really been bashed aggressively. I don't know the timing of this, but I think you first buy the highest quality assets, and then the recovery, and then the high growth, high multiple names. And I think that's probably a process over a 6-month period or something like that, depending on your investment horizon. And then that was the point I was trying to make, Brian. I forgot your question.
No, I think that was good. I think the market is still trying to figure out where the bottom is here in Facebook, but we'll have to have you back. Hopefully that bottom for many of the bulls to come soon. We'll leave it there. Mark Mahaney, Evercore ISI, Senior Managing Director and Head of Internet Research. Have a good week. All right, Tees, that would be, we'll be right back. Much more on the markets here. Markets under considerable pressure here on this Thursday morning. We'll be right back.
We continue to see stocks sell off after Russia invaded Ukraine or began its invasion of Ukraine. But we are seeing stocks come off the lows of this session. The Nasdaq back above that dividing line between a bear market and not a bear market as of the closing level. Right now, it's down about 0.75%. The Dow, though, still potentially in correction at the as of the close. It's down almost 2%. The S&P 500 down 1.3%. And as we continue to follow the latest developments out of Ukraine, one of the latest headlines I'm seeing is that UEFA is going to strip St. Petersburg of the football, aka soccer, Champions League final. So yet another of an attempt by the West to exert pressure on Russia. Dan Clifton is with us now. He's head of policy research at Strategic Securities. It's good to see you, Dan. You know, as we look at the sanctions that have been put in place by the U.S., by Europe, obviously it was not enough to dissuade Vladimir Putin from invading. And so what we keep trying to wrap our heads around this morning is what would be enough? And is it now just too late?
Yeah, first, let me start off by saying that Putin has always wanted to take over Ukraine. You could go back to as early as 2014 of him saying that it was a fake country. He just needed the right time to be able to go into there. And he believes that this is the right time. The West is fractured. They're dealing with COVID. The world is just moving in very different directions. And he said, look, this may be my last chance. I'll go in. I'll take it. He has priced in these sanctions. We believe he's been working on this for at least a year in terms of the operational planning. We began to see troops moving in March, really accelerated in September and again in December. And so he's thought through these sanctions and is willing to absorb the cost of those sanctions. That doesn't mean it's not going to be painful. It could be very painful. And there will be another set of sanctions coming later today that will be far more painful than the first round. The first round, Julie, was a pipeline that hasn't delivered any gas, a bond market restrictions that they really don't need financing for. So the next round will actually start to become a lot more biting. Being able to block those technology shipments that they need for their economy to run, as well as possibly using the dollar and preventing dollar clearing in sensitive industries. Those will be very big events if those happen. But I believe that this is larger than just an economic cost. This is an ideological crusade to rebuild the Russian Empire, and Belarus and Ukraine were critical to that as the first steps. And that's why Putin has moved further, and sanctions are unlikely going to stop that.
Dan, what does an end to this situation look like to you?
Yeah, so I keep thinking about what these scenarios are going to look like. If we just stopped at annexing parts of eastern Ukraine, it would be very similar to what happened with Crimea in 2014. Clearly, when you begin to invade a country, and right now they're taking over the airport, they're looking to get this country, take out all their military operations, take out their water and lights in the next, 12 hours or so, be able to have control over the next couple of days, given that the Ukraine military is not as well equipped as the Russian military. And if that's the case, you start setting yourself up to a similar situation for financial markets like Iraq in 2003, where the actual lead up was much more riskier for financial markets than the event itself. And while that may not be an optimal outcome for Western policymakers of Russia taking over Ukraine, at least at that point, investors can start putting bookends around different potential outcomes of that. Is this going to continue? Now, the big question is, how ambitious does Putin get if he gets into that spot? Does he continue to go further out into other parts of Europe, Poland, other satellite areas that were formerly part of that Soviet empire? I don't think that that's immediate. And so the bigger question is, how resistant will Ukraine be? Because if Ukraine is able to put up a fight and be able to draw this out, then I think there will be more uncertainty in the financial markets about this. And that means that energy prices will remain elevated. The reason that that is important, elevated energy prices, that makes the Fed's job much more difficult on an already tough job on inflation. And it raises the economic cost to the European economy, given how sensitive that economy is to higher energy prices.
Well, and all of this, again, so you have so much at stake here for the West, right? Yep. Obviously, you have a humanitarian disaster that appears to be unfolding potentially in Ukraine. and basically their democracy is under threat. That's one thing, right? You have the energy effect. You have the Fed implications. So it would seem that the West would be very, very motivated to stop this from happening. But again, I come back to the question of how motivated are they? Are we going to see U.S. and European troops in Ukraine, for example? And even if we did, would that be able to stem the tide?
Yeah, excellent question. And so first, we're a war-torn country. We've been in war since for the last 20 years. Putin has sensed that. He saw it with the Afghan withdrawal in August, a very abrupt change. By the way, that was the position of President Trump and President Biden, two very different presidents, saying we got to get out of the Middle East, we got to get out of wars, focus on China. So he was able to seize that opportunity. And we put out polling data last night, right before the invasion, showing just about 10%, 15% of Americans would be willing to send troops over to save Ukraine or to defend Ukraine. So there's not that political appetite, neither in Europe or the US, to do that. So I think it will be much more limited from a military. Alternatively, what you'll start to see is the US sending lethal weapons, lethal aid to Ukraine to help try and defend, have the Ukrainian army defend. And that's something that will likely accelerate, particularly if Congress is going to pass a bill next week overall. I wouldn't be surprised if there's some special forces in Ukraine right now trying to help with some guerrilla operations as Russia starts to come in. I do anticipate that you will see more troops moved into Poland, given the sensitivity of how close now Putin will be to Poland with Russian troops if they do take over Ukraine. All of this points to, Julie, next week, Congress is likely going to be passing a budget, a week or two, that will have a significant increase for U.S. defense spending, about 6 to 7%, up from about 4 to 5, which was where the estimates were a couple of weeks ago. So I tend to think that it will be very hard for cutting defense spending, and I think it's going to keep a bid in energy prices, at least in the short run.
And Dan, even considering the market reaction here this morning, it's been an ugly session so far, really across the board. Do you think U.S. stocks and investors are still underpricing the risk with this situation?
Yeah, so there's short-term and long-term. And I got to tell you, I talk to my clients all day. We've been working on this really since December. I think there was still a very complacent view that the cost of Putin going in and taking over Ukraine was too high, because you could take Ukraine, but then you got to keep Ukraine. And the U.S. has learned that it's easy to invade a place, but then it's really hard to keep order once you have control. So I do think that the consensus was caught offsides coming into the events of this week. So there's still some catching up to do around that. But ultimately, then investors are starting to say, okay, how do we think about this from an investment perspective? And there are plenty of places to hide. U.S. reopening stocks are not really impacted by this. COVID is starting to wane. We know the Fed is going to still have to raise interest rates. We can have a debate about whether it's 25 or 50 basis points in a week from now. But there are definitely asset allocation rotation decisions that could be made here for U.S. investors that limit their exposure to these types of stocks. And I got to tell you, a lot of mutual funds are asking a question right now, whether the United States will ban what we call preferred securities in Russia, very similar to what Donald Trump did with China securities on the way out the door if they were funding the Chinese military. Does Biden do something like that on Russian securities? I don't think we're at that point yet, but that's something that's likely going to get more attention in the next couple of weeks.
Provocative. Very interesting there, Dan. Really appreciate your perspective on all of this. Dan Clifton is head of policy research at Strategas Securities. Thanks again. And speaking, by the way, of what President Biden might announce, we will be hearing from him once again today, 12:30 p.m. The president is scheduled to speak. We will be taking that live here on Yahoo Finance. Obviously, we could hear something further on the repercussions for Russia now that the invasion has actually happened. We are seeing the sell-off persist today. Right now, as you can see there, the Dow down sharply. We'll be right back.
Threat of cyber attacks from Russia right now is very elevated, experts say. Let's bring one of those experts to help us understand what might be next in the cyber warfare front. Brian Murphy is the Vice President of Global Operations for Logically AI. He's also the former Acting Undersecretary of Intelligence for the Department of Homeland Security. Good to see you here. Brian, thanks for taking the time. If Russia is to launch cyber warfare against the U.S., what U.S. assets might it start with?
Well, so it won't be the first time. So we need to put this in perspective. The Russians really come at the U.S. in a couple of different ways. The first way is what actors will be the delivery of any kind of attack that they put together. And so you have really two sets: the Russian military, the SVR, GRU, and maybe the FSB, or their proxy groups that is more likely what they'll use, which are organized crime traditionally, or actors in third countries. What they'll go after is infrastructure in the United States, cyber infrastructure. They've done this before, so it's hard to predict exactly where they'll go, but if the past is any predictor of the future, and it may be in this case, they'll look to hit things like SCADA systems or industrial control for, let's say, water purification plants. They may hit some electrical grids. They've done that before to try to send a signal to the United States that they will use all aspects in terms of spectrum of warfare, their hybrid warfare, to counter U.S. sanctions.
It's pretty alarming, Brian. Are big companies prepared for these type of cyber attacks right now?
That's a great question. I think it just depends, right, on the company. So unfortunately, a lot of companies don't take, even in today's world, their cyber hygiene to the level that it needs to be at until, quite frankly, it's too late. And so ransomware is a favorite of the Russians, particularly the Russian government, as a way to lock up some of these big businesses. We saw that with the Colonial Pipeline. And those are the industrial controls that I think that they will continue to go after. So are they prepared? It really depends on the business. I mean, just generally, I think we've gotten a lot better as a country. But unfortunately, we have a long way to go. It is a cost center for these big companies, but usually the pain they feel on the backside of it, if they have not prepared themselves effectively, is far worse.
Brian, I'm also curious about our government's capabilities to counterattack in Russia. I mean, it's sort of become conventional wisdom that Russia and China are the two most effective international actors in terms of cyber attacks. But, can we counterpunch, and how much of a deterrent could that potentially be to Russia?
Well, we have the capabilities, of course, to counterpunch. And I don't know if it will be much of a deterrent to the Russians. One, we have not fought fire with fire, if you would. They'll attack us at a certain level, and we have chosen not, for political reasons, to respond in kind. And that, depending on how you look at it, may or may not be the right position to take. But the cyber war can quickly lead to real war, and obviously we want to try to do everything we can to avoid that. But at the same time, yes, we have those capabilities. When we use them, how we use them, and if we use them, there's going to be a lot of calculations into that, because there's now a hot war in Ukraine, and our NATO allies are just on the other side. So all these things are going to be difficult to make determinations for the U.S. government, because there's so many factors in there as to, do we use the tools, how do we respond, and what does it look like?
For U.S. investors, and we're showing, by the way, cybersecurity stocks, which have been benefiting as there is this assumption that their services will be needed. But I'm also curious how investors should be viewing the risk of potential attacks to U.S. businesses, to infrastructure. How severe can we expect them to be potentially, and could they affect business?
Well, invariably they will affect business. Again, if you just look at the Colonial Pipeline as just a recent example, when the Russians do something, and I think they will, it won't look like it did last time, meaning that it won't necessarily be, let's say, a major gas pipeline in the U.S. It'll be something different, but the same type of model will be used, and it's going to have a serious pain point in a sector of the U.S. economy, and we just don't know what that will be right now, obviously. But when it comes, it will have an impact in a sector of our economy for sure.
Really appreciate this insight here. Brian Murphy, Vice President of Global Operations for Logically AI. Thanks so much. All right, market volatility is back in force with geopolitical angst at fever pitch levels. Coming up, we'll dive into some strategies you can employ to protect your portfolio and wealth. But before we go to break, take a look at some of the top trending tickers on our site right now. Of course, Alibaba, after reporting earnings this morning. Tesla has been a top trending ticker on Yahoo Finance all this morning. And then Apple really continuing to be under pressure along with other big cap tech names. Stick around.
As we watch the latest headlines here, we continue to watch U.S. stocks trade lower, although again off the lows of the session, but nonetheless still a steep sell-off coming as it does, especially on the wave of selling we've already been seeing in the markets. Just to mention a couple of the latest headlines and developments that we are watching, the Ukrainian President Zelensky is now saying that Russian forces are trying to seize Chernobyl, of course, the site of the nuclear disaster in Ukraine. Russian forces are trying to seize Chernobyl. We also know that President Biden will be speaking at 12:30 p.m. today to address the invasion. We will see if at that point we get any new ratcheting up of sanctions, export controls, any other kind of announcement in terms of the U.S. reaction to Russia invading Ukraine. Speaking of reaction, we also have been talking about what's been going on in the energy markets, and let's check on that as well, because we've been seeing, of course, spikes in energy prices across the board, crude oil prices and Brent oil at the highest since about 2014. Brent now well above $100 a barrel at 104.02. Natural gas, Russia also an important producer of natural gas, particularly for Europe. It is trading higher. Gasoline and heating oil also catching a strong bid today. So continue to see this strong ripple effect throughout the markets. We will keep you posted, and we'll be right back. Well, as we see this turmoil in the markets, not just today, but recently, a lot of investors are trying to figure out what the heck to do. One of the people who is trying to help them figure that out is Desarte Yarnway. He is joining us now. He's head of community at Altruist and founder and financial advisor at Burknell Financial Group. Desarte, and this is part of our Financial Advisors Corner, we should mention, which people perhaps need a lot of guidance right now on what's going on. As we see the sell-off that's going on today and all of the volatility that we've been seeing recently, what are you hearing from clients? How concerned are they in this environment?
Well, most of the time, clients just want to know, will they be okay? I liken it to a flight attendant, right, on a plane. And advisors have to do a better job at being calm in the storm and being able to shift that confidence or transition that confidence onto their clients. I find often that people are in need of human financial advice. Oftentimes a robo-advisor, right, or some automated platform doesn't do a good job at walking you off the ledge. And that's what we're here to do at Altruist, is making financial advice more cheaper, affordable, and accessible for these clients who may have concerns in market environments like this.
I got a text this morning from one of my friends asking me what they do with their 401k, and I just said, hey, not sure. I don't give financial advice. What should my friend be doing? How should they be protecting their longer term investments when they wake up and see stocks really falling out of bed?
Well, first of all, if your friend is contributing to a 401k, they're already doing the right thing. A lot of the best advice, or most often the best advice, is to do nothing. I read a quote the other day that said, investors make more money by the seat of their pants than by the soles of their shoes. And oftentimes when something happens in the market, the first thing that we want to do is run, when actually we should sit and let our investments mature to their proper figure. So your friend is doing a good job. I would say to wait it out, talk to his advisor, and see if his plan is still intact.
And so, Desarte, are you telling people to sort of sit back here, watch things unfold, sit tight, or are you recommending that folks come in and do some buying when we see sell-offs like this?
Well, if you think about Warren Buffett, he says that people should get greedy when there's blood in the streets. So obviously the old acronym stands true, right? You want to buy low, sell high, but I think that it has to align with your financial plan. So the first thing that you should be doing is going to your advisor, or if you don't have one, seeking out an advisor who can steward you closer to your financial goals. But absolutely, I think that this creates a good buying opportunity for those clients who are trying to be prudent investors. But first, you want to make sure that it aligns with your plan, and you should seek out a financial advisor to help you do so.
What would you tell those folks that have plowed into cryptocurrencies under this thinking that it's some form of safe haven play? I think we continue to learn that it's not a safe asset class.
Absolutely, it's not a safe asset class, but I don't think it's foreign for cryptocurrency to drop 20% in any given day, 100% in any given year, right? So I think it really depends on your risk tolerance and the exposure that you want to have to such a volatile asset class. For so long, if you think about people along my age group, right, we've never seen a bear market in our professional working years. March 2020 was the first time that was very short-lived. And I think now that people are making their own money, we call them Henrys, right? High earners, not yet rich, and they're investing for themselves. They're starting to learn about cryptocurrency, traditional markets, and what that means for them. I think that it's all about education. And in the good words of some of my friends, you have to educate before you allocate to any asset class, especially cryptocurrency. So first, get educated, continue to outline your risk tolerance and your financial plan, and invest accordingly.
I like that. Educate before you allocate. Desarte, thank you for joining us on this very busy day. Would love to have you back when things, if things hopefully calm down a little bit, to talk a little bit more about what you do. Desarte Yarnway is head of community at Altruist and founder and financial advisor at Burknell Financial Group, joining us as part of our Financial Advisors Corner. Coming up next, consumer staple stocks. We sometimes see them outperform even in a tough market like this, but everything is getting sold off today. On the other side of the break, we're going to talk to the president and CEO of Newell Brands to discuss the geopolitical impact of business and his growth outlook generally. We'll be right back.
Welcome back to Yahoo Finance Live. Let's get a quick check of the markets here. Really a lot of red on the screen, and this has continued to be the case all morning long. All three major indices are in fact in the red, seeing a really swift sell-off, I should say, continuing in all things tech. That risk-off trade in tech continues to unfold here on Wall Street. All right, global businesses are eyeing the developments out of Ukraine very carefully, as it could have implications for worker safety, inflation, and financial results. New Oil Brands is one of those global companies and is coming off a solid year of sales growth as the company's turnaround gains steam. Joining us now is New Oil Brands President and CEO Ravi Salagram. Ravi, always nice to see you here. You are no stranger to running global businesses. What have you told your teams on the ground overseas this week inside of what is clearly a very unsettling situation in Russia and Ukraine?
Yeah, well, the first thing that we always focus on is our employees' well-being. And we have a very insignificant business in both Russia and Ukraine. They're not material or significant. We just do work there through distributors. But clearly there are interdependencies around the world in Europe, and Europe is about 15% of our global sales. And the key is to stay calm. We always tell our employees we're there for them. And so far, so good. Europe is an important region for us. And for us, though, the fact that these two countries are not significant in the grand scheme of things helps. But look, it's a sobering day. It's you are concerned about geopolitical risks. Having said that, I think what we always try to get back to is fundamentals. And what are we trying to do? Focus on the consumer, focus on our customers. And Brian, last year, despite 9% inflation on our COGS, we grew 12.5%, and supply chain challenges, we grew 12.5% on our core sales, our organic sales, if you will, and 12.4% on operating profits, despite the fact inflation was 3 times higher than what we expected in the year, because we just sort of really took actions, mitigating actions. We doubled down on productivity, and which was 4% of COGS. We took price increases. And so a lot of the reduction in complexities helped our efficiencies. And we're going to continue to do that. And we're not looking at 22 with rose-colored glasses. We're expecting inflation still to be high, where we guided 8%, and we're taking mitigating actions. We took price increases on all our businesses, and inflation pricing has sort of lagged inflation. So this year, we expect the carryover from last year to have a very good benefit and improve our gross margins.
Ravi, it's Julie here. You just mentioned you're looking for 8%. Hi there. You just mentioned you're looking for 8% inflation this year. Does that number now have to go up even more? I mean, even if if you don't have direct sales necessarily in Ukraine and Russia, we are seeing the ripple effect already in terms of the effect on energy prices, on agricultural goods, which affects your business as well, sort of by proxy. So how does, does that 8% need to become 9% or 10%?
Yeah, we're going to continue to closely monitor that, Julie. I think we had put in, when probably a lot of others thought that things would come down, we took a conservative view on the 8% and planned accordingly, but we've put in enough cushions. I think we will continue to pivot. If we need to we'll get even more aggressive on productivity and continue to look for ways. And I think the story from last year, where it kept going and we were not as prepared, whereas this year we're fully prepared and we're going to plan for the worst, and that way we don't disappoint investors.
Ravi, we've been following your journey as CEO of New Oil Brands really from day one here, and I do sense a shift in tone here. So this week, you bought back $275 million in stock from Carl Icahn. His son, Brett, is still on your board. You recently sold a security business for close to $600 million. What other moves do you want to make this year in terms of the portfolio, just to boost margins and just have a better run company?
Yeah, I think, look, we've been engaged in the turnaround now since 2019. The proof of the pudding is core sales growth up 12.5% after 3-4 years of declines. That says we're becoming a growth company. The fact that our EPS on a tax-adjusted normalized basis in 21 was up 20% gives us a lot of confidence, and that we overcame inflation and supply challenges. So it's now all about looking at the future and through supply chain transformations, et cetera. So we felt, look, the connected home business, good business, solid results, but it was not strategically as aligned with the rest of our businesses, and we felt it would do better in a different home. And that has allowed us, with the proceeds, to look at share repurchases, at the same time some more reducing debt. What's good also is the fact that our leverage ratio, Brian, has come down from 3.5 to 3, and S&P just upgraded us to investment grade. That gives us a lot of confidence. I think that is really the reason why the Icahn Group felt they've trimmed their position a little bit. I think they have extreme confidence in the company. The fact that they still own 8% and are a large shareholder, and you saw the release and their comments, I think they see that everything we said we'd do, we're doing, and we're delivering on our promises. So to me, the best days of Newell are truly ahead. We've become an innovation growth engine, and a lot of innovations coming out, which is really the core of this company, is delighting consumers. So, and I think we have the portfolio now, Brian, that with the 25 brands that we have, which are great brands that we're rejuvenating. So we might consider tuck-in acquisitions or so, or tuck-in divestitures, but really no wholesale change on the portfolio, because each business has a very clear role in the portfolio. And when we did our strategic plans, we said 3 of our top businesses, writing, home fragrances, and food, which one of the brands I think you like, Rubbermaid Brilliance, is part of that. They're all high gross margin, high growth businesses, so we're going to drive those. We have solid value generators like our commercial business and our baby business, and continuous improvement is our home appliances and outdoor business. And those they're obsessively focused on margins, but still growing. Last year, they both grew double digits. Outdoor actually grew 25% in the fourth quarter. So I think our brands are coming back, whether it's a Coleman or a Sharpie or a Papermate, Rubbermaid. So I think we don't need to do any major changes in the portfolio. It is just optimizing and driving it forward.
Well, good to see the turnaround continuing, and good to see you as always. Newell Brands President and CEO Ravi Salgram. We'll talk to you soon. Julie, back to you in the markets.
Yeah, I'm taking a look inside the Yahoo Finance Interactive just for some quick indicators of where we are right now. Right now, the Nasdaq Composite coming well up off of its lows. It's still down by 0.3%. But it's interesting, given that we have not seen any mitigation or lightening of the headlines coming out of Ukraine. The Dow, though, still in the red pretty deeply here, 1.75%. So pretty big dispersion here among the major averages. This S&P continues to fall by 1%. We continue to, of course, watch the energy prices, which have been heading higher, and the volatility also has been ticking sharply higher. Very quickly, before we leave you folks, wanted to take a look at the heat map for the Nasdaq 100, because we've been seeing sharp selling in tech that is now switching over. Tesla's now higher by 0.5%. Akiko and Brian going to take you through the next 2 hours of trading. We'll be back tomorrow.
Welcome to Yahoo Finance Live. I'm Akiko Fujita along with Brian Chung, and we are continuing to track the breaking news coming out of Ukraine, with Russia launching what the Ukrainian government has described as a full-scale invasion. Explosions have been reported in nearly a dozen cities now, and that, as you see, has sent stocks tumbling. The Dow off of its session lows, but down roughly 600 points there. The Nasdaq down about 49, and the S&P 500 getting pulled further into correction territory. We want to get right to the latest developments here. We've got our very own Jennifer Schomburger tracking the latest news on what is playing out over in Ukraine. We've also got Jared Blickery standing by with the latest market action. But Jennifer, we'll start with you.
Good morning, Akiko. President Biden, along with Western allies, are poised to impose steep coordinated sanctions against Russia after Moscow launched a full-scale invasion of Ukraine. Earlier this morning, along with his National Security Council, to discuss next steps on this situation. The president expected to address the nation at 12:30 p.m. Eastern to offer an update on the U.S.'s next actions. Now, the president, in concert with Western allies, have repeatedly threatened crippling sanctions and are discussing a large package of those sanctions that they've been working on for weeks. The European Union this morning extending a second set of sanctions that target Russia's financial sector, freezing Russia's assets, and banning the export of Russian technology to Russia. President Biden saying in a statement overnight, quote, "President Putin has chosen a premeditated war. Russia alone is responsible for the death and destruction this attack will bring, and the United States and its allies and partners will respond in a united and decisive way." The U.S. and Europe imposed sanctions earlier this week after President Putin sent troops into two regions of eastern Ukraine, including shutting Russia out of access to Western financial markets and imposing sanctions on Putin's inner circle. Wednesday, the U.S. imposed sanctions on the company behind the Nord Stream 2 natural gas pipeline after Germany halted that. Now, the White House warned earlier this week that if Russia escalated actions, they would impose further sanctions as well as export controls. SWIFT is still on the table. When asked whether sanctions could be imposed on Putin himself, officials say all options are on the table. White House officials also saying that no Russian financial institution is safe and that they are, quote, ready to press a button to take further action on Russia's very largest financial institutions. So we'll hear the latest actions from the president at 12:30 this afternoon. Jared, I'll send it over to you for the market reaction.
Well, let's just dive right into this, and we'll get to the U.S. markets in a second. I just want to start out with the MOEX, that is the Russian stock index. I'm using a look-back period of 10 days because this is when the first market-moving headlines, that was a Friday about 2 weeks ago, really started rocking the market. But this is the worst one-day performance, 34% of any stock market, the third worst of any stock market in history, only a couple worse than that. Also looking at the DAX in Europe, that is down 4%, the FTSE down 3.5%. You can see the Deutsche Börse, that is down 10% just about over the last 10 days. And then you take a look at what's happening in the futures markets. Over here we have palladium, that's up over 6%. Crude oil, WTI, topping $100 for the first time since 2014. We can see it's up 2% over the last 10 days. Huge bid on oil right now. Also, natural gas, we know the implications of that, especially with the deal with Nord Stream 2 that now seems to be halted here. Natural gas up 15% over the last 10 days. Also, RBOB gasoline futures surging about 5% today, so people are going to pay more at the pump. And then you look at the grains. Wheat's up 5%, corn's up 4%, so food inflation really about to hit the world, and we've already seen quite a bit of that so far. One source of grain today is cybersecurity. A lot of these firms really benefiting as the ante gets ratcheted up here. We can see CrowdStrike up 8%. We got, Palo Alto Networks, that's up 9%, almost erasing all these gains we saw, or these losses we saw over the last 10 days. Zscaler up 5%. But now I want to go inside the market. And this is, hopefully, there we go, the S&P 500. I've been showing this year-to-date chart for the last couple weeks. And here's what happened. 10 days ago, we first got that breakdown below this trading range. This is the S&P 500 now. Came down, wasn't able to climb back in that range. And so we've been selling off pretty strongly ever since. Now, you'll notice this candle down here is green, and that's because the current price level is greater than the open. In order to get something meaningful to put in a bottom, probably going to have to see a little bit more reaction than that, but that's what market participants are going to be looking for. Also, an elevated VIX. If you're looking for a capitulation, this is something you want to see. The VIX spiking above 35, coming back down. Also, the VIX, that's been a little bit muted today, but we are seeing it pick up just a little. So probably not going to see the all clear for some time, but just trying to point out some of the things that we're going to be looking for. Here's a 10-year T-note yield before I go. Bond market really signaling risk off right now. So I think the calculus at the Fed is definitely not going to do 50 basis points in March, which I didn't think was going to happen anyway. But I'll tell you what, 25 probably still in the bag.
Well, that's the perfect segue for us, Jared. Thanks so much for that, Brian. You know, Jared's kind of been walking us through this what has really been a global rout over the last 24 hours or so. Here in the U.S., though, it does appear as though the expectations for the upcoming policy meeting for the Fed is shifting pretty quickly. I mean, at this point, is a 50 basis point hike pretty much all but off the table?
Well, it seems like for right now, yes, certainly. And there was a point in time where those watching the Russia-Ukraine conflict were saying, well, we're just going to see how this unfolds. But now you're starting to hear and see commentary that maybe this does tilt the Fed towards the smaller rate hike in that next meeting on March 16, as opposed to that double rate hike of perhaps 50 basis points, as some were speculating in the beginning of the month after that hot inflationary print. Goldman Sachs and Evercore ISI among the economic shops now calling for the Fed to do only a 25 basis point hike, or 0.25% in that meeting. Now, we did get some commentary from San Francisco Fed President Mary Daly to reporters yesterday. Again, this preceded Vladimir Putin's announcement that he was going to march into Ukraine. But she said, quote, yesterday, these create a lot of uncertainty, referring to the Russia-Ukraine conflict. And uncertainty, as we know, is a demand shock, and how big the demand shock is depends on how high the uncertainty is and how long it lasts. Again, that's the San Francisco Fed president. And then we heard from the Richmond Fed president just this morning, who said, quote, we are going to have to see whether this Ukrainian situation changes that narrative. And I think time will tell. If we take a look at Fed funds futures contracts, these are betting markets for where the Fed policy rates could be going in the next few meetings. It seems like bettors are now expecting about an 87% chance of the Fed going by only 25 basis points in that next meeting. One last important point to remember, we're getting a number of other Fed officials to speak today. Raphael Bostic from the Atlanta Fed, Cleveland Fed President Loretta Mester, and Fed Governor Christopher Waller. So the picture very much changing by the minute, Akiko.
Yeah, no question. And I know you're going to continue to stay on top of that. Let's bring in our first guests for the hour. We've got David Traynor, New Construct's CEO. We've also got Joshua Tucker, who's tracking the policy side of things for us, NYU professor of politics. Joshua, let's start with you on the developments that we have seen overnight. Russia moving in a pretty significant way here. We're talking about more than 10 regions getting hit by attacks. Do you get the sense that the U.S. and NATO potentially miscalculated how quickly Vladimir Putin would move in?
No, I don't think so. I mean, I think what's actually been kind of stunning about these developments over the past week or two is how much the U.S. government has been telegraphing what is going to happen and sharing intelligence widely. And I think that's done in order to try to blunt the impact of disinformation and blunt the impact of propaganda campaigns that are part and parcel of President Putin's strategy around warfare in the modern era.
I want to direct this question over to David. I mean, when it comes to just looking at the market right now, obviously a big slide. We've seen the continued slide throughout the news headlines over the past few trading sessions. What do you think is the best strategy here?
I think the best strategy has been the best strategy for the last 6 months, and that's to make sure you understand what you own. If you're investing in profitless, high-flying tech stocks, and you've seen the bottom fall out in the last 6 months, it's going to continue to fall out. We're in a regime where you need to understand the fundamentals. You need to make sure you're buying real businesses, because now that we no longer have sort of an infinite supply of money coming from the Fed, we have to be discerning. So make sure you own companies like some of the ones that are strong today, like an Intel or DR Horton, generating huge cash flows, excellent competitive position. but you need to be getting the heck out of things like Airbnb, DoorDash, and Robinhood because they never had real business models to begin with. That same theme around focusing on what's real, what's honest, what makes common sense has been working the last 6 months and is going to really continue to work over the next 6 months.
Joshua, we are expecting to hear from President Biden later this afternoon. Additional sanctions expected on the back of this latest invasion. The White House has said all options are on the table, including cutting Russia off from SWIFT, but also implementing export controls. How effective do you think that can be when an invasion is already underway?
You know, it depends what you think Putin's goal here is in invading in the first place, right? If this was really about Russian security and about trying to sort of push back NATO and deal with this longer term concern about is NATO encroaching on Russia, it seems like what's happening here is having the exact opposite effect. We'll learn a lot more about this in the coming days and especially the rest of the day today. But it seems like Putin's actions in the last 24 hours or the last week or so have done nothing more than unify NATO, right? We're seeing, formally Russian-leaning president of the Czech Republic, for example, coming out against this. We're seeing Germany and the United States finally on the same page on what's going to happen with sanctions. And I think that the idea here of showing that the world is completely unified is going to be a powerful force. And I think that's what we're going to see around these sanctions. The problem is, though, that if Putin's goal here is not about weakening NATO, but it's all along been about trying to change the regime in Ukraine, then you raise the issue of, without actual military troops on the ground, how much is going to prevent tanks that are already in motion, planes that are already, missiles that are already flying from continuing on with what the goal is. But we don't know. At the moment, this is said to be something about eastern Ukraine. Whether that includes Kiev and trying to change the regime is the open question right now.
I mean, let's pick up on that point, because we have seen Russian tanks moving in. And to your point, NATO may be unified, and yet Ukraine is not a member of NATO. Article 5 necessarily can't be invoked. I mean, what can NATO and the U.S. really do as Russia accelerates these attacks on Ukraine when Ukraine is not a member of NATO?
Right. Well, I mean, look, we can defend it. We could do whatever we wanted to do. It's what are we obligated to do by a treaty around NATO? I think, again, the Biden administration and the West has been pretty clear in telegraphing that they are not going to get into a shooting war with Russian troops in Ukraine. I think that's never been on the table, and I think everyone's known that hasn't been on the table. So the question becomes, how much pain can you inflict on Russia without introducing troops into Ukraine? And there are a lot of different ways this can be done. As you guys have been discussing previously before I came on, inflicting financial pain is a huge question here. And you can think about inflicting financial pain in the short term, and you can think about inflicting financial pain in the long term. In the long term, denying access to things like semiconductors that are needed for high-end computer systems is going to be problematic for Russia, and that's going to inflict pain. As a political scientist, though, we often think about the constituency that Putin has that's supporting him, right? This has been called by my colleague, Bruce Bonadea-Mesquita, the selectorate. And one of the things you're going to see with these sanctions is targeted sanctions at trying to inflict pain on those closest to Putin, right? And those who are surrounding him. Will that lead to him changing his mind? And this is always going to be the question when we're going in this regard. But I do think that this is going to be costly. It's also going to be costly on the ground in terms of Russian general public opinion if there are Russian soldiers coming home in body bags. And that's why this propaganda war and this issue around propaganda becomes such an important aspect of the current situation. And in that regard, by providing military support, short of troops entering the country, but providing weapons, that's another way that the West can make this, or the world can make this, more painful for the Russians.
David, I want to direct this question back to you. I mean, you were hearing what Joshua was just saying. I mean, all signs point to further escalation from here. Now, on the market kind of viewpoint here, you mentioned that things were overvalued before what we got now, which is a correction, essentially. Do you feel like, though, there is still more bottom to go before you want to start to buy back in? Are you just kind of waiting on the sidelines here, or are you starting to dip in now?
Look, I think Josh was making some good points. I think we're in a long-term sort of semi-war state, a new type of war. It's not going to be conventional ground war like we've seen in the past. And I think the same is true with investors in this market. We're no longer in a euphoric party where there's an infinite supply of money. We're at war, and there's a limited amount of resources, and people need to compete for the best resources. And that means when it comes to investing, you got to make sure you're buying good stocks at good companies at the right prices. And there's just no substitute for that. Is the Market Timers Hall of Fame, full of anyone? No, it's got nobody in it. So I'm not really big into market timing. I say you got to stick to your knitting and make sure you focus on good companies. And I think big picture here, right? Josh was right. How much pain can we inflict on Putin? But we also got to keep in mind how much pain is he and Russia willing to take? And I think it's pretty clear with this latest move that Putin clearly favors, right, military power over financial stability. He's going in, he's doing this in almost a barbaric kind of throwback to medieval times. I'd rather be a conqueror than just take care of my economy. And I think he's doing that because he knows China's got his back, because China wants to do the same thing. And I think what we're going to see soon is it's not going to just stop here with Russia. We're going to see China move on Taiwan. And it's going to further destabilize our markets because this sort of global economic system that we've been so proud of for so long is not as strong as we think. It's much more fragile. There are going to be parts of the world with which we cannot do as much business. For example, not selling semiconductors to Russia. And we might not be able to buy semiconductors from Asia. And so that's going to really change the landscape of business and worldwide economic activity. And I think that's going to all happen in the face of rising inflation as we see supply crimps occur throughout the world based on these geopolitical changes. And all that means at the end of the day, that if you're investing based on what you read on Reddit, what you see on TV, or what you hear from your friends, you're probably going to continue to lose a lot of money. And it's time to get back to doing things the old-fashioned way, which is to do your homework, understand cash flows, and understand valuation. And there's no substitute, more than ever, there's no substitute for diligence and research you can trust.
Yeah, we're watching the Dow Jones again down over 500 points. But David Traynor, New Construct CEO, and Joshua Tucker, NYU professor of politics, thanks so much for spending the time this morning. Coming up on the other side of the break, Moderna is soaring as the COVID-19 vaccine maker beats earnings and revenue estimates. CEO Stefan Bancel will join us next. And Yahoo Finance's live market coverage will continue as the Dow is slumping again over 500 points, about 1.5% following Russia's attack on Ukraine. We'll be right back. Shares of Moderna on the move, up over 13% after reporting fourth quarter earnings that topped expectations. $7.2 billion on the top line for diluted earnings per share of $11.29. The drug maker said it expects to sell at least $19 billion of its COVID-19 vaccine in 2022. And for more on this, let's bring in the CEO of Moderna, Stéphane Bancel, alongside Yahoo Finance's Anjali Khemlani, who joins us for the discussion. Stéphane, it's great to have you on the show this morning. Just kind of want to kick things off. The FDA still considering whether or not we may need another booster shot in 2022. Just wondering how that factors into the projections that you have for your vaccines this year. Is the expectation that we will have a fourth shot this year?
So good morning, and thank you for the invitation. So as we made pretty clear on the call this morning with a lot of scientific data, we believe the waning immunity of the antibody provided by the vaccines of natural infection will drive the need for a fourth dose in the fall. We have been saying that for a while. We showed the data that we think makes the point today on the call. And the $19 billion of signed advance purchase agreement, or APAs, are basically signed contracts with governments around the world with upfront payment. Now you talk about the US. We have at this stage, as we confirmed this morning, in the 19 billion of APA signed and the 3 billion on top of that of options that governments have placed but have not exercised yet. In those two numbers, the 19 and the 3 billion, there is not a penny going at this stage to the US market because there is no signed contract with the US government as we speak. We're, of course, having discussion with the US government, but to your question specifically about the FDA and the US, at this stage, it's not in the numbers.
Right, but Stéphane, we'll definitely be looking at that. But I want to pivot now to globally, looking at where things stand. I know this morning on the call, you mentioned that wealthier countries are sort of a de facto market for mRNA, easier for them to distribute. Of course, we know you are also looking to expand. You penned a deal in Latin America to help expand manufacturing there. And we also know what's going on the African continent, where there is some criticism of how Moderna has specifically handled transfer of technology. So I want to talk about the global really view right now for mRNA and for Moderna specifically. Do you see getting into those other markets and working closely with some of these other entities?
Yeah, so I think there's a lot of things we are doing. So first, we have increased the manufacturing output. You remember I explained on your show last year that we're investing several $1 billion to increase the manufacturing output very significantly. It was doubling it outside the US, 50% increase in the US for export. And so if you look at where we are, we're still on track to be able to provide 2 to 3 billion doses this year. Last year, we shipped 807 million doses. And then what we talked about in the fall, if you recall, is I said that the world was going to become in oversupply of vaccines. When you look at the vaccines available in the US, but also AstraZeneca, which is not available in this country, as well as the Russian vaccine and the Chinese vaccine and the vaccine made by, Serum Institute in India and so on. You're actually pivoting in the November-December timeframe for a world that was is supply constrained to a world where there's too many vaccines today. I don't know if you saw yesterday, the Africa CDC announced that they were taking no more donations in Q1 or Q2 this year, maybe in Q3 and Q4, because we have too many vaccines. The challenge we have is getting them in arms. And so the world has already changed drastically, as was predicted, because the industry has done a remarkable job increasing every month supply of vaccines so that everybody could get one.
That's right. And the Africa CDC actually did pivot this morning, saying actually that they haven't stopped asking for donations, but they just want better coordination. And I know that's more on the government level than directly from you. But I'd love to hear your comment on that. But then also looking at where everything is, of course, the news today with Russia and Ukraine, I just wonder if you're expecting any impact from that. So on those 2 points, just coordinating better for, Moderna dose delivery. And then also, do you expect any impact on shipments throughout Europe from this news today?
Yeah, so on the low-income country, what I think is sad is the virus has been with us since the end of 2019. The pandemic has been declared by the WHO in early 2020. This is almost 2 years ago. We had 2 years to get prepared for the last mile delivery. getting enough healthcare worker trained, fridges, and so on. So vaccine could be available in low-income countries when they will be available. And now we're seeing this big oversupply of vaccines, including, for example, the case of Moderna, but I know it's the same for other companies. I talked to some of those CEOs. They have the same situation where I have vaccine waiting in a warehouse to go to low-income country because they cannot distribute them. And that was a problem that was preventable because there was 2 years to plan for it. In terms of your question around Ukraine, at this stage, this awful act of war as not having any anticipated impact on us, in the sense we have no manufacturing site in Ukraine, we have no distribution center in Ukraine. The one in Europe is based in Belgium for distribution. Manufacturing is done in Switzerland and Spain and France. So we should anticipate at this stage with what we know today, but this is of course evolving very rapidly, but we should have no impact at this stage.
Yeah, Stefan, let me follow up on that. No impact right now in terms of your manufacturing deliveries as well, but I just wonder how you're looking at it as the CEO of a major company here. I mean, we are looking at a global sell-off. Granted, the invasion, the attacks escalated just last night. From a CEO perspective, how do you look at what is playing out right now and the potential for things to maybe cause a bit of a chill on the investment side down the line?
Yeah, so I think like everybody, I've been watching carefully what was happening at the geopolitical level over the last few weeks and woke up in shock this morning as I saw the news first thing before my daily run. It's of course an awful act of war that has happened by invading, Ukraine and Ukraine's sovereignty. What I worry about is where is this ending? Is this ending in Ukraine? What is the West going to be doing? What are the potential consequences on Asia? Everybody that is a geopolitical expert is talking, about China and Taiwan. So there's a lot of moving pieces now that could have big impact, I think, on what happened in the coming days, weeks, and months. It's of course not my expertise, so I'm just, commenting on things that I've been thinking about and I've been hearing from experts. And so we might see a very volatile environment. The good news for us as a company is, we're well capitalized. We have $70 billion of cash. We're investing incredible amount of capital in research, in clinical trial. We're expanding the size of the pipeline. We now have 44 programs. We've announced new subsidiaries creation last week. We've announced new partnership with Thermo Fisher in the US for filling and in Europe with Rovi. And so Moderna is in full expansion, and we're going to keep investing because our view has always been to invest for the next 5, 10, 20 years, not for the next week.
Stefan, really quickly, I know that you do have all that expansion going, and it seems like you're viewing this pandemic turning into an endemic pretty soon, even with those boosters for the fall. Do you have any sense right now of which of the three pursuits will end up stronger in terms of changing the formula possibly for the boosters?
Yeah, so over three things we are testing. If you look at the data that we presented this morning, based on what we saw with our beta plus the current vaccine combined. So that data we presented this morning. If you look at that data and look at the level of antibodies in the different scenarios over time, what was very clear is at day 29, so a month after a booster, you don't see a big difference between the existing vaccine and the combination, the bivalent vaccine. But at 6 months, you saw a big difference. And molecular biology is not black magic. And so if you think about it, this was testing the beta virus for the beta-specific vaccine. So we think the same thing will happen with Omicron, which is most probably in the short term, say a month after a fourth dose, you might not see a big difference because it takes time for the immune system to mature. But we believe that at a 6 month time frame, which is what's going to be important to protect people if you assume August, September, October vaccination to protect them against across the fall and winter. I believe this is the vaccine that's going to give us the best data. As always, we'll have to wait a bit to see the clinical data. But if I had to bet today, based on what I know of our platform, that will be the one.
Stéphane Bancel, Moderna CEO, we always enjoy having you on the show. Really appreciate the time today. And our thanks to Anjali Kamlani for joining in on the conversation. Want to do a quick check of where the markets are moving right now. We started out the show talking about a big sell-off in terms of the Dow, and we have seen things come off of the session lows. The Nasdaq pretty flat right now. The S&P 500 down 37 and the Dow down about 560 points. Of course, we are seeing reaction here to the back of a Russian invasion of Ukraine. And we're going to continue to monitor the latest developments with the president expected to speak about an hour from now. Coming up on the other side, American businesses now bracing for Russian cyber attacks as the crisis in Ukraine escalates. We've got a cybersecurity attorney joining us on the other side to discuss the potential fallout. We'll be right back. Well, as we continue to monitor the Russian invasion of Ukraine, we are taking a closer look at cyber attacks. Several Ukrainian banks and government websites were forced offline yesterday following an attack. The government now reporting a new wiper attack against Ukrainian organizations, saying that has destroyed data on infected machines. For more on that, let's bring in Michael Zweiback. Zweiback, Fissette and Coleman partner. We've also got our very own Alexis Keenan joining in on the conversation. Michael, it's good to talk to you today. Give me your assessment of this latest cyber attack that's happened out in Ukraine. How significant is this in terms of the scale?
Well, it's on a massive scale, and it's part of the integrated military strategy of the Russian government now, especially as they're dealing with, attempting to invade countries. And what they're essentially trying to do is debilitate not only the command and control structures of the country, but also impact ordinary citizens. And you saw that yesterday with the fact that they were going after the banking operations of the country in order to basically make it very difficult for people to get money out so that ordinary consumers could flee the country or have money for goods in a very constricted environment.
Michael, Alexis here. Now, in addition, you have said that these Russian-initiated cyber attacks could eventually impact American citizens and U.S. financial institutions. So can you explain that?
Well, anytime you have a scenario in which a country is launching, this is the Russian military, the GRU, is launching massive denial of service attacks, which is basically a flooding of the ability of these websites to administer some form of service. And as that begins to degrade, what the impact is that the economy also begins to degrade. So the ability of the Ukrainian economy to produce goods and services, which are going to be exported to the remainder of Europe, becomes diminished. And that means that they have to make up for that somewhere. And ultimately what it does is it ends up with higher prices globally, not just higher prices in the Ukraine and Europe.
Michael, it's Brian Chung here. What might any sort of possible cyber attack on American citizens, a follow-up on Alexis's question, though, look like? I mean, what should people be watching out for? I had seen warnings about possible ransomware attacks. What is usually in the Russian playbook for these types of things?
Well, typically what they'll do is they'll start with an attack similar to this, where they're overwhelming specific websites that are critical to various different parts of their strategy, whether it's banking, whether it's electrical grid, and there's all very specific reasons why they go after those sectors. The grid is for the purposes of debilitating the fact that households have electricity, which affects the population. The banking is, hey, I can't go to my ATM and actually get money out. Once that is degraded, it allows them to implement a secondary attack, which is, let's go in now with our malicious software and actually wipe accounts, steal money, steal passwords, which just sets them up for a much greater attack downstream.
Michael, I want to switch gears here and talk about the legal framework that actually allows the U.S., the Biden administration, to impose sanctions on Russia. So first, I want to ask you, what circumstances do there have to be present in order for the Biden administration to go ahead and freeze assets on behalf of the government and also against, I should say, the Kremlin's inner circle? The Biden administration has been targeted for criticized for targeting VEB and also Russia's military bank and not going after the larger bank. So can you explain the framework and whether or not you're expecting the sanctions to be upped when we hear from Biden later today?
Well, I think the sanctions this is what they have put essentially all their eggs into this basket. They don't feel that there are really any other significant steps that can be taken with respect to impacting or changing Putin's behavior. The legal framework is basically by executive order. It is decided by the administration as to which targets to go after. Typically, they go after major institutions, institutions such as sovereign debt funds, and also projects, as you've seen in this case, where they've gone after the individuals that are responsible for the building of the pipeline to Germany for the energy needs. And I think that you'll see that continuing. I question its effectiveness long term, because this is a Russian president that is well aware of how and what to do with respect to sanctions. And they also have the backing of the Chinese government, so that if they need technology and or resources financially, that they'll get them.
Yeah, another thread to be watching as this conflict plays out. Michael Zweiback, Fissette and Coleman partner. Appreciate you joining us today, and our thanks to Alexis Keenan as well for joining in on the conversation. Taking a look at where the markets are trading right now, the Dow now down about 570 points. We are continuing to track the market action as well as the reaction out of Europe as NATO's chief calls Russia's invasion of Ukraine a brutal act of war. We'll be right back. Welcome back to Yahoo Finance Live. We are seeing some of the losses on the Dow accelerate in this session, although it is still off of the session lows right now as we continue to monitor the Russian invasion of Ukraine. You see red across the board in the markets right now, with the Dow seeing the steepest losses, down nearly 2% here. European stocks also closing 3% lower. Looking across Europe, the DAX seeing the biggest losses, down about 4%. The reaction, obviously, from the White House, we are anticipating President Biden to speak within the next hour, but the reaction over in Europe has been swift as well, with NATO allies meeting this morning. Secretary General Jens Stoltenberg saying that additional troops will now be deployed to Eastern Europe in response to President Vladimir Putin's latest actions. Take a listen.
NATO allies condemn Russia's invasion of Ukraine in the strongest possible terms. It is a blatant violation of international law, an act of aggression against a sovereign, independent and peaceful country, and a serious threat to Euro-Atlantic security.
And Brian, we have seen a global rout on the back of this. We were talking about the European markets there. Russia, the MOEX, they're sliding more than 40% on the back of military action.
Yeah, absolutely. And actually, let's just get right into the Wi-Fi Interactive as we do start to see the European markets get closer to the close. When we take a look at the DAX, as you mentioned, down 4%. The CAC 40 in Paris also down by about 4%. And obviously London in focus as well in the UK, seeing essentially the same thing, almost down 4%. Now, that kind of makes a little bit of perspective from what we're seeing on the Dow Jones, down about 2%. But of course, the big focus on Russia with their MOEX index down 33%, chart not coming up right there. But if we take a zoom in, and Jared Blickery gave us a little bit of a perspective on this earlier, taking a look at some Russia exposure. Obviously, green here doesn't necessarily mean good when you take a look, for example, at the Russian ruble depreciating markedly against the US dollar. This is not just a single day trend. If we take a look over the course of the week, the Russian ruble already on the trend of decelerating against the US dollar, but it was the action overnight with the announcement of the invasion that really shot the Russian ruble down against the US dollar. Again, MOEX down over 33%. But take a look at one way that US investors can get exposure to Russia, which is the RSX, the Van Eck Vectors Russia ETF. Get this, down almost 26% over a 5-day period, down by about 45%. So very interesting to see all of that. And then one last thing, just to kind of take a look back at the US macro picture. When we take a look at the VIX index, which currently at a 34 handle, again, the ramp up has been over the 5 days where we've continued to get these headlines, but we have not seen a handle this large on the VIX since 2020. So again, showing how jittery investors are right now. And then one last point to bring up here, US dollar index up to 97. I believe this is actually the highest that we've seen in 19 months. So everyone rushing for US dollar denominated assets. That's something that should be watched in the days to come as we continue to see whether or not Russia will further escalate things, Akiko.
Yeah, we are seeing a big rush to safety. Brian, appreciate you walking us through those moves. We're going to continue to talk about the Russian invasion of Ukraine. On the other side, the crisis throwing Europe into the biggest security crisis since World War II. A foreign policy strategist is going to be joining us on the other side to break down the latest developments. We'll be right back.
Welcome back to Yahoo Finance Live. Airstrikes hitting Ukraine's capital following Russian President Vladimir Putin's move to invade the country. Things are progressing quickly, so quickly that, in fact, we're actually monitoring tweets from some major politicians based out of Ukraine, with the president of Ukraine, Volodymyr Zelensky, sending this out earlier in the morning. Quote, a package of additional tough sanctions against Russia from the EU is approaching. Discussed all the details with Emmanuel Macron. We demand the disconnection of Russia from SWIFT, the introduction of a no-fly zone over Ukraine, and other effective steps to stop the aggressor. Let's get a little bit more of a breakdown on what's going on here with Michael O'Hanlon, Brookings Institution Senior Fellow and Director of Research in Foreign Policy. Michael, thank you for jumping on this morning. Obviously, a lot of focus on the sanctions on Russia, but also need to put into focus what Ukraine needs help with in the immediate few hours after that big announcement yesterday. Based off of that tweet that we had just shown, do you see the appetite among the Western allies of Ukraine to deliver Ukraine the help that it needs right now?
Greetings, and the answer would be no. I think the request for a no-fly zone was particularly notable as a non-starter, because a no-fly zone is a military operation. It's a major military operation. I interpret that to be a request that NATO declare and then enforce a no-fly zone over Ukraine, meaning that NATO would go to war against Russia in the air, which we obviously aren't going to do if we're not willing to use force in any way, shape, or form. So I'm afraid that that is also, however understandable at one level for a president who is fighting for his country's survival and perhaps even his own life. Nonetheless, it reflects perhaps the degree to which this is still getting worse, not better, because that sort of public demand by Zelensky is only going to incite Putin further. Putin has a contempt for Zelensky. This is part of what's driven this crisis. I think Putin not only has sort of a view of history that's based on what countries do to each other, but he also can personalize things. And it's clear that Zelensky is one of the people on the planet he doesn't like at all right now. And so, again, I'm not really trying to put the blame on Zelensky. I'm just saying that this sort of a tweet is virtually guaranteed to cause a negative reaction from Putin. And whatever other steps he might have been contemplating have become more likely, although I think the big decisions have already been made. And so the tweet is relatively unimportant by comparison.
Michael, the last time we spoke, we had raised questions about what exactly the motive was here, whether it is a regime change for Vladimir Putin. Based on what we have heard from him in the last 24 hours, based on the actions taken by the Russian military, what's your assessment?
My assessment is that Vladimir Putin is going to make sure Ukraine never joins NATO and that he can dominate Ukraine to the extent he wants. So I think even just getting rid of Zelensky is no longer enough, because there would always be the possibility of some future Zelensky-like figure coming to the fore. And of course, Ukraine has wanted to be in NATO for a long time under numerous presidents, and it's wanted to consider joining the European Union, or at least moving in that direction under numerous previous presidents. So I think Putin's going to want to exercise more direct control. Either he will literally annex part of Ukraine, a substantial part beyond what he's already taken, or he will insist that he creates some kind of a Lukashenko-like figure, the president of Belarus, who's been so subservient to Putin for so long and doesn't really run in fair elections and can't really be unseated. So at least for some foreseeable future of 10, 20, 30 years, what have you, Putin can make sure that any president of Ukraine would not tilt westward. I think he's going to make sure he finds some way to do that. And maybe he changes the constitution of Ukraine as well, to the extent he allows it to continue to survive as an independent country, such that it could not join Western states, at least not without Moscow's blessing. So those are the sorts of things that I would expect Putin to consider.
Michael, in the here and now, you talked about the kind of no appetite for that no-fly zone. But how about SWIFT? And I feel like there's been a lot of talking points on this, but we need to zoom out and just kind of review exactly what SWIFT is against the communications channel, essentially, for international transactions. The foreign minister of Ukraine sending out his own tweet, kind of in the same vein. I won't read the whole thing, but he just said, I won't be diplomatic on this, ban Russia from SWIFT. But there's an open question, Michael, about how effective that would be, given the central bank of Russia's efforts already to de-dollarize. But how important of a tool do you think that is as part of these discussions?
Yeah, I don't know how to do a quantitative assessment to link what de-accessing SWIFT would mean for the Russian economy in terms of, let's say, percent GDP growth or the survival of certain companies or the overall volume of exports. I don't claim enough expertise to know any of that, but I do know that over the last 10 years, the sanctions we had already applied had essentially put Russia into the economic doldrums, and Russia remains in the economic doldrums, and things are only going to get worse. So whether that means that Russia's expected GDP growth rate goes to 0 or -2 or -5, I don't know. I would also favor developing a plan to wean ourselves off Russian oil and gas over the next half decade or so. And that could definitely make a major difference. That one, I think we could fairly conclude would put Russia into negative GDP growth territory. But for the reasons you just mentioned about alternatives to SWIFT, I think it's possible that Russia may have some partial workarounds that would limit the damage. But again, they're starting from a very unpromising place. They've already lost access to high technology in the West. They've already lost access to a lot of the personal bank accounts of key leaders, and it's just going to get worse. So Russia's now headed for economic stagnation, if not even worse.
A quick follow here, Michael. When you say reduce reliance on Russian oil, you're talking specifically about Europe and acceleration to what? To renewables, or what are you specifically
Well,
suggesting?
it's an excellent question. Yeah, I wrote with David Victor on this recently. He's an energy expert at the University of California, San Diego. I think there are a number of pieces. First of all, we actually import Russian oil right now in the United States. So that's one part of it. But yes, as you say, it's European dependence on Russian gas. And it may require not only an accelerated transition to renewables, which would be great, but at least in the meantime, an increased rate of hydrocarbon production in North America and the broader Middle East. In other words, we may have to temporarily suspend some of our more ambitious green targets, or at least put them in a certain perspective that they can't be allowed to supersede the importance of dealing with Russia in this crisis right now. So I think we might need to try to produce elsewhere more oil and gas, and also help our European friends, maybe with NATO infrastructure funds, to build more LNG terminals.
Michael O'Hanlon, Brookings Institution Senior Fellow and Director of Research and Foreign Policy. Good to have you on today. Coming up, Bitcoin is tumbling as the crisis in Ukraine intensifies. We're going to break down the latest crypto action after this short break. Well, cryptocurrencies are declining alongside equities as investors continue to keep a close watch on the Russian invasion of Ukraine. Bitcoin now trading below that $37,000 handle, hitting a 1-month low. Let's bring in Yahoo Finance's David Hollerith, who's tracking the latest market action. And David, we've spoken about this for some time here, but it feels increasingly like Bitcoin trades as a risk asset as we watch the equity space too.
Absolutely, Akiko. The correlation with Bitcoin and the S&P 500 actually hit its all-time high yesterday. And what that tells us is that it's a similar narrative that we've seen since cryptocurrencies, especially Bitcoin, have been sort of bought up by these larger, more institutional investors. It's the asset class is focusing like a risk-on, high-risk equity. So that's actually unsurprising, even though it is at an all-time high. Now, that being said, the drawdown since the drawdown yesterday, which was fairly significant, almost 11% in less than 24 hours, there has been some recovery. So now Bitcoin is trading, it looks like right around $36,000. Ethereum also has taken a higher hit. Other major cryptocurrencies that have probably been hit the hardest are Avalanche, Cardano, and Dogecoin, which have each seen more than a 15% drawdown on the day. So I've spoken with a few brokers who have seen trading, and when the sell-off sort of happened yesterday, they had sort of noted that there was increased selling, this buy the dip mentality we've seen from crypto investors is not really shaping up right now. So it does seem like, prices could fall further once we see more developments on sort of the geopolitical situation that's happening right now. Another thing I'll add too is that cryptocurrencies are a lot more liquid than other types of assets. They trade 24/7, which means when something like this happens, for any investor who holds multiple assets, the very first thing they can trade typically is something like a cryptocurrency, because the markets never close as opposed to something like stocks. So that's why we typically see cryptocurrencies leading a drawdown.
Interesting commentary there. Yeah, especially given that the developments were overnight. Maybe those who looked at Bitcoin could have been able to predict exactly what was going to go on in the broader equities markets. But Yahoo Finance's David Hollerith, thanks so much. Well, coming up on the other side of the break, we'll take a look at WTI crude oil, which is jumping to its highest price since July 2014 at over $96 a barrel. We're going to break down expectations for the oil market after the break. Welcome back to Yahoo Finance Live. Obviously watching the market action as we do enter the 12 p.m. hour here on the East Coast. That's Akiko Fujita. I'm Brian Chung. Let's take a look at markets really quickly as we, again, continue to monitor the sell-off that was a bit steeper actually earlier in the day. The Dow still down over 500 points. The S&P down 30 points. The Nasdaq actually ticking up 0.25%. We are expecting President Joe Biden to make remarks soon. Earlier in the morning, the president met with G7 leaders to discuss a joint response to Putin's move into Ukraine. That conversation wrapped up around 10:30 Eastern time. Following Biden's statement late last night that the United States and allies will, quote, respond in a united and decisive way. He promised to hold Russia accountable, and all of this happening as NATO Secretary General Jens Stoltenberg said the organization has increased and will increase its troop presence on the eastern boundary. Again, a lot of movement in the gold space as well, up 0.7%. Also watching oil, which is up actually $4 right now to $96.29, or actually Brent crude oil now up over $100 to $102.74. All of this commentary coming as the Federal Reserve also in focus, with the Cleveland Fed President Loretta Mester saying, quote, the implications of the unfolding situation in Ukraine for the medium-run economic outlook in the U.S. will also be a consideration in determining the appropriate pace at which to remove accommodation. Goldman Sachs and Evercore ISI saying they only expect the Fed to move by 25 basis points in its next meeting in mid-March. But let's first get a big step back and kind of take a look at the big headlines coming out of Washington with Yahoo Finance's Jennifer Schonberger, who's been following the developments. Again, we're expecting President Biden to speak roughly around 12:30. What other headlines are you watching, Jen?
Hey there, Brian. That's right. The president expected to address the nation in about less than 30 minutes with an update on the U.S. response to Russia's escalated invasion of Ukraine. The president spoke with his G7 counterparts earlier this morning, as well as met with members of his National Security Council as the U.S. is prepared to slap new sanctions on Russia and coordinate with Western allies for a stinging sanctions package. The White House says it is prepared to impose not only sanctions, but export controls. It remains to be seen whether SWIFT will be in this package and if the U.S. will sanction Russian President Vladimir Putin himself. The White House is prepared to target Russia's largest financial institutions. Now, Republicans believe the U.S. should be taking a stronger stance and stronger response to Russia's actions. In a statement Thursday, House Minority Leader Kevin McCarthy condemned Putin's actions, said he needs to be held accountable, saying in a statement, quote, Vladimir Putin's invasion of Ukraine is reckless and evil. The United States stands with the people of Ukraine. Putin's actions must be met with serious consequence. So, Brian, we'll hear from the president here in about less than 30 minutes to see what those next steps are from the U.S. and what the next sanctions could look like. Back to you.
Yahoo Finance's Jennifer Schonberger. Thanks so much. Let's bring in our first market guest of the hour. Want to focus in specifically on oil. Rob Thummel is Torta's portfolio manager. And Rob, it's great to have you on the program this afternoon. Taking a look at the price action in WTI crude, I mean, basically all of the commodities areas here increasing. When you take a look at Brent up to basically $103 a barrel. Give us your outlook on how the developing situation, which appears to be trending towards further escalation from this point, weighs on the market.
Yeah, Brian, thanks for having me. So if you look at crude oil and you look at Russia's role in both crude oil and natural gas, Russia's a top 5 producer of both crude oil and natural gas in the world. And the market, in particular in crude oil and to a certain extent in natural gas, is undersupplied. The inventories keep falling and inventories levels tend to correlate with prices. And so lower inventories mean higher prices. And so that's kind of where we are. And there now is concern about what will Russia production volumes be? And so that's what's causing this rise in prices. And so that's where we sit now. So where do we go from here? I think the answer is, there is ample supply of oil. There is ample supply of natural gas in the world. The U.S. has a lot more that it could provide, OPEC as well. You just need a little bit of time to drill more wells and boost production levels. So probably in the short term, likely see higher prices and if this geopolitical tension continues. But longer term, there are some relief outlets that will potentially lead to lower prices.
What kind of a spike are we talking about short term? We heard the president warn about this a few days ago, saying that Americans will feel a bit of a pinch.
Yeah, I mean, oil prices on a Brent have already been over 100. You can see U.S. WTI rise above 100. Natural gas a little less so, a little less impactful, just because it's a seasonal commodity, and we're actually, as we all know, in the northern hemisphere, running out of the winter. Hopefully, is almost over. But oil definitely could definitely see a rise. Oil demand with the summer and spring and summer driving season is going to continue to increase over the next several months, and so that will cause oil prices likely to move higher.
And then obviously we're watching the headlines on the Nord Stream 2 pipeline, although it seems like at this point there's not much more that can be done with any sort of advancement on that already halted. But the U.S. slapping sanctions on the company that's responsible behind building that pipeline, how important is that to the price action?
Yeah, well, excuse me. The good news is for natural gas in Europe, the big peak demand is roughly October, November through the end of the winter, and the good news is we're almost done there. However, that doesn't alleviate next year's winter and the need to refill European natural gas inventories in preparation for next winter. So, obviously we're seeing really, really high prices in Europe and from a natural gas perspective because of the concern of that pipeline not becoming operational, Nord Stream 2 in particular. Now, the U.S. can solve that. In the U.S., we're in a much better spot. We have low-cost natural gas because, the U.S. produces more natural gas than we consume. It's decarbonizing when you replace it with coal. If you build enough liquefaction terminals in Europe, the U.S. could supply more natural gas to Europe and fill some of that demand and the European demand that normally is filled by Russian volumes. So longer term, there are definitely some solutions here.
Rob, we had a guest on earlier from Brookings who said he believes this could accelerate the transition to renewables, particularly in Europe, but here in the U.S. as well. It feels like we've got a lot of guests on who are kind of split on this. How do you view that?
Yeah, well, I'm an all of the above when it comes to, how do we solve this situation. Big picture, big macro trend, global decarbonization, that's not going away. We all, I think, would agree that we need to decarbonize wherever we can. And so in this energy transition, you need to, the fastest way to do this is an all of the above. That includes natural gas displacing coal. That includes more solar and wind. That includes some renewable fuels, renewable diesel, renewable natural gas, hydrogen, potentially carbon capture. All of these need to be accelerated in order to achieve some of these decarbonization targets. And so right now, what can you do right now? Use more natural gas. It's pretty simple. It's very simple. There's ample supply. There's a lot of it. If you use more natural gas, you displace coal. That absolutely has been proven that it reduces carbon emissions today, and it could significantly reduce carbon emissions going forward if places like India and China just simply used more natural gas and less coal.
Tortoise portfolio manager Rob Thummel, thanks so much for hopping on Yahoo Finance this afternoon. I just want to get some quick headlines actually coming out of the United Kingdom. Boris Johnson, the prime minister there, announcing sanctions on over 100 Russian individuals and entities. The United Kingdom will also suspend dual-use export licenses to Russia, in addition to blocking Russian companies from raising finance in the city of London, an important financial hub around the world. So again, a lot of these Western nations continuing to move on additional sanctions there. But let's get another zoom in on the market action with John Traynor, People's United Advisors Executive Vice President and Chief Financial Officer. John, great to have you on the program today. We've been talking a lot about the politics, but obviously within the lens of the broader financial story, the Federal Reserve prior to all of this seemed to be the big factor here. And there's this kind of interesting confluence of both of these things where you're having some Fed watchers saying, this Russia-Ukraine thing could have an impact on Fed policy now as we head towards that mid-March meeting. What say you on whether or not you expect the Fed to adjust its stance based off of these developments?
Sure. I mean, just a few days ago, we were looking for a Fed increase of 50 basis points and then 25 basis points at every successive meeting. You reported this morning, a few major firms are now saying, you know what, we have a cautious Fed. They're probably going to go back to a 25% rate increase. And this could cause the Fed, some of the more dovish members of the Fed to say, let's move a little more slowly. Because of the high inflation numbers, there was a lot of pressure on the Fed to move quickly. This is probably going to cause the Fed to, be a little more thoughtful, a little slower in their rate increases. But we do believe the trend is still going to be up with the Fed.
Now, this is an interesting point that you bring up because really, at the end of the day, all this does is increase the tail risk here and downside macro problems here. So what was interesting was I noted in Evercore ISI's note that even though they don't expect that more aggressive double rate hike in March, that maybe the possibility of further escalation later in the spring or maybe into the summer in Russia-Ukraine could force the Fed later on with energy prices perhaps spiking to then do a 50 basis point hike in one of those late March or summer meetings. As far as volatility goes, how do you factor that into the rate environment and the financial conditions tightening, which is a very challenging thing for someone trying to build a portfolio?
Yeah, that's a great question. Our bond team keeps an awful lot of keeps a very close watch on bond volatility. You know, I'm a stock guy, so I tend to look at stock volatility. But they've been taking a look at bond volatility, and the bond market is actually incredibly volatile right now. You know what the thoughts are going forward. So there's a real give and take as to Fed policy. So you know we've adopted a strategy of let's stay short. We're short our benchmark duration level, and the cash that we raised cash from our bond portfolio last year, the end of last year, with the intention of moving that into equities. We're still sitting on that cash. We're saying let's hold off. That cash is still there for a future equity investment, but we're holding off here right now. But you know the bond market absolutely is actually a little more difficult for us to call right now than the stock market.
John, so let's talk about that cash you're holding. I mean, what will it take for you to kind of put that to work? Is this about waiting for this, as in the geopolitical tensions to die down? Is it waiting for the Fed meeting come March to see, you know, what direction or how aggressively the central bank moves? What are you waiting for?
You know, one of the things we did was we took a look at past situations like this, although, you know, I don't want to minimize what's going on in Ukraine, but take a look at what happened in the summer of 1990. You know, the Iraqis went into Kuwait on August 2nd. The market didn't bottom until October 12th. You know, there was the initial shock, and then there was some more, more pressure. World War II, December 7th, we were attacked, and the market didn't really bottom until the Battle of Midway in the spring of 42. So, you know, we think, you know, we're certainly seeing a shock right now, but we're not in any rush to put the cash to work. We think you're going to need to see a little bit of a resolution. I mean, I was listening to the expert you had on from Brookings earlier. I mean, this scenario, this whole Ukrainian invasion is going to take a while to work itself out, and we're not in any rush to try and guess how things are going.
Yeah, no way to determine, given where we are today, how this is all going to be resolved. But John, it's good to talk to you today. John Trainer, People's United Advisors, Executive Vice President and Chief Investment Officer. Coming up, airlines are under pressure, along with the broader market, we should point out, following Russia's attack on Ukraine. We're going to be speaking with Booking Holdings CEO about his outlook on travel. That's on the other side. Welcome back to Yahoo Finance Live. We do have an update from the White House. The president was scheduled to address the Russian invasion of Ukraine at 12:30 today. That now has been moved to 1:30 p.m. We are expecting the White House to announce additional sanctions against Russia. And of course, we know that the president has been in calls with leaders, particularly over in Europe, well, we should say globally, throughout the morning, with an emergency meeting with G7 leaders this morning. We also know the president spoke with Ukrainian President Vladimir Zelensky. So now the White House saying that the president will address the country at 1:30 p.m. Eastern. And we, of course, will bring that to you live right here on Yahoo Finance Live as soon as the president takes the podium. Well, the Russian invasion of Ukraine has been taking a toll across the board today in the equity space, including the travel sector. We've got hotels, cruise lines, travel, planning stocks, all taking a hit following the attacks. Joining us now to discuss the impact on the sector, we've got Glenn Fogel, Booking Holdings CEO. And Glenn, we were talking in the break here. I know you don't have significant exposure to Eastern Europe compared to Western Europe broadly, but anytime you've got a country that closes their civilian airspace, you've got attacks that are happening, I'd imagine it would give a lot of travelers some pause on whether, in fact, they want to be flying right now. What do you anticipate the impact to be, at least specifically to bookings?
Well, first, thanks for having me. And I just want to say how tragic this terrible situation is. And first in our thoughts always is the people and not the business. That being said, you mentioned about people being hesitant perhaps to travel because of the news. I don't think it's going to make a big difference. I'll be perfectly honest with you. People want to travel right now around the world. And yes, people are very sad, as they should be, about this terrible event. But I don't think that's going to stop the American who wants to travel for a summer holiday. I don't think it's going to stop, let's say, the person from London who wants to go to the Greek Isles in the summer. People are going to do their summer travel. Absolutely. There's demand that's just pent up from 2 years of a pandemic, and that pandemic is going away, and that's going to release that latent demand, and we're going to see it come in the summer, albeit it will be sad when we're reading about these terrible things in the Ukraine.
Glenn, it's Brian Chung here, and you did note on the earnings call that Russia and Ukraine represent a, quote, very low single-digit percentage of your total gross bookings. But I guess maybe if we just zoom out, in addition to the concerns that people already had about the virus itself, it being a continued point of concern in other countries, are you seeing cancellation trends that kind of reflect just the broad nervousness by which people who do want to travel but want to have the flexibility to maybe get out of that travel plan if things get out of control or they get a little bit more concerned? Is that a trend that you expect to see in 2022?
Well, again, it all depends on events, and certainly some people will react right away to news they read. But most people, because of the flexibility that we offer our consumers, particularly in our accommodations product, where you can freely cancel up to about when you're going to show up, people are going to pretty much, I believe, will just let it go for a while and see how things play out. Certainly, we're in a very inflationary situation right now, and people know that having bought something right now, they'd be concerned about canceling it now and then possibly having to rebook it at a higher price down the road. So I think people are going to be hesitant about getting rid of any travel reservations that they've already made because they'll want to make sure that they've gotten the best price.
Glenn, let's talk about the outlook as we look ahead to the summer travel season. It certainly feels like a lot of travelers are booking in advance. They're a little more comfortable, at least with where things stand in this pandemic. Where are you seeing the biggest demand right now?
Well, definitely, we talked last night in the U.S. We're seeing our numbers in the U.S. for the summer travel. It looks good compared to 2019. We were ahead of the gross bookings we had at the same time for the summer in America versus 2019. Same thing in Europe. So we are seeing people who want to travel in the summer. They're getting that early booking done right now, knowing that the potential for higher prices down the road.
Glenn, we've been hearing a lot anecdotally on the macro scale about the high savings that people had as a result of the pretty dramatic stimulus that we got here in the United States. When we talk about the American traveler, is there any sense that that's slowing down, that people have burnt through their savings and already gone on an extravagant vacation that maybe will take a little bit out of the budget for the later parts of 2022 or 2023?
No, I don't think so. I think that people have an incredible demand, as I've been saying, that they want to go travel. They haven't traveled for 2 years the way they would like to have traveled. Sure, maybe they took a local trip, maybe they took a trip to see family and stuff internally, domestically, but they want to go to a place they always wanted to go. The Americans who normally would have gone to Paris, would have gone to London, they are going to want to go this summer, and they're going to go assuming that there isn't any significant change in the health situation in Western Europe.
On that front, you mentioned the demand that you're seeing domestically. I wonder how much more of an increase you're likely to see in cross-border travel. To your point, things have started to calm down. We had the UK, for example, lifting the mask mandates on mass transit. We've seen an easing in terms of quarantine requirements. How big of a catalyst has that been in terms of getting travelers to look internationally again?
Absolutely. The way our business works is when restrictions on international travel go down, demand is then flows through and gets into bookings. We've seen that throughout the world. And for example, you may have seen some pictures in Australia finally opening up, let tourists come back, and how happy it was for people to actually go to Australia again. And we're seeing it throughout the world as the rate of the virus infections go down, as people feel safer, as governments feel safer, and let people come and travel. That's helping bring back international travel. Historically, we've been about a 50-50 international domestic business. Of course, because of the pandemic, our international travel suffered greatly. But now we're beginning to see it come back, and we're about 40% instead of the historical 50-50, but it's certainly moving more towards the historical norm.
Glenn Fogel, CEO of Booking Holdings, thanks so much for stopping by Yahoo Finance this afternoon. Coming up on the other side of this break, the ruble crashing to a record low following Russia's assault on Ukraine. You can see the devaluation against the US dollar in that chart before you. We'll break down how other global currencies are reacting after the break. Let's put a lens on the foreign exchange market as the Russian ruble continuing to devalue against the US dollar. That is after the announcement yesterday that Russia would be stepping into Ukraine. This coming as the country's central bank says it will take action in the foreign exchange market for the first time in years in an effort to dampen volatility. Joining us now to discuss all of the action is Monex Europe Head of FX and Analysis, Simon Harvey. Simon, thank you so much for joining us, especially late from London. Wanted to just ask you broadly about the action that you've seen. Obviously, a lot of volatility in FX markets, specifically today. Is that just because they weren't properly pricing things in earlier in the week?
Yeah, thank you for having me. And I think it is the fact that they haven't. We've been talking about it at length for the course of the week, that there was this huge tail risk in markets that Putin would expand his military presence in Ukraine, but it was largely perceived that the economic consequences to both Russia and to the West were so significant that actually this was just a tail risk and an unlikely scenario to unfold. But lo and behold, overnight, we have seen a material escalation in geopolitical events, and the markets have had to readjust accordingly. Over the course of the week, we've really seen it play out in bond markets or local markets with geographical proximity to Russia and Ukraine, or just global equity markets. But FX markets have been fairly kind of limited in their reaction. So today, big repricing and further pain for the ruble.
And you've highlighted that, saying that right now it's still contained to European currencies, but that if there is an escalation on the military front, things could spill over. Does that suggest further strengthening for the dollar? And if so, how far do you see the greenback going?
Pretty much, yes. At the moment, it's predominantly been focused on European FX markets. I mean, today's repricing has been a more global risk repricing. So I think you'll see that stabilize to tomorrow. But what you'll see is that the inflationary risk coming from higher European gas prices, higher European oil prices, and precious metal prices continue to put increasing pressure on European FX markets, because there is that stagflationary risk that comes through. Elsewhere, you're going to have an inflationary risk, for example, in the US, where there's less exposure necessarily to the inflation push through in the commodity complex. There will be, but it won't be so detrimental that it starts to weigh on demand and really kind of downgrade the growth profile. So I think you are going to see, if things stabilize, it play out more within Europe. But if all of a sudden we start to see increase kind of escalation and continual pressure between the West and Russia, and tit-for-tat sanctions being imposed, threats of further military expansion, then we're going to see this play out in global markets undoubtedly. And there's very little kind of area to look for when it comes to hankering down in these scenarios outside of the dollar.
How much of that is priced in, Simon, to the European currencies? I mean, specifically the euro, a bit of a challenging situation there, because you know that if there is a real income and pretty substantial economic growth impact to Ukraine, that's going to impact the Eurozone as well.
Yeah, I mean, at the moment, the situation is really fluid. It kind of depends on where we're going with the sanctions and then any retaliatory impacts. I mean, with the Eurozone especially and the euro, it's mainly a case of, are Russia going to retaliate by limiting exports and cutting off gas supplies? If that's the case, then we're talking a doubling in European gas futures, and then all of a sudden some real pain for euro-dollar. So at the moment, everything's kind of up in the air. The longevity of the downside risk to the euro are similar to how long is a piece of string. And this is why we're all sitting on the edge of our seats waiting for Biden's comments, because that should be the catalyst to understand that's the West's response and the magnitude of it. And then we can roughly gauge where Russia's going to go with it. But in previous sanctions periods, Russia has kept the flow of gas going into Europe pretty kind of unimpeded. Now, obviously, this is a much larger scale than 2014, and therefore there is that risk that there could be a complete locking off of Russian exports, or even sanctions, even restricting exports anyway. So it could be imposed by the West. That's going to determine where we're going with next steps within FX markets and next steps for the Eurozone economy.
I mean, Simon, obviously, yeah, the developments are something that we're going to have to watch, but it seems like in the maybe sovereign bond markets, we're already seeing people pricing in the full extent of what could be further escalation here. I mean, we're seeing some reports, and I need to kind of dig a little bit deeper to see how substantial these are, about some banks triggering margin calls as they slash Russian bond values to zero, essentially. How important is that story going to be? Is sovereign debt actually perhaps leading action in FX?
Sovereign debt's an interesting one. It has spillovers into the FX market, but when it comes to Russian sovereign debt, it's more a case of liquidity and counterparty risk than necessarily default risk. It's very difficult to trade Russian assets at the moment, especially with impending sanctions. So it's more a case of banks trying to limit their exposure for assets they can't then shift off of their balance sheets. We're seeing the same happen in kind of restrictions in offshore liquidity for the Russian ruble as well. And it's a case of the hot potato. No one wants to be left holding it if all of a sudden the West imposes sanctions such that you can't then shift these assets off and you're stuck with them, and they potentially may not be paid if Russia says, well, we're actually just going to default on external financing because we can't raise any more financing there anyway. So our credibility doesn't really matter. This is what we're seeing play out now in payments and the FX market specifically. It's difficult to see a complete isolation in Russia purely because the way in which global trade works. Now, this is being discussed with regards to access to the SWIFT network. It's considered the nuclear option for a reason. It is massively detrimental, not just to the Russian economy, but to the global economy as a whole, and the financial system as we know it. So there are these risks there. I think what we're seeing in bond markets in Russia specifically is localized. I don't think we're necessarily going to see it have this contagion effect into broader market pricing. It is just purely a case of these international banks wanting to shift the exposure off.
Well, Simon, I know it's the end of your day there in London. We appreciate you sticking around for us. Simon Harvey, Monex Europe, head of FX analysis. Well, we've got much more market coverage on the other side of the break. As we do a quick check here, the Dow down about 670 points right now, the Nasdaq down 33, and the S&P 500 down 50. We are also watching the commodity space closely here. Brent crude now climbing to $103 a barrel. Much more to come here on Yahoo Finance Live. We'll be right back. Well, a new survey from Forbes finds that many Americans are feeling anxious about this tax filing season, with over 50% say they anticipate their tax refund will be lower this year. That's part of our Taxes Made Simple series presented by Tax Act. And we've got Robert Seltzer joining us today. He's Seltzer Business Management President and CPA. So, Robert, let's start with that question here. Are those concerns justified?
I think for some people they are. They had advances of the child tax credit, so people were getting approximately $300 a month directly deposited into their account. And if they got those payments throughout the year, then their refund would be reduced. I know that some people tried to cancel those payments and found it next to impossible to do so. But that's also consistent with the IRS being in the worst state of affairs in my 30 plus years in the profession.
Robert, Brian Chung here. I want to zoom in on one specific aspect for why Americans may be expecting less. For the millions that claimed unemployment insurance, there was a one-year break that was provided by the American Rescue Plan that allowed a deduction on the first $10,000 or so of unemployment income. That's no longer going to be the case for the 2021 filings. Do I have that right?
That's correct. It was $10,200 per person. But on the flip side, I think that there were fewer people on unemployment for 21 as compared to 20. So it could work either way. If you didn't have the unemployment benefits this year and you had them last year, then your refund would probably be, stronger, because if you had, let's say, $20,000 of unemployment and approximately 10,000 of that would be taxable, that's going to reduce your refund. But if you were employed in 21, then that won't be an issue. But for people who had similar unemployment benefits, then yes, that would reduce their refund, because they wouldn't have that exclusion of $10,000, 10.2 from their income, or 20,400 for a couple.
Robert, you just alluded to the challenges at the IRS, obviously very stretched thin in terms of staffing, and we've already heard warnings about potential delays in processing the filings. What are you looking at right now? How significant are these delays likely to be?
They're horrible. The one thing that I can say, if you listen to anything that we've said, do not file a paper return. That will delay your refund for months, not weeks, but months. I filed an amended return electronically in July. It's a simple return, a refund of less than $1,000. We still don't have it. The IRS is more backlogged than I've ever seen, and their computer systems are antiquated, and they just have had a lot of people leave their employment, and they just have not had people replaced. So it's sort of the perfect storm for the IRS: underfunding, bad systems, you name it. So it's the worst. They're in the worst position they've ever been in.
All right, Robert Seltzer, Seltzer Business Management President and CPA. Thanks so much for hopping on Yahoo Finance this afternoon. Coming up on the other side of this break, we'll take a look at metals as palladium prices are hitting 7-month highs following Russia's invasion of Ukraine. We'll break down the latest market action after the break. Things moving fast on the Russia-Ukraine conflict, and the latest that we're hearing from President Joe Biden following his G7 meeting earlier this morning. He tweeted this just about 10 minutes ago, said, quote, "We agreed to move forward on devastating packages of sanctions and other economic measures to hold Russia to account. We stand with the brave people of Ukraine." No other details beyond that, but we are expecting President Joe Biden to address the nation, where he could provide a little bit more color on what he means by that devastating package. That press conference supposedly going to happen at around 1:30 Eastern time. But in the meantime, markets still continuing to digest the developments. And for more on that, Yahoo Finance's Inez Ferre watching everything that's going on. Inez, what's the breakdown?
And Brian, taking a look at the Dow, solidly in the red, down 640 points. The Nasdaq has been hugging the flat line. It is down right now. And the S&P 500 down about 1%. Let's take a look at commodities, because so much has been happening in this space throughout the session. We're looking at WTI futures up 5%, above $96 a barrel. Brent crude touching $103 a barrel, up 6%. Earlier, it was up at $105 a barrel earlier this morning. Taking a look also at some of the natural gas. Need to mention that one because that's important. Russia supplies Europe with a lot of natural gas. Much of it goes through pipelines through Ukraine, up 2%. Take a look at a 12-day chart here, up 19%. Also want to mention gold, which is higher, and palladium, which is also higher, up 3%. Palladium, Russia is the biggest exporter of that precious metal. I also should mention aluminum futures up 2%. You can see this dip right here. This is after a report that the Biden administration will not be targeting sanctions against aluminum imports from Russia, which are about 10%. And also looking at wheat futures, those are higher. Russia and Ukraine are both key suppliers of wheat. Looking at the sector action and where we're at right now, well, let's take a look at these travel stocks that you're seeing. The airlines are lower. I had mentioned crude oil higher. Well, airlines have quite a bit of their costs coming from jet fuel. Also, looking at the sector action, we're seeing financials that are losing the most right now, followed by consumer staples. Take a look here. Technology is losing the least, even though it is in the red. Part of this has to do with what's happening with the software space. We're seeing quite a bit of green in the software space and quite a bit of green when it comes to cybersecurity firms. We are seeing these cybersecurity companies which are higher on the day. Brian, Akiko?
Inez Ferre, thanks so much for that from the Nasdaq. Coming up, China toes the line. We're going to explain how officials are responding to Russia's attack on Ukraine and why it matters for the U.S. That's up ahead. Welcome back to Yahoo Finance Live. Well, Beijing is now weighing in on the Russian invasion of Ukraine, towing a very delicate line between Russia and Ukraine. China's foreign ministry spokesperson downplaying the suggestion that China was backing Russia, saying, unlike the U.S., China has no plans to provide military equipment to Russia. But, Brian, the spokesperson did stop short of calling this an invasion. She was pressed several times in this press conference, deflected those questions. And we're talking about China specifically because there are growing concerns about this relationship between China and Russia. Obviously, what's playing out in Russia, but also the concerns that China has its eye on Taiwan. Taiwan reporting military Chinese aircraft entering their air defense zone overnight. So there's a lot of heightened tensions there. Taiwanese President Tsai Ing-wen has called for increased vigilance with what's playing out in Ukraine, because a lot of people have looked at these parallels saying, well, is what's happening with Russia and Ukraine what China is eyeing with Taiwan? To which, Brian, China would say, look, it's different because Taiwan has always been a part of China as far as Beijing is concerned.
Yeah, just an increasingly complicated global picture here. And we even had guests on the show that when asked about the Russia-Ukraine conflict kind of extended that conversation to wanting to talk about Taiwan. But I think we just have to take a big step back here and just recognize that there isn't as much of a hook for China to move into Taiwan at this time. And the mounting tension between the two kind of areas has indeed been a story for decades, for a long time. But when we talk about Russia and Ukraine, we have to remember that the whole NATO aspect of all of this is an international element that it might be a bit absent from the China and Taiwan relationship. But again, largely when we talk about the commentary that we heard from China in response to Putin's announcement yesterday to move into Ukraine, not necessarily a surprise that China is not necessarily slapping the wrist of Russia because of the alliance that we know between President Xi Jinping and also with Russian President Vladimir Putin. Now, what does that mean within the context of what China wants to do with Taiwan going forward? I just don't know if there is a direct connection between the two. And I think we have to be very careful about not talking ourselves into a conflict like that. The international community is certainly watching and might want to bring those threads together. But I think we just have to recognize that the immediate issue right now is the humanitarian aspect of what's happening in Ukraine. We talk a lot about markets here, but just the amount of lives that are at stake here is something that can't be discounted and should be remembered as we talk about exactly what happened over the last 12 hours or so.
Yeah, Brian, I think it's certainly important not to conflate the two, as we've heard from many guests who've come on our show saying, well, look, Taiwan's going to be next. That's not necessarily how I think this is all going to play out. Of course, it is anybody's guess. But we should mention that specifically with China and Taiwan, I mean, China has always claimed that Taiwan is a part of China. Beijing doesn't see any reason to dispute whether, in fact, China or Beijing would need to move in. With that said, we're talking about Chinese planes moving into Taiwan's air defense zone. I mean, this has been a constant, and we've been following it, but this is not something that has necessarily escalated because of what's playing out in Ukraine. Now, we have heard from the Taiwanese president calling for vigilance, but it's important to note that this has been occurring on an almost regular basis, and that's why the U.S., since last year, has really been raising the issue about a potential incursion from China on Taiwan. So another story that we're watching, but of course, Brian, China is the big unknown here. We've had guests on who have set this expectation that when Russia gets hit even further on sanctions, China is going to step in to support Russia. And it's tough to say how far China is willing to go on that front.
And again, a very different story there, but we'll have to watch how all of that plays out. For right now, markets across the board remain in the red. Again, we're watching for President Biden's speech live at 1:30, which will be carried by the next show, and Alexis Christoforous and Karina Mitchell have you for those updates. We'll be right back after this quick break.
Good afternoon, everyone. I'm Alexis Christoforous here with Karina Mitchell, and a dramatic turnaround on Wall Street. Investors initially headed for the exits, pushing stocks sharply lower and lifting the prices of oil, gold, and bonds after Russian missiles and airstrikes hit Ukraine's capital, Kyiv, and more than a dozen other cities. President Biden expected to address the nation in about 30 minutes. Yahoo Finance will bring that to you live. Biden is expected to say that the world will hold Russia accountable for the invasion underway in Ukraine. He is also set to unveil new and more severe sanctions against Russia, including measures that could cut off Russia from advanced technology, new restrictions on large financial institutions, and sanctions on additional members of Russian President Vladimir Putin's inner circle, including Putin himself. Here you're taking a look at the markets. The Dow Industrials entered correction territory this morning and are still there, down now nearly 740 points. The Nasdaq was set for a bear market at the open, but has since pared much of its earlier losses. And of course, the S&P 500 slipped into correction territory earlier this week. Some investors clearly treating the earlier dramatic sell-off as a buying opportunity. Let's bring in Ines Ferre now, who is live for us at the Nasdaq for more on market reaction to the Russia invasion. And at least in terms of the Nasdaq, Ines, quite the turnaround.
That's right, quite the turnaround, and I'll get to that in just a second as to why. But let's take a look at first what's happening with commodities, because we have seen so much action when it comes to Brent crude, when it comes to WTI. Take a look at our Wi-Fi interactive board. We're watching Brent crude futures up 6%. We're also taking a look at WTI up more than 4%. WTI above $96 a barrel. Brent crude is up above $102 a barrel right now. Looking also at natural gas, up more than 2% over the last 12 days. Natural gas is up 19%. Remember that Russia provides more than a third of Europe's supply of natural gas. Some of that runs through pipelines in Ukraine. We're also looking at gold futures, which are up about 0.8%. I want to mention palladium because Russia is the biggest exporter of that precious metal. It's up more than 3% right now. And I do want to mention aluminum futures, which are higher, but take a look at this dip here. This is after a report that the Biden administration won't be targeting sanctions against aluminum imports from Russia. And finally, in the commodities market, we are also watching wheat futures, which are up today. And if you just take a look at a 6-day chart, up 17%. Remember that Russia and Ukraine are key suppliers of wheat. Looking at some of the movers today in the markets, we are watching some of the airlines that are under pressure. I had mentioned oil prices spiking, where, well, a big expense for the airlines is fuel jet costs. And looking at the sector action, all 11 sectors of the S&P 500 are in the red right now. We're watching financials, which are losing the most. We're also seeing consumer staples that are also dragging, but take a look at the ones that are losing the least. Technology being part of that. You've also got communication services. We had mentioned the Nasdaq, which had turned around a bit. Part of this has to do with what's happening with software stocks. We are seeing some green in the software space. Particularly, we're watching some of the cybersecurity names that you see here on the screen. During times of conflict, cybersecurity threats are high, and these stocks today are higher as well. Alexis, Karina?
All right, thanks so much for that, Ines Ferre, live for us there at the Nasdaq. We want to stick with the market reaction and bring in Lance Cannon now, portfolio manager at Hood River Capital. Lance, thanks for being with us today. I am curious what you've been doing today, given this very volatile stock market, and are you using the dramatic sell-off as an opportunity to go in and buy up some stocks that had high valuations, but now look a lot more attractive?
Yeah, well, first of all, thanks for having me. Pleasure to be here. Unfortunately, the events of today are nothing that I think anyone ever wants to see, but it does present buying opportunities. So we're a small cap manager here at Hood River, and we tend to look for opportunities that have inefficiencies that are placed on by the marketplace. And that's certainly what we're seeing with all the movement that we've had in the past 12 months, is that small cap has really been a great place to be, or will be a great place to be on a go-forward basis. And the reason why we think that is, if you look at a historic valuation standpoint, the Russell 2000 Growth Index is historically traded at a premium relative to the S&P 500. Today, that's trading at a discount. And so for us, we really view this as a great buying opportunity, to your point earlier, where you get the opportunity to buy stocks that have been beaten down, that are really great companies that you can own for a long period of time.
I'm wondering, though, if you're fielding calls or emails from clients and what they're telling you, are you seeing many of them wanting to add to cash positions, or is the trend toward let me have a little bit more exposure to this market?
So from a client standpoint, they're expecting us to be invested in the market and really kind of push towards finding the best opportunities that are available to us at any one given point in time. And so from this standpoint, we're looking at really great companies that we can invest in. One of those companies that we really like right now is Lovesac. This is a consumer company that makes modular couches. They're fast growing. They're growing at a high 20% type growth rate. And they've got expanding margins and they're growing their earnings. And so when you look at it from a valuation standpoint, this is a company that's trading at 14 times earnings over the next 12 months. And we think that there's opportunity for them to outperform those numbers and do even better than what they've projected and what they've provided to the market. And so that's one of the reasons why we really like it today.
I'm curious why not just Lovesac, but that industry is attracted to you right now in an environment where we have got high inflation that's only expected to go even higher given the events unfolding in Ukraine right now. Do you believe that consumers are still going to be spending robustly, in the months ahead?
That's a great point. And we do believe that the consumer is still positioned really strongly here. I mean, if you look at a lot of the data that's come out, while inflation has been high, we can't deny that. That's pretty evident. We feel that there's a great opportunity still available and that the consumer continues to be strong and shows that through their spending habits. And Lovesac's going to be a beneficiary of that. We think Celsius is another consumer name that we really like a lot, that you're seeing that happen as well. Their velocity in terms of the number of times they're turning over their product within the stores continues to increase, and the Nielsen data supports that. You see triple-digit type growth from this type of company. And again, it's another one of these stories where you've got expanding margins, growing earnings, and a valuation that seems very appropriate or relatively cheap to where it can be as we continue to move forward.
Would love to get your thoughts on the emerging markets. Don't know how much exposure you have there as a portfolio manager. We of course, and no surprise, saw the Russian index get obliterated today, down more than 30%. But elsewhere, if investors are looking for opportunities in EM, some are saying China could be the big safe haven, and other areas in Asia like Vietnam, Indonesia, who have less exposure to what's going on in Europe. What's your outlook on that?
That's a great question. Unfortunately, we're a small cap domestic manager, and we really kind of focus here on the U.S. So we don't really have a whole lot of view around what's going to happen from an EM standpoint, whether it's China or Russia or one of these other countries that are out there. But we view that the U.S. still has a lot of opportunity in itself, and think that's a really great place to be on a go-forward basis as well. We think there's a lot of things that line up for domestic small cap to really work, and we're really bullish on the opportunities that lie in front of us.
Lance, in 20 seconds, what do you expect the Fed to do next month, given what's happened in Russia? Do we get that interest rate hike? And if so, how big?
Oh, that's a great question. I think we'll get some type of interest rate hike. I think, given the data that's come out, there's definitely something that needs to happen from that standpoint. How much, that's hard to say. And it's not really something that I tend to focus on a lot. We're fundamental analysis here at Hood River. And so we tend to really focus in on what's driving our stocks from a fundamental basis, from a bottoms up standpoint. And so we really feel that, like, regardless of what's ever happening, our portfolio is well positioned to handle whatever the Fed decides to do, not only in the next 3 months, but over the next 6, 12, 18 months as well.
All right. Lance Cannon, a portfolio manager there at Hood River Capital Management. Thanks so much. And of course, Karina, we're going to be talking a little later on to some folks about what this might all mean for the Federal Reserve.
Okay, yes, Alexis, and we're going to stay focused on Russia aggression and coming up, how food prices could be impacted by the crisis in Ukraine. Stay tuned for that.
Welcome back. Well, we are awaiting comments from President Biden set to come at the bottom of the hour, and we'll bring those to you when they do happen. But ahead of that, markets on edge ahead of his comments on Russia and aggression. So taking a look at the major benchmarks now, the Dow is down 628 points. The S&P is down by 41 points, and the Nasdaq wavering today. It was in bear territory, then was positive, turned negative, and now just into positive territory once again, up by 7 points. And over to the yields market, bonds market, to take a quick look there, because Treasury prices surging while yields have been falling as investors flood into the bond market for safety. You can see the 10-year down to 1.93%. The 30-year is at 2.25%. All right, we will bring it back to the invasion of Ukraine and Russian aggression. I want to bring in our next guest, and let's talk about the potential impact of Moscow's assault on Ukraine on global food prices. Russia is the world's largest exporter of wheat, and here to help us weigh in, let's bring in Alan Holland from Kielvar, the CEO there. Alan, thank you so much for your time there. So wheat prices surged today, spiked 5% in Europe on this latest aggression. How critical are Russia and Ukraine to the global wheat supply, and who are the biggest recipients of their wheat?
So combined, Ukraine and Russia supply 30% of global wheat production. So they are very large players. So with the sanctions that have just been recently announced, there will be a scramble for alternative supplies, particularly in markets near to Russia and Ukraine. So the European market will be very anxious about this.
So we are waiting to hear what sort of sanctions will be imposed. The president set to speak shortly, but he did send out a tweet earlier saying they will be devastating. So I'm wondering, how could Russia react to this, escalation in sanctions, if you will? Would they halt wheat exports, do you think, to Europe at all? Is that something that you think they might do?
Yeah, there's likely to be a severe deterioration in the volume of wheat supplied into Europe, and that will lead to significant inflation in wheat prices and wheat futures as well.
So, what would a prolonged conflict do, if you will? What would happen to the supply and prices, particularly come harvest time? U.S. companies like Kellogg's have already complained that wheat inflation is weighing on it.
Yes, so I suppose many of the world's largest companies that depend on wheat supplied from Ukraine or Russia may have stores. So what will happen over time is that the volume in storage will be decreasing. And as it comes to the harvest time, when stores should be replenished, that will be a critical time to see if that wheat can be harvested and whether it can be exported or not. So there's huge uncertainty presently over what will happen in wheat markets, but also barley and rye and other commodities.
Inflation is at a 40-year high in this country. Flour-based goods up 10% just last month. What strain does that put on the consumer? And then what do you think happens to overall demand? Not just for wheat, but for grains in general.
I suppose the food supply chain wasn't as badly impacted as the supply chains for durable goods or semiconductors or automotive during the pandemic. But this crisis is likely to hit food supply chains hard. So what we will see is quite extreme inflation in any goods that depend on these raw materials and these commodities. So everything from bread to beer is likely to see price increases throughout the year and into next year and beyond.
The president has said that the USDA might have to step in and help produce more wheat to export. How likely do you think that is to happen? And how is the U.S. positioned as far as their own wheat production? Do they have ample supply? Are they able to do that?
There is a strong supply in the U.S. So it depends on, I suppose, the level of solidarity shown with the European market. And I think European politicians will be seeking assistance in whatever means that may be available from the US here.
And Alan, tell me, the cost of fertilizers have also skyrocketed due to higher crude prices, also needed for food production. So how does that sort of put further pressure on the price of supplies and food chain?
Yes, the natural gas is, I suppose, intrinsically connected to food prices because the fertilizers are produced using natural gas, and that so many different crops are heavily dependent upon these fertilizers. So the rapid inflation we've seen in natural gas prices in the last 12 months, has already been leading to inflation in food prices.
And Alan, so I'm wondering, what are you watching most closely now as to what next steps happen and how that affects production for wheat?
So I think that the sanctions and how that will constrain Russia's ability to export their goods is the key next step to watch, because Russia in itself is a huge exporter of a variety of commodities, from food grains, but also metals and natural gas, amongst others. So the degree to which those sanctions constrain Russia's ability to export will serve to increase inflationary pressure in Europe and America and other countries. So that's the next thing to watch out for.
Okay, we will have to leave it there. Alan Holland, Kielvar CEO, thank you so much for your perspective today. Alexis.
All right, thanks so much. Coming up next, more on how the market is reacting to Russia's invasion of Ukraine. Don't go away. Here is a live picture of the Dow Jones Industrial Average, the big board down at the New York Stock Exchange. The Dow is off more than 600 points, but better than where it was earlier when the Dow was down about 800 or off more than 2%. There are only 3 Dow stocks in the green out of the 30 on the index. That would be Salesforce, Microsoft, and Intel. The broader market, though, has really staged a stunning comeback. I should mention the Dow still in correction territory, meaning down 10% from its recent high. The Nasdaq was on par to close in bear market territory, but really turned things around and has now recouped nearly all of its losses. We are waiting for President Biden to speak just moments from now. He'll be speaking for the first time after Russia launched an invasion into Ukraine. Yahoo Finance's Jennifer Schoenberg here now with what we can expect President Biden to say. And we do know he will be announcing new, more severe sanctions against Russia.
Hi, Alexis. That's right. President Biden set to address the nation shortly on the U.S.'s latest response to Russia's escalation in terms of invading Ukraine. After speaking with his G7 counterparts and meeting with members of his National Security Council earlier today, the president expected to unleash a harsh set of new sanctions while also walking through steps of how the U.S. will coordinate with Western allies on a comprehensive sanctions package. Now, there are reports that the new sanctions will not target the energy sector. The White House has said it is prepared to bring not just new sanctions, but export controls on the back of the escalation in Russia's actions. SWIFT was not in that first sanctions package, but is still on the table. Also on the table, potentially sanctions around Vladimir Putin himself. White House officials are prepared to target Russia's financial sector and have said, quote, no Russian financial institution is safe. Now, of course, the European Union unleashing its second set of sanctions earlier today, freezing out Russia's assets and cutting off technology exports to Moscow. We'll hear from the president shortly on what these next actions will be. Back to you.
And then I want to ask you really quickly, it sounds like there are still some tools in the toolbox if they need to escalate even further, even though we're still waiting to hear the full extent of sanctions announced, hopefully in a short time from now. But Biden also said that aluminum is off the table for right now. We did see that touch a record high today.
Yeah, it's interesting. And I kind of want to go back to what I said just a bit ago on the energy piece, because I think there may be a concern there that as the administration tries to sanction Russia, they want to be careful not to put further upward pressure on energy prices, which could trickle down to the consumer in the form of higher prices at the gas pump, as well as through the supply chain, which is already under pressure. Biden has said that he is speaking with energy producers on ways to mitigate these risks, though I think it's also important to note that Germany halted the Nord Stream 2 pipeline, that gas pipeline that runs from Russia to Europe. And that was an $11 billion endeavor. So a chunk of change there, certainly squeezing the Russian economy, which is highly dependent on oil.
All right, Jennifer Schoenberger, thanks so much for that. For more on the pending sanctions that we're expected to hear more about from President Biden in just moments from now, I want to bring in Ian Kelly, former U.S. ambassador to Georgia and currently ambassador in residence at Northwestern. Ian, thanks so much for making time for us today. So, look, we don't know exactly what President Biden is going to say with regards to these new, more severe sanctions. But to your mind, what needs to be done by President Biden and our allies to force Putin to retreat?
Well, I mean, I think that it's very important that the president and our European allies follow through on our warning to Putin that we would impose a massive and painful sanctions package. I don't really think that necessarily will deter Putin from continuing his full invasion of Ukraine. I think that he's already kind of calculated these sanctions into his plans. They have, of course, a large rainy day fund, over $600 billion, I think, which they will use to defend the ruble and compensate some of the oligarchs who support Putin. But in a broader sense, it's really time for the West to say no more. The West didn't do enough with the invasion of Georgia in 2008. They did a little more in 2014 with the annexation of Crimea, but those were very targeted sanctions, did not really target the Russian financial sector, as these sanctions, I believe, will. So it's time to show both the Putin regime and the Russian people that this direction that he's headed into, this massive aggression, this redrawing of borders, the shredding of the European security framework, is really leading them down the road to isolation and impoverishment. So I think this is really the time that we just have to say, no more. We will do everything to stop you from continuing down this terrible, terrible road.
You have to wonder, how much sanctions will have an impact on Putin, because as you say, he seems very laser focused on changing the regime in Ukraine. And I'm wondering, how important is it to inflict personal sanctions on Putin and his inner circle? And at what point do Russians sort of stand up and say, this isn't for us, this is not what we wanted, because these sanctions are going to hurt them more than anyone else?
Yeah, exactly. And I think that this action of Putin really undermines, I think, his own regime's security. He has portrayed himself to the Russian people as somebody who is going to stand up for Russians, for Russian security. But what we're seeing in Moscow today are people going to banks, lining up at ATM machines, trying to get dollars because they see the ruble in free fall. And the conclusion they're going to draw is this man is not necessarily defending my economic security. And I think we'll start to see an erosion of support for Putin.
Ian, what retaliatory actions do you expect Putin to take? I mean, I know up until very recently, he had promised not to cut off oil supplies. If you look at the way the oil market has been reacting, it doesn't seem like traders are believing him. But what might he do in retaliation for these more severe sanctions?
Well, I think we can feel very confident that he's not going to shut off oil and gas supplies. I mean, that oil and gas exports account for around half of his budget. So I don't see that happening. The thing is with Vladimir Putin is when he reacts, he overreacts. So I think we can count on some asymmetrical moves in the economic area. We're already seeing, of course, cyber attacks on the Ukrainian government and Ukrainian banks. I'm pretty confident that the Biden administration is working with the American financial structure to try and forestall such attacks. But I think right now NATO planners are looking at how to shore up deterrence for NATO members who are on the front line. And of course, those frontline states are the Baltic states, the 3 Baltic states, Poland, and Romania. And of course, Poland and Romania share large borders with Ukraine. So Vladimir Putin loves to be unpredictable. So it's impossible to predict what he will do, but he will do something.
Ian, very quickly, want to ask you, the UK earlier pushed for saying that SWIFT payments for Russia should be ended. And then Germany's Olaf Scholz said that's going too far. Do you think that SWIFT payments should be on the table as a sanction? And where do you think the US stands on that?
It's very hard for me to say. Up to now, the Biden administration has put a real premium on doing these kinds of sanctions together. So if there is one major European economy that doesn't want to do something like SWIFT, I think it's unlikely that we will do that. And I think that, again, this is being cut off from SWIFT, I think is something that they've already taken into account in terms of using alternative ways to do their trading. I really lean on the doing as much as possible in one big action, and I hope it's today. But I do understand the need to do things in solidarity to show that we, the U.S. and the transatlantic community, are united in pushing back against Putin.
All right, Ian Kelly, former U.S. ambassador to Georgia. Thanks so much for your time today. And again, just a reminder, we are waiting for comments from President Biden. He's expected to address the nation from the White House moments from now. Yahoo Finance will bring that to you live, and we'll learn much more there, Karina, about these new, more severe sanctions against Russia.
Absolutely. And while we're waiting for that, more market reaction to the unfolding situation in Ukraine ahead. Stay with us. Welcome back to Yahoo Finance. We are awaiting comments from President Biden from the White House at any moment. We'll bring those to you. Want to get you a quick check of the markets ahead of that. The Dow is off session lows, down 689 points. The S&P down by 46. The Nasdaq doing a pretty nice turnaround at the moment. It is up into positive territory after starting the session in a bear market. It's up by 5 points now. All right, want to bring in our next guest to discuss more market analysis as the crisis in Ukraine expands. Let's bring in Tom Essay, founder and president of Sevens Report Research. Tom, it's been a really interesting 24 hours. I want to start with commodity prices. Given the surge there, oil in particular, is that something that is going to be inflationary, or could it be disinflationary depending on the duration?
I think it will be inflationary. It's just a question of how much, right? So this is coming at a very inopportune time because the global commodity markets were already stretched, right? From the pandemic reopening, from some of the underinvestment and lack of supply chain capabilities. And now we're throwing in a whole bunch of geopolitical risk premium on top of virtually every commodity. And, we're all focused on oil, but it's not just oil, it's aluminum, it's wheat, it's other grains, it's kind of everything. So it will be inflationary. I think the question is, how long does this conflict last? And then how much damage does that high inflation do to growth going forward?
And so then how does the Fed react to all of this that's going on? Does it have any choice but to hike, given, the high inflation concerns, stagflation now coming into the conversation by some, and, really strong labor conditions?
Yeah, the Fed's reaction is that they will have no reaction, I think. There's nothing the Fed can do to help bring about peace in Russia and Ukraine. We have an inflation problem that's evident to everyone. We just had 7% Q4 2021 GDP, and we had very low unemployment. So the Fed will raise rates. I think they probably raised 25 in March, and then probably go at that rate for the next couple of months. Perhaps if the conflict drags on and we see really continued elevated inflation and we start to see a slowing of growth, the Fed could hold off on some balance sheet reduction, but that's a problem for the summer. In the meantime, the Fed will not change course, and anybody who's hoping they're going to be dovish, I'm afraid you'll be disappointed.
Yeah, 50 basis points, though, off the table, it seems like. But then are you worried at all of the Fed making a mistake? Because hiking into high inflation, you see energy prices, oil prices soaring past $100 a barrel and weakening growth down the road.
Yeah, I am quite nervous about a Fed mistake, because the problem is there's a mistake on either side, right? If they don't hike and this conflict drags on, then we are going to have significantly worse inflation, right? And that is going to become a problem for growth. And the only solution to that will be to hike even later when the economy can't stand it. On the other side, if they hike too quickly, if they get too aggressive into, again, the natural slowing of growth, then maybe they crash the economy. So there is a pretty narrow channel that they are going to have to navigate here. It has gotten more difficult in the last 24 hours. There's no doubt about it. I am not envious of the Fed right now, but we have to hope that they chart the right course here, because there is danger on either side.
Tom, what's your exposure to the emerging markets at the moment? Mark Mobius, who we know is a big EM investor, was talking about how China is now a safe haven amidst all of this chaos. What are your thoughts on that?
I tend to agree with him, although obviously that's only for people who can really stomach a lot of volatility. If we look around the world and we say, hey, which government is stimulating their economy? Which government is really actively supporting economic growth? China comes to the top of the list. Right now, they are coming out of a pretty deep valley, and they have had economic problems. They have a major property problem, but that government is very aggressively stimulating the economy. So I think that can help China outperform. Now, we have to have geopolitical calm. We can't be having a war in Ukraine and Russia ongoing, hopefully not spreading beyond those borders, and expect the emerging markets to trade well. So I think we have to have geopolitical calm, but in that environment, yes, China can do well this year.
Tom, I want to ask you, cyclicals really do generally very well up until the first couple of rate hikes, and then, some of the gains sort of ease off. So what are the best bets now? Where should people be looking to allocate, or should they be sitting in some cash at the moment?
I think that cyclicals are still a good place to go. I mean, from an asset allocation standpoint, obviously commodities have a huge tailwind. I understand the commodity producing equities, your XLEs, your GDXs. I understand they've had big moves, but look, if this conflict really extends out a couple months, they will go much, much, much higher. So don't count them out just because they rallied. Also, if you go to your industrials, if you go to your financials, I know they're getting hit today on some concerns, but they're generally solid. I think that's where you can go to try and get some exposure to still strong growth. You're absolutely right. Usually it takes several rate hikes to cool the economy. I don't expect it'll be different this time.
And then, so where in commodities do you like? Because we've seen precious metals like gold soar much, higher than $1,930, I think was the last time I looked today.
Yeah, I think you can spread your money around. I think this is a whole commodity complex bull market. Energy, as long as there is geopolitical angst, will probably do the best, but you will also encounter the most volatility. Gold has a pretty strong tailwind because this geopolitical concern, call it, is not going away anytime soon. Even if the hostilities stop, which hopefully they do soon, there's still going to be a lot of uncertainty. And then finally, looking at something like a DBA, which gives you more targeted grain exposure. Between Russia and Ukraine, they export almost 30% of the world's wheat. That is going to suffer, frankly, from this conflict, regardless of how quickly or long it goes. So I think it's a whole commodity complex. Something like a DBC or a DBA is an easy way to go.
Another what investors were calling digital gold, right? Cryptocurrencies, in particular Bitcoin, just getting slammed here. I'm looking at Bitcoin right now down 5% below $36,000. This is a real geopolitical test, I guess, for cryptocurrencies. They haven't lived through anything like this since they came into existence. What's your take on the crypto sector right now? And is this perhaps a buying opportunity?
Alexis, great insight. I think that there will be a lot of Bitcoin owners who are quite disappointed this morning, and I think that they will realize that Bitcoin, while sort of from a theoretical standpoint, this is supposed to be an asset that should do well in this type of environment, there is a lot of speculative money that flowed into the crypto space solely for the momentum. So you don't have a lot of people who bought this as sort of a non-hedged and non-correlated asset. They bought it because it was going up, and now it is going down, and they are selling it. And I think that this is a major test for Bitcoin. I think Bitcoin is going to fail this test. It's part of a maturity process. It's not mature enough yet to go through a major global conflict and really hold up value. Gold has been through this, countless times over the decades and centuries. So it's doing exactly what it's supposed to do. Maybe one day Bitcoin gets there, but I think it's not mature enough yet.
Tom, I want to ask you also really quickly. So oil spiking, right? Inflation at 7-year highs. Some say at 40-year highs at 7%. Some say it could hit 10%. How resilient is the consumer in all of this with real wages in negative territory?
It's been resilient, but that resilience is going to wane. This is the key, right? At what point does inflation get high enough that it begins to contract growth? I do not think we are there yet, but I think we are getting close. I think by the summer, if we don't get some relief, it becomes a problem.
Okay, Tom, I'm going to interrupt you there. We do have President Biden at the White House at the podium. Let's tune into what he has to say.
Provocation, without justification, without necessity. This is a premeditated attack. Vladimir Putin has been planning this for months, as we've been saying all along. He moved more than 175,000 troops, military equipment, and positions along the Ukrainian border. He moved blood supplies into position and built a field hospital, which tells you all you need to know about his intentions all along. He rejected every good faith effort the United States and our allies and partners made to address our mutual security concerns through dialogue to avoid needless conflict and avert human suffering. For weeks, we have been warning that this would happen. And now it's unfolding largely as we predicted. In the past week, we've seen shelling increase in the Donbass, a region in eastern Ukraine controlled by Russian-backed separatists. The Russian government has perpetrated cyber attacks against Ukraine. We saw a staged political theater in Moscow, outlandish and baseless claims that Ukraine was about to invade and launch a war against Russia, that Ukraine was prepared to use chemical weapons, that Ukraine committed a genocide. Without any evidence, we saw a flagrant violation of international law in attempting to unilaterally create 2 new so-called republics on sovereign Ukrainian territory. And at the very moment that the United Nations Security Council was meeting to stand up for Ukraine's sovereignty, to stave off invasion, Putin declared his war. Within moments, missile strikes began to fall on historic cities across Ukraine. Then came the air raids, followed by tanks and troops rolling in. We've been transparent with the world. We've shared declassified evidence about Russia's plans and cyber attacks and false pretexts so that there could be no confusion or cover-up about what Putin was doing. Putin is the aggressor. Putin chose this war, and now he and his country will bear the consequences. Today, I'm authorizing additional strong sanctions and new limitations on what can be exported to Russia. This is going to impose severe cost on the Russian economy, both immediately and over time. We have purposely designed these sanctions to maximize the long-term impact on Russia and to minimize the impact on the United States and our allies. And I want to be clear, the United States is not doing this alone. For months, we've been building a coalition of partners representing well more than half the global economy. 27 members of the European Union, including France, Germany, Italy, as well as the United Kingdom, Canada, Japan, Australia, New Zealand, and many others, to amplify the joint impact of our response. I just spoke with the G7 leaders this morning, and we're in full and total agreement. We will limit Russia's ability to do business in dollars, euros, pounds, and yen to be part of the global economy. We'll limit their ability to do that. We're going to stunt the ability to finance and grow the Russian military. We're going to impose major, and we're going to impair their ability to compete in high-tech 21st century economy. We've already seen the impact of our actions on Russia's currency and the ruble, which early today hit its weakest level ever in history. The Russia stock market plunged today. The Russian government borrowing rate spiked by over 15%. In today's actions, we've now sanctioned Russian banks that together hold around $1 trillion in assets. We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself, cut it off from the U.S. financial system. And today, we're also blocking 4 more major banks. That means every asset they have in America will be frozen. This includes VTB, the second largest bank in Russia, which has $250 billion in assets. As promised, we're also adding the names to the list of Russian elites and their family members that we're sanctioning as well. As I said on Tuesday, these are people who personally gain from the Kremlin's policies, and they should share in the pain. We will keep up this drumbeat of those designations against corrupt billionaires in the days ahead. On Tuesday, we stopped the Russian government from raising money from U.S. or European investors. Now we're going to apply the same restrictions to Russia's largest state-owned enterprises, companies with assets that exceed $1.4 trillion. Some of the most powerful impacts of our actions will come over time as we squeeze Russia's access to finances and technology for strategic sectors of its economy and degrade its industrial capacity for years to come. Between our actions and those of our allies and partners, we estimate that we'll cut off more than half of Russia's high-tech imports. It will strike a blow to their ability to continue to modernize their military. It'll degrade their aerospace industry, including their space program. It'll hurt their ability to build ships, reducing their ability to compete economically. And it will be a major hit to Putin's long-term strategic ambitions. And we're preparing to do more. In addition to the economic penalties we're imposing, we're also taking steps to defend our NATO allies, particularly in the East. Tomorrow, NATO will convene a summit. We'll be there to bring together the leaders of 30 allied nations and close partners to affirm our solidarity and to map out the next steps we will take to further strengthen all aspects of our NATO alliance. Although we provided over $650 million in defensive assistance to Ukraine just this last year, let me say it again. Our forces are not and will not be engaged in the conflict with Russia in Ukraine. Our forces are not going to Europe to fight in Ukraine, but to defend our NATO allies and reassure those allies in the East. As I made crystal clear, the United States will defend every inch of NATO territory with the full force of American power. And the good news is, NATO is more united and more determined than ever. There is no doubt that the United States and every NATO ally will meet our Article 5 commitments, which says that an attack on one is an attack on all. Over the past few weeks, I ordered thousands of additional forces to Germany and Poland as part of our commitment to NATO. On Tuesday, in response to Russia's aggressive action, including its troop presence in Belarus and the Black Sea, I've authorized the deployment of ground and air forces already stationed in Europe to NATO's eastern flank allies, Estonia, Latvia, Lithuania, Poland, and Romania. Our allies have also been stepping up, adding the other allies, the rest of NATO, adding their own forces and capabilities to ensure collective defense. And today, within hours of Russia's unleashing its assault, NATO came together and authorized and activated an activation of response plans. This will enable NATO's high readiness forces to deploy and when and where they are needed to protect our NATO allies on the eastern boundaries of Europe. And now I'm authorizing additional U.S. force capabilities to deploy to Germany as part of NATO's response, including some of the U.S.-based forces that the Department of Defense placed on standby weeks ago. I've also spoken with Defense Secretary Austin and Chairman of the Joint Chiefs, General Milley, about preparations for additional moves should they become necessary to protect our NATO allies and support the greatest military alliance in the history of the world, NATO. As we respond, my administration is using the tools, every tool at its disposal, to protect American families and businesses from rising prices at the gas pump. You know, we're taking active steps to bring down the cost, and American oil and gas companies should not exploit this moment to hike their prices to raise profits. You know, in our sanctions package, we specifically designed to allow energy payments to continue. We are closely monitoring energy supplies for any disruption. We've been coordinating with major oil producing and consuming countries toward our common interest to secure global energy supplies. We are actively working with countries around the world to elevate collective release from the strategic petroleum reserves of major energy consuming countries. And the United States will release additional barrels of oil as conditions warrant. I know this is hard and that Americans are already hurting. I will do everything in my power to limit the pain the American people are feeling at the gas pump. This is critical to me. But this aggression cannot go unanswered. If it did, the consequences for America would be much worse. America stands up to bullies. We stand up for freedom. This is who we are. Let me also repeat the warning I made last week. If Russia pursues cyber attacks against our companies, our critical infrastructure, we are prepared to respond. For months, we've been working closely with the private sector to harden our cyber defenses, sharpen our ability to respond to Russian cyber attacks as well. I spoke last night to President Zelensky of Ukraine, and I assured him that the United States, together with our allies and partners in Europe, will support the Ukrainian people as they defend their country. We'll provide humanitarian relief to ease their suffering. And in the early days of this conflict, Russia propaganda outlets will keep trying to hide the truth and claim success for its military operation against a made-up threat. But history has shown, time and again, how swift gains in territory eventually give way to grinding occupations, acts of mass civil disobedience, and strategic dead ends. The next few weeks and months will be hard on the people of Ukraine. Putin has unleashed a great pain on them, but the Ukrainian people have known 30 years of independence. They have repeatedly shown that they will not tolerate anyone who tries to take their country backwards. This is a dangerous moment for all of Europe, for the freedom around the world. Putin has committed an assault on the very principles that uphold the global peace. But now, the entire world sees clearly what Putin and his Kremlin allies are really all about. This was never about a genuine security concerns on their part. It was always about naked aggression, about Putin's desire for empire by any means necessary, by bullying Russia's neighbors through coercion and corruption, by changing borders by force, and ultimately by choosing a war without a cause. Putin's actions betray his sinister vision for the future of our world, one where nations take what they want by force. But it is a vision that the United States and freedom-loving nations everywhere will oppose with every tool of our considerable power. The United States and our allies and partners will emerge from this stronger, more united, more determined, and more purposeful. And Putin's aggression against Ukraine will end up costing Russia dearly, economically and strategically. We will make sure of that. Putin will be a pariah on the international stage. Any nation that countenances Russia's naked aggression against Ukraine will be stained by association. When the history of this era is written, Putin's choice to make a totally unjustifiable war on Ukraine will have left Russia weaker and the rest of the world stronger. Liberty, democracy, human dignity, these are the forces far more powerful than fear and oppression. They cannot be extinguished by tyrants like Putin and his armies. They cannot be erased by from people's hearts and hopes by any amount of violence and intimidation. They endure. In the contest between democracy and autocracy, between sovereignty and subjugation, make no mistake, freedom will prevail. God bless the people of a free and democratic Ukraine, and may God protect our troops.
Mr. President.
Associated Press, Zeke.
Do you have any plans to speak with President Putin at this point, and what interactions have you had with the Russian government?
I heard the first part. Do I have any plans to speak with Putin at this point, and what?
What communications have you had with the Kremlin as far as military operations in Ukraine and making sure this does not spiral into a larger conflict?
Well, it's a large conflict already. The way we're going to ensure it's not going to aspire to a larger conflict is by providing all the forces needed in the Eastern European nations that are members of NATO. NATO is more united than it's ever been, and I have no plans to talk with Putin.
Mr. President.
Wall Street Journal, Tarina.
Mr. President, you didn't mention SWIFT in your sanctions that you announced. Is there a reason why the U.S. Isn't doing that? Is there a disagreement among allies regarding SWIFT and whether Russia should be allowed to be a part of it?
The sanctions that we proposed on all their banks have of equal consequence, maybe more consequence than SWIFT, number one. Number two, it is always an option, but right now that's not the position that the rest of Europe wishes to take. Cecilia Vega, ABC.
Sir, sanctions clearly have not been enough to deter Vladimir Putin to this point. What is going to stop him? How and when does this end? And do you see him trying to go beyond Ukraine? And a second question I'll just give to you now. This statement that he gave last night, the threat that he gave, the West will face consequences greater than any you have faced in history. Is he threatening a nuclear strike?
I have no idea what he's threatening. I know what he has done, number one. And number two, no one expected the sanctions to prevent anything from happening. It has to show, this is going to take time, and we have to show resolve. So he knows what's coming. And so the people of Russia know what he's brought on them. That's what this is all about. This is going to take time. It's not going to occur. He's going to say, oh my God, these sanctions are coming. I'm going to stand down. He's going to test the resolve of the West to see if we stay together. And we will. We will, and it will impose significant costs on him.
Will he go beyond Ukraine, sir? Do you see him going?
Yes.
Thank you. Two topics, just really quick. First, markets are down and gas prices are up. I know you always stress the difference between Wall Street and Main Street, but everybody seems to be in for some economic pain. How economically painful is it going to get for people in this country? And I do have one more question.
First of all, there's no doubt that when a major nuclear power attacks and invades another country, that the world is going to respond, and markets can respond all over the world. So there's no doubt about that, number one. Number two, the notion that this is going to last for a long time is highly unlikely as long as we continue to stay resolved in imposing the sanctions we're going to impose on Russia, period. What's the next question? I'm sorry.
The next question is, did you underestimate Putin, and would you still describe him the way that you did in the summer as a worthy adversary?
At the time, he was, I made it clear, as an adversary, and I said he was worthy. I didn't underestimate him. And I've read most of everything he's written. Did you read I shouldn't, I'm not a wise guy. You heard the speech he made, almost an hour's worth of speech is why he was going into Ukraine. He has much larger ambitions in Ukraine. He wants to, in fact, reestablish the former Soviet Union. That's what this is about. And I think that his ambitions are completely contrary to the place where the rest of the world has arrived.
And with that, with his ambitions, you're confident that these devastating sanctions are going to be as devastating as Russian missiles and bullets and tanks?
Yes, Russian bullets, missiles, and tanks in Ukraine. Yes, I am.
Thank you, President Biden. If sanctions cannot stop President Putin, what penalty can?
I didn't say sanctions couldn't stop him.
You've been talking about the threat of these sanctions for several weeks now.
Yes, but the threat of the sanctions and imposing the sanctions and seeing the effect of the sanctions are two different things. They're two different things. And he's going to begin to see the effect of the sanctions.
And what will that do? How will that change his mindset here, given he's
because
attacking
it will so
Ukraine
weaken his country that he'll have to make a very, very difficult choice as to whether to continue to move toward being a second-rate power or, in fact, respond.
You said in recent weeks that big nations cannot bluff when it comes to something like this. You recently said that the idea of personally sanctioning President Putin was on the table. Is that a step that you're prepared to take? And if not,
it's not a bluff, it's on the table.
Sanctioning President Putin?
Yes.
Why not sanction him today, sir?
Mr. President?
Why not sanction him today, sir?
Mr. President, if I can, you detailed some severe and swift new sanctions today and said the impact it will have over time. But given the full-scale invasion, given that you're not pursuing disconnecting Russia from what's called SWIFT, the international banking system, or other sanctions at your disposal, respectfully, sir, what more are you waiting for?
Specifically, with the sanctions we've imposed exceed SWIFT. The sanctions we imposed exceed anything that's ever been done. The sanctions we imposed have generated 2/3 of the world joining us. They are profound sanctions. Let's have a conversation in another month or so to see if they're working. Yes.
Can I ask you about Zelensky? Sir, you spoke to Vladimir Zelensky yesterday, sir. You spoke to Vladimir
What's the risk that we are watching the beginning of another Cold War, and is there now a complete rupture in U.S. and Russian relations?
There is a complete rupture right now in U.S.-Russian relations if they continue on this path that they're on. And in terms of a Cold War, that depends. You have the vast majority of the rest of the world in total opposition to what he's doing, from Asia to South America to Europe to around the world. And so it's going to be a cold day for Russia. The idea, you don't see a whole lot of people coming to his defense.
And are you, if I could follow up, sir, are you urging China to help isolate Russia? Are you urging China to help isolate Russia?
I'm not prepared to comment on that at the moment. No. Yeah. No. He's had his hand up a long time.
Thank you, Mr. President. How concerned are you that Putin wants to go beyond Ukraine into other countries and the U.S. will have to get involved if he moves into NATO countries?
Well, if he did move into NATO countries, he will be involved. We will be involved. The only thing that I'm convinced of is if we don't stop now, he'll be emboldened. If we don't move against him now with these significant sanctions, he will be emboldened. Look, well, anyway.
Can you talk anything more about your conversation? Mr. President.
Why not sanction Putin directly today?
I'm sorry, I can't hear you.
Sir, India, which is a major defense partner of the United States, is India fully with you on the issue of Ukraine and Russia?
Does the Defense Department of the United States?
Sir, India is one of your major defense partners. Is India fully in sync with the United States on Russia?
We're in consultation with India today. We haven't resolved that completely.
One more question.
Okay, thank you all very much. Thank you.
All right, there you have it, President Biden addressing the nation with, as he promised, new, more severe sanctions. And we've been watching the markets as President Biden's been speaking. And as you can see, the Nasdaq, which was on par for falling into bear market territory this morning, has now turned things around. It is now in the green by nearly 100 points. The Dow well off its session lows, now down 500 points, and the S&P 500 down just 24. President Biden calling this invasion a premeditated attack, said the invasion is a flagrant violation of international law, and said that Vladimir Putin is the aggressor, that Putin chose a war without a cause, and that he and his country will bear the consequences. And then he went on to lay out some new, and in his words, more severe sanctions against Russia. Want to get to Yahoo Finance's Jen Schonberger now for a recap of what we just heard. Jen?
Alexis, a very high, broad, overarching speech from the president there. As you mentioned, President Biden calling the invasion a, quote, premeditated attack and announcing new sanctions on Russia. The U.S. and the West looking to take a long-term approach to squeeze Russia. The G7 and the U.S. are in full agreement to limit Russia's ability to do business in dollars, yen, euros, what have you. They say the U.S. has cut off Russia's largest bank from the U.S. financial system. The U.S. has now frozen out every Russian bank from the U.S. And together, that's about $1 trillion in assets. Now, the U.S. will also apply restrictions to state-owned enterprises. Those actions and the impact of those actions, I should say, will be borne out over time. The president says it will degrade Russia's space industry and that they will cut off more than half of Russia's tech exports. The president also saying that the actions today are the equivalent of cutting off SWIFT and that right now European allies don't want to pursue that option. The president also saying that sanctioning Putin himself remains on the table. Also, other actions on the military front, the U.S. looking to bolster troops for that NATO alliance and send more over there to help our allies. The president saying he is talking with the Department of Defense about sending potentially more troops to Germany as a backstop there as well, and authorize more ground troops and air force to the Baltic states as well. Lastly, just want to note that he sent a warning to American oil and gas companies saying that they should not exploit this moment and put upward pressure on energy prices. So a lot of actions there, a little bit short on specifics, though, and the president also adding that he has no plans to speak with Vladimir Putin at this time. Alexis?
And then what did he say as far as what Americans should expect to feel? He said he wanted to minimize the pain, but that might be impossible not for there to be some repercussions, right?
Yeah, absolutely. The president reiterated this afternoon that he has been speaking with oil producers around the world to make sure that they can try to mitigate the impact of any potential fallout on oil prices, which are already high, which are trickling down to American consumers at the pump, and of course trickling through supply chains and impacting the prices there as well. The president says if there is any impact on supply, the U.S. will tap those special reserves to offer or roll out more oil to try to balance out the market.
All right, Jen Schonberger, thanks so much for that. President Biden calling these sanctions profound, and he said it's worse than kicking Russia out of the Swiss international banking system. Some of the reporters there putting questions to Biden, perhaps not in total agreement. All right, want to switch gears for a moment now and talk about cyber attacks in retaliation for these new, more severe sanctions. Ukraine said it suffered a cyber attack last week that was the worst of its kind in Ukrainian history, thanks to Russia. And now there are warnings of a global spread of these attacks. I want to bring in Chris Pearson, CEO of Black Cloak and a former member of 2 Department of Homeland Security cybersecurity committees. Thanks so much for being with us, Chris. I'm just curious, to your mind, what you think are the most vulnerable companies, governments right now that would be targeted by Vladimir Putin?
Thanks. Well, obviously, a lot of the attention is going to be on those items, those agencies that are actually within the Ukraine. It will probably be, really in terms of 3 different areas. First, on the actual citizens, on the folks within the Ukrainian borders, in terms of psychological disinformation, information warfare campaigns. Your money is not safe. Your electricity is not safe. Those types of things, and a lot of propaganda. That's all going to be much more sent much more speedily these days through social media and all the rest. Second, we're going to see a denial of use, denial of service attacks for major telecommunication, internet infrastructure operators within the Ukrainian area. And third, we're going to see some destructive attacks. We are going to see things that have been long planted malware inside of different agencies, could be things related to aviation and defense, energy, banking, once again, internet and telecom, coming to life and potentially either wiping and destroying, degrading, or even corrupting data that exists within Ukraine to allow Russian troops and Russian operators to operate much more effectively within those borders. Could leak out beyond that.
Chris, NBC News reporting just a short time ago that President Biden has been given several options that the U.S. can take in terms of using our own cyber weapons against Russia, perhaps maybe in a preemptive strike before we see Russia attack some of our infrastructure, which we saw them do with the Colonial Pipeline, which we saw them do with JBS, our huge meat supplier. Among some of the options, disrupting internet connectivity across Russia, shutting off electric power, and tampering with railroad switches that would hamper Russia's ability to resupply its military forces. Do you think that that would be the right move on the part of the U.S.?
I mean, from a political perspective, there are many things you have to weigh. One of the biggest things that we, the United States, have to weigh are throwing stones when we also, too, live in a glass house. So really going ahead and upping the ante and upping the different fervor that's happening right now is probably not something that's going to be conducive to talks with Russia, to talks with our allies. We have to be very, very careful here when or if the United States was ever to levy cyber weapons against general infrastructure. In the United States alone, our critical infrastructure, 85% of it is within the hands of private sector companies. That's our gas, our roadways, transportation, telecom, all of that. Private sector companies. So if we're going to throw cyber weapons across the pond, so to speak, that's something we have to be very careful about in terms of it coming back to us. Everything, every single company that exists today rides on cyber. It rides on those ones and zeros and can be impacted. There may be a point in time where, as part of a broader push and a coalition, that things are upped in terms of the attacks from different member states towards Russia. But I don't think we've reached that point in time yet, and it would be extraordinarily unwise to really escalate things out of control.
I wonder how well prepared, though, Vladimir Putin's usual suspects, if you will, the usual targets are, because these cyber attacks are nothing new to them, especially in Ukraine. We also saw the UK build up a formidable cyber defense force, not just against Russia. And I'm wondering where you would put America in all of that. Are we best prepared? Have we learned our lesson from past cyber attacks from Russia?
But the fact of the matter is that a dedicated adversary, especially at the nation state level, is going to get past cyber defenses for both government and private sector companies. If you have a sustained, dedicated, advanced, persistent threat that is targeting you, there will be a way to get in there. We've seen a number of different things over the years, and so has Ukraine. Back to 2015 and 2016, we saw disruption energy attacks there. And even though there have been many years in between, still the infrastructure is risky. And from a cybersecurity perspective, there are ways in, there are avenues in. So yes, many countries around the world, many cities have taken cybersecurity much more seriously. But for a dedicated attack and a dedicated adversary, there are still going to be ways in. Nothing is 100% in terms of cybersecurity. So we really do need to weigh that. But there are a lot of things that companies here in the US can do, private sector companies can do. There are a lot of things that can happen in terms of government sector companies as well globally to make sure that they are really fortifying their defenses. So it's not something that is without a solution, but it is something that we have to be very careful about. And Russia is one of those top operators globally. Russia, China, Iran, the United States, all of these are tier one players and operators within the cybersphere.
Yeah, to be continued for sure. Chris Pearson, CEO over there at Black Cloak, thanks so much for your time. Karina?
Okay, I want to bring you some market reaction after the president's comments. Let's bring in for that our next guest, Kathy Entwistle from Morgan Stanley, the managing director there. Kathy, thank you so much for joining us. So the S&P is cutting its losses, the Nasdaq trading higher as traders assess, the Russia-Ukraine crisis that is ongoing. Just your reaction to some of the comments from President Biden, and if you think those sanctions went far enough, because markets are getting a little bit of a lift after his comments.
Yeah, I think that's a great point. I think that we're not that surprised by what President Biden said. And to see the reaction, I'm not that surprised either, because a lot of the uncertainty and the fear have been like sort of boiling up over the last couple of weeks. And now we see what's happening and we have a path to where we're going. So that doesn't surprise me. I think what would have surprised me is like something more severe, and then the market reaction to that. Really, although we have a lot of fear about Russia and Ukraine and what's going on, and there are a lot of issues as spoken about with cyber, and there's physical war, there's cyber war. But at the end of the day, I think this has just been almost like a reaction, or it's ignited something that was already existing under the surface in the markets, meaning that there were already fundamental issues that were going on in the markets. And this was just creating a little bit more of an acceleration into creating volatility in the market, if that makes sense.
Yeah, it absolutely does. Kathy, obviously the human cost of this assault is top of mind, but there is a market impact, and it seems to be moving slightly away from a global sort of impact to a more regional one. In the midst of all of this turmoil, what are you advising clients on investments? Is it defensive, or do you support holding cash right now?
There's a little bit, like everything else, a little bit of everything when it comes time to balancing a portfolio and thinking about the markets. We're telling clients, or I'm telling my clients, look, this is just one event, a very important, serious event. Don't get me wrong, but important, serious event. But it's one event in many, over many years, where we can go back and look at past history and say, look, the market's dropped drastically, but over time, it looks like a very small change on the graph. So you've got to stay focused. There's things we can do, switch out of very high cost, growth stocks, move more into quality growth, move into dividend paying, move into defensive, looking at financials and healthcare and wellness and utilities and energy. Those are all areas that should do well in this kind of chaos and sort of uncertain, fearful environment. I do think the Fed would probably pull a little bit back off of what they were going to do this year based on what's going on right now. So we might see a little bit of like releasing the gas on the pedal, and that might also be affecting the markets because they're seeing that coming in a sense. Short term, fixed income, we want clients to stay short until we see this settled. And yes, there's always a place for liquidity and sort of safe haven money, but only a percentage of the portfolio. You don't need to make changes today in your portfolio that are so significant that in 6 months you will regret that you acted upon fear and uncertainty instead of a long-term view.
I'm wondering what happens to the Fed now at its March 16th meeting. How does it react? Does it continue on the path that it has sort of set out the way forward? And then what happens to inflation? Does stagflation now become part of the vocabulary?
Yeah, all good questions. I think if we go back to the fall and we look at the Fed, there was no inflation, or it was, just temporary inflation. We found, transitory. That was not the case. And by the time they came to the conclusion that we're in an inflationary environment, it was too late to do things slow and steady, which is usually what wins the race. Instead, they had to, sort of go faster on the pedal and say, we're going to move these interest rates up. We're going to have rate hikes, in a very consistent, faster mode this year. I do think with something like Russia and Ukraine coming into the picture, they're going to have to rethink that, pull back a little bit on the series of rate hikes and the depth of the hikes they were going to make, just to be able to balance a little bit more of the volatility and uncertainty in this market and economy. And I do think that's part of what the market is looking at today. Knowing these things behind the scenes will help the market in the long run.
Okay, Kathy, unfortunately, we are out of time, but want to thank you so much for coming on and for your perspective after the president's comments. Kathy Entwistle, Morgan Stanley Managing Director. Thank you. Alexis, over to you.
All right, coming up next, just how big a threat is Russia, Ukraine, and that crisis to our economic recovery here in the U.S.? We're going to talk about it with an economist up next. Welcome back to Yahoo Finance Live, everyone. I want to bring in Jesse Wheeler now. He is economic analyst at Morning Consult for a look at what the Russia-Ukraine situation will mean for our economy here in the U.S. Jesse, thanks so much for being with us. You know, before this conflict, we had a pretty strong economy going. Despite the highest inflation in 40 years, consumers were still spending, and we had unemployment. We still have unemployment very low. Do you think that's going to change now with this conflict?
Yes, and thanks for having me on. So the economic impact remains highly uncertain as it is with the conflict itself. A lot will depend on the impact of the economic sanctions that President Biden just laid out. But the impact on the U.S. could be quite significant and negatively impact the U.S. and global recoveries through a number of channels, including trade and investment disruptions, and especially higher prices, energy prices in particular.
Let's talk about those higher prices and how we as everyday ordinary people may feel the impact. President Biden, speaking just a short time ago, again reiterated that he wants to do everything he can to limit pain at the gas pump for Americans. Realistically, what can President Biden really do to limit that pain?
That's tough to say. The gasoline prices that we're all seeing and feeling go up in the United States are really dependent on global energy prices. Just with the attack last night, we saw global Brent crude prices break over 100 for the first time since 2014, and those will inevitably be passed through to what U.S. consumers are paying at the pump.
Do you think we could see $5 gasoline in this country? Is that a possibility?
I'm not gonna speculate on whether or not we hit $5, but I think most people out there are expecting considerable price increases. And what we're seeing at Morning Consult, as we poll the average consumer in the U.S., is that they are expecting to see utility bills and prices continue to rise.
food prices as well, right? Just because of the situation with Russia and Ukraine producing so much wheat. We saw wheat futures, corn, soybeans all spike. Are we going to be feeling that in the short term at the supermarket?
Yeah, I mean, we'll also, that's a global commodity market, and that's going to pass through to what U.S. consumers are paying in grocery stores as it passes through producer prices, and what it costs to produce flour, and all of those prices go into the inputs, for the commodities that that we're buying at the stores, and yeah, it'll continue to push up, place pressure on grocery prices at grocery stores here in the U.S.
And what about the impact of these higher precious metals prices? And I was taking a look in particular at palladium, which goes into things like dental fillings and crowns and goes into the making of cars. I mean, things that people might not be thinking about. I mean, could we be looking at higher prices? We know the auto industry is already going through so much with the computer chip shortages, right? So could we potentially be looking at higher auto prices? I don't know, higher prices at the dentist as this, sort of has far-reaching tentacles here.
Yeah, I mean, that's correct. I mean, we were at this, this geopolitical crisis happens at a time when the global economy is already struggling to keep pace with, rapidly growing demand, as supply chains around the world were rattled. And you throw into that, the first major conflict we've seen in Europe in years. And on top of that, the potential disruption of supplies, from energy to metals, to all of these inputs that go into the manufacturing, the goods that people are demanding, and all of that's going to, add to inflation, increasing price pressures.
In all different sorts of varied industries. Jesse Wheeler, economic analyst at Morning Consult. Thanks so much for being with us. On the other side of the break, we are going to take a closer look at what's happening with cryptocurrencies today. The digital gold seems to have lost some of its luster. We're going to talk about the outlook right after this. Welcome back. I want to take a closer look now at how the Russia-Ukraine conflict is impacting the cryptocurrency markets, because we have been seeing this sell-off in Bitcoin. It's now at about $36,000. Ethereum also lower, along with the other altcoins today. For more on this, I want to bring in Ed Moya. He is senior market analyst at Oanda. So, Ed, we know that at least in the short history of cryptocurrencies, investors were treating it as sort of a safe haven in the way they might run to gold during uncertain times. Why is that not happening now?
Well, Bitcoin's become more of the ultimate risky asset. Right now, you're starting to see Bitcoin be more correlated with like the Nasdaq, and given the recent developments across the Atlantic, you're starting to see there's a tremendous amount of nervousness as far as what inflationary pressures are going to be, given the uncertainty with energy prices. And right now, you're probably going to have, I think, a lot of investors become very concerned with Bitcoin's long-term growth prospects. There's a tremendous amount of institutional money that got on board last year, where right now they're down. And there's fears that you're going to have growth concerns that could persist if inflation does continue to run away. So I think you have a very nervous market. And crypto is going to become an extremely even more volatile trade, where you're probably going to see that the more you have concerns that inflation is getting out of control and that you could have aggressive Fed tightening, that is going to be the biggest risk for crypto. So right now, you're probably going to see that investors are going to be very cautious about buying crypto right now. It is off the lows given last night's sell-off, but I think there is still a lot of nervousness that we're not done with the panic selling just yet.
I'd say because more than $150 billion wiped off the entire cryptocurrency market in just the past 24 to 36 hours. To your mind, at least in the short term, what is the biggest hurdle for the cryptocurrency markets? Is it going to be Russia, Ukraine, or is it what the Federal Reserve winds up doing with QT and interest rates?
Well, I think there is some optimism that, remember, Bitcoin has lost over half its value since hitting its record highs. And I think there is this belief that you're going to probably see there is this still this long-term belief that there is massive investments coming into blockchain technologies. There is this belief that you're going to have a lot more innovation be done in the short term. So I think there's many investors that are going to remain committed to crypto, but I think over the short term right now, it's just going to really follow its cues from U.S. equities, and if you continue to see stock selling pressure, I think then you're going to probably see further downward pressure on crypto. So I think many investors are going to be focused on Fed policy. I think that's going to be the big market driver. If you see the Fed start to show some more concerns of growth and that maybe they're going to not necessarily become as aggressive as some investment banks are calling for, as like 7 rate hikes, then you could see more stabilization across some of these risky assets, and then you might have more investors become a little bit more comfortable buying this dip. But I think everyone knows crypto is extremely volatile, so you could see 10% moves in a moment's notice. So this is somewhat normal for crypto traders.
Yeah, not for the faint of heart, for sure. But something I've noticed, Ed, is that, and something we hadn't really seen before, is the cryptocurrency markets moving in lockstep with equity markets. I'm looking at the stock market right now here in the U.S., and it is an incredible turnaround. I mean, the Dow has basically more than halved its earlier losses. The S&P is on the flat line, and the Nasdaq is up nearly 200 points. And we're seeing this happening with some of the major coins as well. So going forward, do you think that cryptos are going to be acting a little bit more like U.S. equities?
I think that's going to hold up over the short term. So possibly over the next month, or actually over the next couple Fed rate decisions. And I think, given, today's pairing of losses, we have to remember a lot of that is automatic buying. You had the Nasdaq fall into bear market territory tentatively. The Dow corrected, so you automatically see buying when you see 20% or 10% discount from record high levels. So that was somewhat expected. So I think you're going to probably see that you're going to need to see some more optimism as far as equities go, and I think this is going to be a very difficult environment. But many investors were on the sidelines. There was so many investors that were holding cash. So I think given, some of these discounts, a lot of them are looking at some of these valuations. Real yields were going down again. And this is an environment that is looking attractive for some risky assets. So I think that's why you saw a big rebound in some of those equities. And I think you'll probably see that happen with cryptos if stocks can hold these levels and become a little bit more constructive for investors. But I think we're really just not even 24 hours following the invasion of the Ukraine, and this is going to remain a very tense situation for quite some time. So I think you should expect elevated volatility, and I think that for crypto traders, you probably want to exercise the caution of expecting bigger swings and obviously scaling into positions if you feel confident testing those waters.
Now, speaking of volatility, the VIX index, that so-called fear gauge, last I checked, it was at about 33. Anything above 20 usually means that there's heightened fear in the market. All right, Ed Moya, senior market analyst at Oanda, thanks so much. Karina?
Okay, thank you. And coming up after the break, we'll take a check of the energy sector and whether any of President Biden's comments a short time ago did anything to cool sky-high oil prices. Welcome back to Yahoo Finance. Well, the major indexes are off their lows of the session. They're actually at the highs of the session now. But let's turn over to the oil space and see what's happening there. President Biden's comments on sanctions a short time ago and saying the U.S. will release additional oil as warranted, not doing too much to help high oil prices today. Brent touching 105 earlier, although settling below $100. For more on where crude settled, let's bring in our Yahoo Finance's Jared Blickery. Jared, oil surging more than $20 a barrel since the start of the year.
Yeah, pretty stunning reversal today. So taking in consideration of the gains for the year, even more so. WTI got north of $100 per barrel earlier in the day. You can see this over here, also in the headlines overnight. But it's been steadily slowing off all day, kind of accelerating. We got some hints that there might be an SPR release. That's the Strategic Petroleum Reserve release. That came around 12 p.m., the noon hour. And then here's when Biden finally took the podium, and we can see that we closed lower, almost getting into the negative territory for WTI. Also want to point out that Brent here, that's still holding on to gains of over 1%, over 1.5%. But you notice that is below $100 per barrel, as you just said, Karina. So all in all, not only in equities markets, which are reversing to the upside, we're seeing some commodities markets like energy reverse to the downside.
Okay, thank you, Jared Blickery. We're going to stay on the energy market and bring in Clay Siegel, macro energy strategist. Clay, thanks so much for being here. Quite a reversal in the oil market from where we were earlier in the day when we first got news of this advanced aggression from Russia. Brent topping 105, WTI pushing 100 as well, and now closing below that. So how effective were these comments from President Biden and the sanctions that have been imposed?
Sure. Hi, Karina. Thanks for having me. Let me just say, at the offset, I'm a student of international relations and foreign policy. And this launch of this war in Europe is the biggest geopolitical event of our lifetimes. And it's first and foremost a human tragedy for all that are involved. Going to your question about the price dynamic and the market's response to what President Biden said last hour, I feel like the sanctions that were announced, as I understand them this hour, are probably like a 5 out of 10 in terms of the pain factor. I mean, including the largest Russian banks, and I'm still not sure about Sberbank, the very largest, but including the largest Russian banks or among them is an important component of an effective sanctions package, to be sure, and maybe some of the other measures that could be contemplated going forward. But right, with the Russian oil and gas companies apparently not included in this current tranche, with the SWIFT international interbanking messaging platform also off the table for now, and as your colleague was just mentioning, no imminent sign of a release from strategic reserves. I'm not surprised to see some of that risk factor come off of the oil market towards the close of the session today.
Clay,
but I do think it's a little bit short-sighted because I think the market is maybe taking the headlines one at a time instead of looking 2 or 3 steps ahead at what's liable to happen.
Oil supply is so tight now, nat gas as well. What needs to be done now? OPEC Plus meets next week. Can they increase supply? Do they have the capacity to do that? And do you think we get an Iran nuclear deal so that we do have access to oil from Tehran?
Well, these are the right questions that you're asking. You got to remember, and traders need to remember, that this war is taking place in the context of an already really tight oil market that's dealing with 2 problems. It's dealing with low oil inventories on the commercial side and the government sides. And it's also dealing with relatively low levels of OPEC spare production capacity, that capacity that can be activated and deployed and brought into market in relatively short order. And this war and the consequences from it may actually force OPEC and OPEC Plus to kind of play their remaining spare capacity card. So I think we're going to find out relatively soon. There's no doubt that in Washington and other allied capitals, they are calling upon friends in OPEC and OPEC Plus to increase supply in response to the tight market and to try to maybe preempt an even greater tightening of the market. And what is going to be really interesting to see is how successful that is. And I think there are some market observers, myself included, that are a little bit skeptical that there's a whole lot more that OPEC can easily bring to bear. It's probably somewhere between 2.5 and 3.5 million barrels per day of spare production capacity, largely concentrated in Saudi Arabia and the United Arab Emirates. Many of the other countries within OPEC are actually struggling to meet their production targets that also keep getting set incrementally higher every month, about 400,000 barrels per day, which is expected when they get together next week as well.
Okay, we'll have to leave it there. And Biden hoping to cut some of the pain here as well by saying that additional oil may be released. Thank you so much for your time today, Clay Siegel, macro energy strategist. We will leave it there. Alexis, over to you.
Thanks so much, Karina. Coming up, a look at the possible legislative response to the Russia-Ukraine crisis. Welcome back, everybody. For more on the White House's response to the Russian invasion of Ukraine, I want to bring in Isaac Boltansky, Managing Director and Director of Policy Research at BTIG. Good to see you again, Isaac. Thanks for being here. I want to shine a spotlight on these soaring energy prices, because earlier today when President Biden spoke to the nation, he once again said he will do everything within his power to limit the amount of pain we as Americans will experience at the gas pump. What would that kind of relief look like?
Yeah, Alexa, I firmly believe that the White House is going to do everything it can. They were worried about energy prices before this crisis, but I'm just not sold on any of the options that they have really helping consumers. You know, when we run through the options, things like additional releases from the Strategic Petroleum Reserve, well, Alexis, we're already at the lowest level of reserves in the SPR since 2002, right? So we're already bumping up against constraints there. And frankly, it hasn't had that much of an impact thus far anyway. I do think that the entire crisis in Ukraine is going to lead to a redoubling of efforts to get a deal with Iran signed so that we can get some of their production back into international oil markets. I think that's one of the takeaways we should have. And there's going to be pressure, as your last guest said, on OPEC nations, but that's limited as well. My message to clients here is that the White House is going to do everything it can, but there aren't many good options here. And ultimately, we're going to have some sacrifice in order to meet with that success that they're looking for.
There could be this gas holiday, right, where states and municipalities sort of waive the taxes that they impose on gasoline, because gasoline is very heavily taxed in this country. I know that Congress is on recess this week, Isaac, but do you believe that some sort of a legislative response is coming, and what might that look like?
This is going to be a big moment for our country, right? There's that old saying that politics should stop at the water's edge. In this toxic of an environment, we haven't really seen that very often. So I think that the next few weeks are going to be telling not just about our stature in the world, but the nature of our politics. I am optimistic that we're going to see a legislative response here. I think that we can expect a package that will increase funding for supporting Ukraine and some of the refugee dynamics there. I think that we'll have increased funding to go after some of the assets of the oligarchs and those close to Putin. And I do think that we're going to have more of a focus on sanctions from the legislative lens as well, which we'll get into SWIFT. But I got to tell you, the gas tax holiday still hasn't gained enough traction right now for us to deem it as probable. It's definitely part of the conversation. But again, Alexis, we're just talking about on the federal side, 18 cents per gallon, right? It's not a game changer.
That it is not, no. And, you know, speaking to those higher energy prices, they would just add to the highest inflation we've seen in 40 years. Food prices also going up because of this conflict. So I guess my question is, does inflation sort of threaten to erode the impact of President Biden's $1 trillion infrastructure law? Because they're going to be facing, these municipalities will be facing higher costs for materials, for labor. Do local governments maybe opt for smaller projects in the face of all of this?
Well, the one positive thing here is we know that infrastructure law was not an immediate spend, right? It was over 5 years. And so there is some runway there, but inflation has numerous impacts throughout the economy, and it does, in fact, impact local and state municipalities. So yes, the answer is that it will impact some of the decisions made at those local levels. It's going to impact the White House when it comes to the midterms as well, right? I think that inflation is going to be the key watchword on the campaign trail as the midterms heat up. And it's one of the many reasons I think that the House at a minimum is going to flip, which is then going to lead to divided government and not much more legislating for the next 2 years.
All right, Isaac Boltansky, Managing Director and Director of Policy Research at BTIG. Thanks as always for your perspective. And Karina, I'm going to send it back over to you.
Okay, thank you so much. I want to bring you some breaking news, bring you that story from the Wall Street Journal reporting that the SEC is investigating whether recent stock sales by Elon Musk and his brother Kimball violated insider trading rules. Here with more on that, let's bring in our Yahoo Finance's Alexis Keenan. And Alexis, investigators are looking at Kimball's trades before that Musk Twitter poll that came out. I think you're muted, Alexis. Happens to the best of us.
Indeed. Sorry about that. So what the Wall Street Journal is reporting here is that the goal of the SEC in looking into this is to determine if those stock sales violated insider trading rules. That's by Tesla, by Musk, and they also report by Kimball Musk, Elon Musk's brother. The probe, the Wall Street Journal says, started in 2021 after Kimball sold Tesla shares that they say were worth about $108 million. Now, that sale was on November 5th, and that's one day before a Musk tweet that we've been talking about a lot. That's one that the SEC might have some interest in, where he had asked his Twitter followers whether he should sell the 10% share in his company. Now, Tesla shares fell sharply following that tweet. And so this might be fitting together now as we're learning about this Wall Street Journal report with what we've heard earlier in the week and last week, and that's this tussle between Elon Musk and the SEC that has been ongoing, which includes a court filing a lawyer for Tesla and Musk made this past week, saying that the SEC was really targeting Musk and Tesla and harassing them with these probes. Now, the SEC had said that they were not looking into any current matter, and they were referring to a settlement from a 2018 tweet that Musk and SEC reached together. But now it's making a bit more sense where if there is a probe here by the SEC, they might be looking into this other matter that explains a lot. The SEC had issued subpoenas according to Tesla back in November, but according to Tesla, they say that was without court approval. But if these are in fact two separate matters and that the SEC's new interest is connected to these trades, that kind of gives us a little bit better picture here of what might be going on, but we will continue to look into this and bring you the latest.
Do you have any idea when we might have resolution on this topic?
So which topic, I guess, is the question. There's the ongoing battle between Musk and the SEC. His lawyers have asked for the court to hold a conference to talk about why the SEC continues to ask for information from the company to look into its compliance. And its compliance has to do with that 2018 settlement over the 2018 tweet from Musk saying that he had secured financing to take Tesla public at $420 per share. So there's that matter, but then this current matter as well. So the old one is what we should call settled. There's a settlement, a $40 million settlement that was reached, and that's supposed to be distributed eventually to Tesla shareholders. But then this could be another new probe here, an investigation. But we should also say that just because the SEC goes through with an investigation or a probe and looks into a matter, it doesn't necessarily mean that they're going to bring a complaint or bring charges. So we'll just have to keep following this one here.
Okay, Yahoo Finance's Alexis Keenan, thank you so much for bringing us that breaking news. And that will do it for us. But before we send you off, we'd like to take another check of the markets because there has been some wild action today on the benchmarks. The S&P clawing back from a 2.6% loss, and the S&P now in positive territory. The Nasdaq started off in bear territory, then climbed into positive territory, roller coastering all day, now positive, up 252 points. You see the S&P up by 14 points. The Dow is the loser, but well off its session lows. It was down by as much as 800 at one point, now down 232 points at the moment. And want to get you a look at the bond market as well, because that has also seen some strong price action today. Treasury prices really surging while yields fall as investors flood into bonds for safety, along with gold, another safe haven today. But look at the 10-year there at 1.96 and the 30-year at 2.28%. And of course, oil prices surging today on that Russia aggression. They did come off some of the lows after comments from President Biden about sanctions that he will be implementing, along with Western allies, making it clear that Putin is the aggressor in this situation, and that, Russia's actions will leave the country weaker and the rest of the world much stronger. President Biden also said that he will release additional oil as conditions warrant, and that helped bring down the price of WTI. It was touching $100 almost, now down to $93, and Brent oil surging past $105. finishing just below $100 today. Well, that will do it for us, but there is much more market action ahead. So from Alexis Christoforous and myself, thank you so much for spending some time with us today. After a quick break, Yahoo Finance Live will continue as our colleagues take you to the closing bell and beyond. Stick around.
Welcome to Yahoo Finance Live, this 3 p.m. Eastern hour. I'm Emily McCormick with Brad Smith and Rochelle Akufo. And quite the rebound we're seeing this afternoon with stocks trading mixed as investors monitor the latest on the Russian invasion of Ukraine, a move NATO's Secretary General called today a brutal act of war. Now, the S&P 500, Dow, and Nasdaq are well off the lows of the day. And in fact, the S&P 500 and Nasdaq are now well in positive territory as tech stocks recover. Now, the Dow is still in the red, but now off just over 230 points. It had dropped more than 800 points at its worst levels of the day. And we are seeing these technology shares outperforming in that 30 stock index. Now, in energy markets, WTI, Brent crude have paired some gains after rising to fresh 7-year highs. And in bond markets, treasury yields are moving lower across the curve. The benchmark 10-year yield now well below 2%. Earlier today, President Joe Biden met with G7 leaders, and he also addressed the nation about Russia and Ukraine this afternoon and said that Vladimir Putin is the aggressor in launching what Biden called a premeditated attack. Let's listen to what
he has much larger ambitions in Ukraine. He wants to, in fact, reestablish the former Soviet Union. That's what this is about. And I think that his ambitions are completely contrary to the place where the rest of the world has arrived.
And that was President Biden earlier. The market's certainly latching on to that commentary, and the heat map looking much different this afternoon than it did this morning. For much more on some of those major movers, let's bring in Inez Ferre, Yahoo Finance's own. Inez, help us break down what we've seen in some of the key players that have moved in quite the opposite direction now this afternoon.
That's right, Brad. Quite a reversal, starting with commodities, as Emily was mentioning, WTI and Brent crude, after President Biden mentioned his sanctions, but not sanctions directly against Russia's oil. That's when you saw WTI, Brent crude falling. Also, both Brent and WTI settling well below their session highs from the day. Also, President Biden mentioning the U.S. will tap reserves as conditions warrant. I want to mention gold futures, which are lower. They were higher earlier today. Palladium down 4%. That precious metal was higher earlier today. Let's take a look at some of the movers. I do want to mention on the Nasdaq 100, where we have seen just a stunning reversal. Take a look at the mega caps. Amazon up more than 3%. It had opened in the red. Microsoft up more than 3% as well. Also earlier this morning had opened in red territory. A lot of this also has to do with the software stocks that we've been watching. A lot of green in that space, particularly cyber security companies. Take a look at all the screen that you're seeing on the screen. During times of conflict, cybersecurity threats are high, and President Biden mentioned during his press conference, if Russia does a cyber attack against the U.S. will respond. So these are at session highs right now.
Quite the turnaround indeed. Thank you so much, Inez. All right, well, let's break some of that down and market reaction as well with Alan Boomer, Momentum Advisors Chief Investment Officer. Thank you for joining us. So looking at some of the reaction that we saw after the invasion and now after President Biden's speech, we saw this helping major indices come off session lows. But how should investors weigh how aggressively to buy the dip, and where do you see the opportunities?
First of all, thanks for having me. Second, I'll say today's a wild day. You know, we started the day, the futures were way down. And now a lot of the indices are up. You hit on the Nasdaq being up, the S&P being up. The one thing that I always know is that the market is going to overreact to good news and bad, right? And so the news this morning was, you know, sell, sell, sell. And now we analyze the news, we kind of understand the news a little bit better. I think what the market has decided is that, you know, this Ukraine-Russia thing is a tragedy. It's not necessarily a global event that's going to cause us to fall into a deep recession. I think the biggest factor right now is the Fed. And, you know, if anything, this Russian event may make the Fed a bit less hawkish.
So to that point then, obviously the Fed keeping an eye on what's happening, but we're not seeing a lot of reaction as to how aggressively they plan to change their course. But obviously that Fed wild card is still out there. Plus you obviously have inflation concerns that could also be exacerbated by what we're seeing with Ukraine and Russia tensions. Do you see that perhaps affecting, if not the size, the pace of the rate hikes by the Fed?
Yeah, I think it can certainly impact. And one thing that I've been very contrarian in my view on is the fact that I know there's folks that say 6 to 8 interest rate hikes this year. I don't see it. You know, I think often the Fed, you've got to realize part of their job is jawboning, right? Which is talking to the market to try to bring forth a result before they make an action. And often the Fed has a big bark and not a big bite. And so, you know, I think a reason like Ukraine and Russia, which is going to be a supply chain shock, particularly in energy and even in food, as Russia is a big wheat exporter. You know, this is the type of thing that might cause the Fed to not be so aggressive. And again, I didn't know what the reason would be, but I did have the view early in the year that the Fed would not be as aggressive as a lot of folks think.
Alan, with major averages off of session lows and climbing back into positive territory here, when we think about the algos and what position they may have had, considering the levels that we were at earlier on in today's session, what percentage of buying that we're seeing here on the day do you believe is algorithmic based?
Yeah, you know what's funny? You never really know, right? I used to work at Goldman Sachs, and any day you had a day where the market was down, and you asked, there was a reply that was meant to be funny and cynical. And that's the reply I'd say today. You know, there were just more buyers than sellers today. That's why the market's up, right? And you don't know if it's algorithms, you don't know if it's ETFs, you don't know if it's short covering, right? And so I think that the market, in my opinion, it's just rationalizing the fact that earnings have been really, really strong. The Ukraine thing is an issue, but not going to derail the entire economy. And the Fed might be a little less hawkish, right? And so I don't know what percentages from algorithms. No one really, really knows. But I do know that there was an overreaction, and now we're seeing a bit of a more, I think, realistic reaction to what's going on. And look, I could be wrong, but that's my sense.
Yeah, well, I have to ask, when we're at levels like the Nasdaq nearly 2% or less than 2% away from a bear market, and then striking what those levels would be early in trade, it's only rational to think that there is some algorithmic play that is also in the water out there somewhere else. But additionally, here, what type of rotation would you typically expect during a time where there is international conflict like we're seeing right now?
Great. So I think the rotation that we've already been seeing, I think it just continues, right? There's been a big rotation into value stocks. I think valuations are going to become a lot more important than they were last year. I think you continue to see a rally in energy stocks. I also think, though, there's been a lot of babies thrown out with the bathwater, especially in the tech world. I would not be surprised if you start to see a continuance of this rally in the mega cap tech names as well.
In terms of those cyclical names that you were mentioning, energy being, of course, one of them, do you think there was perhaps a selling opportunity today because of how fast and how far we've seen energy commodity prices, as well as the energy sector and the stocks therein rise in the recent weeks and months?
Yeah, it's funny. I'm a long-term investor. I don't really, do a ton of selling. I could see someone who may have been overweight energy doing a sale, but a lot of folks are underweight energy. Energy has lagged the overall market for the last couple of years. Energy is now a really small component of the S&P 500. I think it's less than 5% now. And I think for a lot of folks, they've been underweight energy. And so for those who are overweight, yes, it could have been a sell opportunity, but I think a lot of folks are actually underweight. And I think now is a great time, even with oil approaching $100, I still think energy companies are going to do well in this environment.
And in terms of geographic exposure, how has this latest escalation, now to the point of invasion, changed, if at all, your view about where to be invested in terms of U.S. versus overseas markets?
Yeah, so, it's funny. I went into this year thinking the best valuation opportunities were overseas, but the best growth opportunities were in the U.S. Now I'm kind of more concerned about the valuations overseas because of the supply chain issues you're going to have. I mean, Russia, huge exporter of energy, huge exporter of commodities like wheat. And so I think if there are sanctions, that's more supply constraints. So it brings me back to the United States. That's why some of our favorite stocks are companies like Walmart. We know Walmart's a global multinational company, but they do a lot of business in the United States. I think that, again, because markets have been so volatile and earnings have been so strong, the US market's gotten cheaper this year. And so I'm back to looking at the US again.
All right, thank you so much. Alan Boomer there, Momentum Advisors Chief Investment Officer. All right, up next, a look at where markets stand after President Biden's speech announcing more sanctions. Plus, is more pain ahead for tech? That's after this short break. Welcome back to Yahoo Finance Live. Let's take a quick look at how markets are faring. So as we've seen, what started as a day in the red, then turning mixed, as we look at what's happening with the Nasdaq now in the green, at one point wondering if it was a little bit too close to entering bear market territory, but it has clawed back some gains there. Now in the green, up more than 2% for the day. The Dow still down, and the S&P managed to also find its way into the green.
Well, coming into today, the Nasdaq was less than 2% from a bear market. And if levels at the open had held, we would have seen the tech-heavy average close there in bear market. However, today's run from those levels is welcome news. But is this enough to justify an extended rally is the question. Here with more, we've got Dan Ives, Wedbush Securities Managing Director. Dan, good to speak with you here this afternoon. Half a session, we know, does not make a trend here, but perhaps the market is reading into the Fed, perhaps delaying the brunt of its tightening. We don't have the firm indication that they would be doing so, but do you believe that that's what tech investors here today are leaning into the ethos of, perhaps?
Yeah, I think, look, the clear read through a 50 bip, hike, that's off the table. And I think now much slower trajectory. Obviously, it's going to be positive in terms of the 10-year yield relative to tech stocks, in terms of the risk off trade. Look, I think fundamentally, I could tell you from conversations last night with investors this morning, just way oversold. I mean, I think it's the most oversold I've seen tech stocks in 2015. Because as scary and white knuckle period as this is, if you look at the fundamental driver in cybersecurity, cloud enterprise, that's not changing because of the Ukraine conflict. And I think investors are starting to use periods like this. You go historically, geopolitical black swan events, the last 25 years, there have been more opportunities in those crises and chaos rather than time to sell.
So do you believe that we have hit, at least in tech and some of the big tech, big cap names, mega cap tech names, that we've seen a bottom placed in? Or is there any inclination to believe that there is still more of a downside to come?
Look, there could always be, of course, more downside, more volatile, but I think we are getting to the point where we are way oversold in terms of tech relative to fundamentally. From a PEG perspective, in terms of growth relative to PE, I mean, we're going to back to valuations 6 years ago, relative to growth, especially in some of these areas like cloud, cybersecurity, chips. We'd be strong buyers here. Look, it's obviously a nerve-wracking environment. It's buckle the seatbelt period. But when I look at areas on large cap names like Microsoft, Apple, Cisco, Oracle, safety blanket names, look at cybersecurity names like Zscaler, CrowdStrike, Palo Alto. There's going to be many yelling fire in a crowd theater at scary times, but we view, at least over the last 20 years, we've used these opportunities to kind of help investors pick up some of the gems.
And so, Dan, when we think about more broadly here with the international conflict, one of the things that has been on the table and has come up repeatedly in discussion is certainly with regard to semiconductors and whether there would be sanctions, chip-related or chip-directed sanctions, and even towards some of the materials that could also come into play during this particular international conflict that are necessary to make semiconductors. Does that change your reading on any of those manufacturers, whether they be fabrication, model manufacturers, or whether they just be design manufacturers?
Yeah, I think most of the fabs, most of the supply chain, they've been able to diversify pretty good in terms of when we think about any impact here. I do think it's pretty contained, relative to any sort of either sanction or even from a supply chain perspective. Look, I think the irony is supply chain issues are moderating globally as we go into March and April. Now, granted, this is something that, no one expected or in worst nightmares would have wanted to see, but supply chain's moderating. That's huge in terms of a tailwind for tech, which is why, Brad, I believe we look at this period of time here, 6-9 months from now, and this was an opportunity to own software chips rather than time to sell it.
Does that supply chain moderation also impact or alter any of your price targets on some of the tech players, especially reliant on their ability to produce consumer technology products, or for some of them, computers on wheels even?
What's bullish for Apple, because that's been supply chain constrained. It's bullish from a chip perspective, names like AMD and NVIDIA. I think it's bullish for automotive plays like a Ford, GM, and of course, Tesla. Because right now, I mean, that's been the biggest overhang in a lot of those EV names in automotive and tech. I mean, in terms of the supply chain. And obviously things have changed dramatically the last 24 hours, but in times like this, I think you just have to look at the fundamental drivers, sort of tune out the noise as hard as it is, because I think that's where you find the opportunities in sort of chaos.
If this were to permeate over into any NATO touching countries, what type of impact do you believe that would have then on how we look at this entire situation, especially for tech companies that do have more of that globalized approach?
Well, I think that's one of those scenarios. Like if we looked at a bell curve scenario and then you start to look more at the worst black swan events, I mean, that's where it gets more negative, because from a consumer, from an enterprise supply chain, both from tech to automotive, I mean, that's where you could really start to see that sort of next leg in terms of a sell-off. But that's why I think when you look at the situation right now in Ukraine, I think investors, you're starting to see more and more of that appetite for tech, because I think there's a recognition when you start to do stress tests and scenarios. I think tech right here, the risk is clearly there and a lot of bad news baked in. I think it really creates the opportunity, especially some of these names like software, chips, and cybersecurity. That's one that you really circle.
You mentioned Tesla a moment ago. I want to get your reaction to an SEC probe that is looking into Elon Musk and brother Kimball Musk, that coming after some of their sales of shares. Of course, noteworthy here was the time period that those sales took place in relation to the other infamous tweet of a poll nature, I should say, where Elon Musk was asking his Twitter followers how much he should sell, also knowing how much he needed to sell at that point in time as well. With regard to the SEC, this just further signals and further goes into this tenuous relationship that Tesla and Elon Musk have had with the regulatory body. And so what do you expect the SEC to look into? Does it materially impact how investors look at Tesla right now?
Well, I think Musk has created this himself. I mean, from the poll to Twitter, and that continues to be a black cloud over the stock. And it's something, the lack of situational awareness that he's had from a social media perspective in this environment, a risk off, is astounding in a bad way. And I think it's something where, as obviously as they look into this in terms of, for Musk and Tesla, I think it just speaks to a broader issue. You almost have, you have two sets of things happening. First, in terms of the core business, EV demand, transformational growth, everything that's happened in Austin, and that's obviously been extremely positive in the supply chain issues. But then you look at Musk, and from a Twitter perspective, and as well as everything, in terms of the selling stock and the poll, it's something that's really left a lot of investors with a bad taste in their mouth for good reason. Look what the stock's done since. So it's just been a very concerning trend that we've seen here. And I think this is just another example, that Musk continues to sort of be, in some ways, just an overhang, especially from a social media perspective.
Wedbush Securities Managing Director Dan Ives joining us here this afternoon. Dan, always a pleasure to speak with you. Thanks for joining us.
Coming up, a deep dive into how Russia's invasion of Ukraine and the sanctions that have emerged on Russia will impact energy markets. Stick with us.
Welcome back to Yahoo Finance Live, everyone. We had WTI crude hit $100 earlier into the day's activity. We've moved off of that level. Brent crude, that also was higher earlier, but right now sitting at about $98.43, still holding on to gains, a move higher of about 1.6%, and then still holding on to fractional move higher. For WTI, you're seeing that at about 0.4% higher here on the day. And then additionally, taking a look at RBOB, gasoline futures, you're seeing that flat, but to the upside. Well, actually, it's up by about 1.2%. And you have to excuse me, I was looking at the cents basis there, but it is up over the past 5 days as well. Cause for alarm there, up by about 3% over that period of time. We'll continue to track this, of course, moving forward, given the international conflict between Russia and Ukraine and all of the impacts, more so internationally, with some of the dependence on those supplies as well.
With Brent crude oil soaring above $100 per barrel for the first time since 2014 earlier, and WTI trailing close behind, President Joe Biden said he wants to minimize the impact of sanctions on Russia on the U.S. economy. Our next guest joins us for the outlook on energy markets. Dan Dicker is author of Turning Oil Green and founder of The Energy Word. Dan, a volatile day in energy markets, what do you think are the biggest unknowns right now that energy markets are grappling with respect to this geopolitical conflict?
Wow, that's a really good question. I mean, I think it's the same as what everybody's sort of grappling with is how far will Putin go? As of today, I mean, you can see that oil is not really reacting all that much, considering that we've had a major incursion into Europe for the first time since World War II, and that would tend to make me think that the markets don't think he's going much further. So I guess that's the major question that remains unanswered. For the most part, what I've seen today is quite a lot of sang-froid, considering, the level of destruction that's about to occur in Ukraine.
And we did see WTI as well as Brent crude oil prices come off of their highs of this session. But do you think the risks are still skewed to the upside? And how much higher, if so, do you think crude oil prices could jump in the near term?
Yeah, Emily, and I've been saying this here when I come onto the show for a while now, that the market status for oil has been bullish for 14 months, all right? And the Ukraine has added fuel to this fire, of course, but for the most part, oil was headed above $100 anyway. And so to see this come into the marketplace, then have all of a sudden all the media kind of jump in and says, well, oil's $100 a barrel because Putin's going into Ukraine, I don't really see it that way. And I don't think many other oil analysts would see it that way right now. So in fact, what I see right now is a market that's probably beyond itself, is making maybe a little too much out of this geopolitical dust up right now. And oil might be likely to actually sink from here a little bit. Now, over the medium and long term, I'm going to tell you what I've told you for the past 14 months, that oil is headed for at least $120 a barrel, and possibly on its way to break the old 2007 highs of $150 a barrel. But for right now, there's, what there always is when these geopolitical activities start into the oil markets. They start with a reaction to the upside, and then as the sellers sort of filter back into a marketplace, it tends to moderate, at least first. So that's really what I'm looking for right now.
And when we think about that prediction, oil potentially going to $120 per barrel, earlier last night, Goldman Sachs economists were out with a note saying that every $10 increase per barrel in the price of oil lowers GDP by just under 0.1 percentage points. Are you concerned about the economy's ability to absorb the impact of potentially higher oil prices here?
I've been in the oil market for 35 years, and I've heard of the destruction of the economic destruction that comes with high oil prices, and yet we've seen cyclings since 2003, for example, up to $147, in 2010 up to $110, 2016, 2018 somewhere close to $80. Now we're close to $100. I just haven't seen that destructiveness. Oil is about the most inflexible commodity in the world. In other words, there's a certain amount that's needed. It's going to be used. And in a lot of ways, high oil prices benefit certain parts of the economy as much as it destroys other parts of the economy. At least historically speaking, it seems to be pretty much a wash. I think it might be a little more, clearly, it's a lot more destructive to consumers. But in some cases, for example, in the oil sector in this economy and in our country, it pushes for very good jobs and a lot of profitability in sectors that have had a bad time over the course of the last 6-7 years.
When we think about that impact to the consumer, President Biden has spoken multiple times this week about wanting to limit the price increases that Americans see at the gas pump. But how much of a price increase do you think the administration might be willing to accept, given the current geopolitical situation and fallout that may just be difficult to avoid in energy markets as a result of this?
Emily, I think the question is not how much the administration is willing to take, but how much any administration can really do to affect oil prices in the marketplace. I mean, they have very few tools. Politicians realize whether they're Republican or Democrat, high gas prices are a political nightmare, and they will do what they can to get them down. But, again, historically, there's really not a lot of tools that they have. They have the strategic reserve, which has, a really minuscule ultimate impact on energy prices. And, regulatory moves don't really have a lot of effect on it. This is really a global kind of an affair. These markets do not move very much compared to what governments would like to see them do. And I've seen this over the course of decades, from whether they're Republicans or Democrats. Nobody likes high gas prices. They're a political nightmare. And of course, Biden will tell you that he's going to do everything he can to lower gas prices. But I don't see that he has many tools at his disposal.
And when we think about the potential monetary policy, the inflation impact of all of this, can the Federal Reserve do anything about inflation that may be driven increasingly by higher energy prices, especially if prices continue to climb from here? Because they can impact demand to a certain degree, but the supply side seems like it would remain mostly out of their reach.
Correct. I think you've hit that right on the head. And of course, obviously you can cool some inflation with rate hikes. You can do it. And they're clearly loath to do it, but that's one way to sort of cool some of the inflationary pressures on oil. Again, I think that even inflationary pressures are something that are adding fuel to this fire, but oil was always headed over $100 again. And in a lot of ways, it naturally belongs there. Houses have gone up 3 times in the last 15 years. The stock market's gone up 2.5 times in the last 15 years. Oil really does not deserve to be $45 a barrel anymore. It really should be in triple digits like it was in, 2008 and 2010, and for the most part before the pandemic hit in 2018.
Well, certainly seeing this triple digits, at least on the Brent crude oil side earlier today. Dan Dicker, author of Turning Oil Green and founder of The Energy Word, thank you so much for your time.
All right, up next, a look at the biggest market movers, safe havens and opportunities today as markets react to the volatility on Russia-Ukraine developments.
Welcome back. As we continue to track the recovery across U.S. equity markets this afternoon, we're bringing in Yahoo Finance's Jared Blickery for the breakdown. Jared, tech stocks have seen a pretty extraordinary rebound during today's session. The Nasdaq now up well over 2%. Tell us more about what you're seeing across the tech names.
That's right. It's not just tech, it's some mega caps overall. And we're seeing a broad-based comeback in those stocks, and especially those growth names, which have been beaten down as well. This is the Nasdaq. You can see it's up almost 3%. It started out the day down over 3%. In fact, almost 3.5%. This is a year-to-date look at the price action. And here's today's candle. And you can see a huge green candle there encroaching in on yesterday's territory. Very similar situation in the S&P 500. I want to note we had a very similar situation exactly 1 month ago on January 24th. That was this candle here. Now we opened lower, we probed some depth here, and then we recovered, turning green into the close. Not as much, but I've been tracking these reversal days. They don't always necessarily mark the bottom, a major bottom, but usually you get a few days of respite and some higher prices following that. I do want to point out that in the midst of the pandemic sell-off, these are weekly bars, so you're not going to see the green here. We also had a huge reversal day. It was good for a 2-3 day bounce, but then we probed these lower lows, and in fact, that was the fastest bear market in history. So, bottom line, if we do end up with the European land war, probably going to be much, much lower prices in the indexes and in stocks. However, for the time being, we do have a tradable bounce. We saw the MOEX, that's a Russian stock index, rise 11%. That's after being down more than 30%. It rose 11% when Biden was speaking. That's because it looks like the SWIFT option is off the table for now, and maybe, just maybe, we have a month to kind of sort things out. Also want to take a look at the VIX, because we had a guest on earlier today, Chris Vecchio, and he was saying in order to mark an interim top here or bottom in the market, he wanted to see the VIX above 35. In fact, we got VIX of 36, 37 on the open. He also wants to see the volatility of the VIX hit at least 150. It actually hit 145. So we do have the makings of a potential interim bottom here. I just want to go over the sector information or the sector leaders. As I said, it's all about the mega caps. Tech, communication services, which houses Alphabet and Facebook, and then consumer discretionary, which is the XLY sector. And here you can see it. Amazon up 4%, Tesla up 4%. So is Microsoft. NVIDIA up over 5%. So impressive comeback moves here.
I mean, when you see a reversal like this, give us that deeper dive into the market moves. What were you keeping an eye on?
Well, I'm looking at some of the sectors and industry groups, and we can go through those one by one. What's impressing me here is software. Software has been beaten down since November of last year. A lot of these names are cybersecurity names. Those are especially seeing a big boost today, but you can see ServiceNow up nearly 10%, Adobe up 8%, Oracle up 3%, CrowdStrike, cybersecurity company, up 13%. So really just seeing a lot of these names come back. But it's not all about the green today. We're also seeing some redness in some of the banking names. And that's because the yield curve, yields are crashing right now. So we're seeing JP Morgan off 3%, Bank of America down 3%. So really the value in cyclical trade should be flagging today. And that's what we're seeing.
And Jared, while we have you, can we talk cryptocurrency for a hot second here? Because yes. When we think about Bitcoin, Ethereum, Bitcoin particularly, as it's been heralded as digital gold, how has that compared in this moment in comparison to actual gold and other commodities?
Bitcoin is trading more in line with equities than it is with gold. So really not that Armageddon hedge that we have with gold. And let's remember, gold kind of serves two different purposes. It can be an inflation hedge and an Armageddon hedge. We're seeing a huge rush into the US dollar today. That could potentially be weighing on commodities and also cryptocurrencies because they move generally inversely to each other. But let me just go to a 5-day chart of Bitcoin, and we can see this huge fall off yesterday. That was concurrent with equities. Now, gold might be surging today, but really Bitcoin was not following that move earlier today when gold had lifted off. It was more in line with equities. So really not seeing that close correlation with gold right now, more with stocks.
All right, Yahoo Finance's own Jared Blickery. Jared, thanks so much for the breakdown there. We're going to continue to check in on this with about 20 minutes left in today's trading activity. And everyone, coming up on the other side of this short break, we've got much more on the international conflict as Russia continues its invasion of Ukraine, prompting more sanctions from the U.S. and European Union member countries. But what effect do the deterrent measures have amid an expanding presence of Russian military operations inflicting their attack on Ukraine? And how does China fit into the calculus given its support of Russia? That's coming up next.
Stocks are rallying into the close this afternoon, coming well off session lows as investors consider the implications of Russia's invasion of Ukraine and the sanctions that have ensued. Now, as we can see, the Dow Jones Industrial Average is still down slightly. It had briefly turned positive just minutes ago, not quite holding on to those gains, but we will see how things shape up these next 19 minutes of trading. The S&P 500 now up more than 1%, and the Nasdaq Composite up about 3% as we see those big tech and growth names outperforming this afternoon. Meanwhile, in bond markets, we're seeing treasury yields drifting slightly lower. More investors seem to be pricing out the probability of a more aggressive 50 basis point interest rate hike from the Fed at its next March meeting in a couple of weeks. So overall, we are seeing that risk-off mood in the market from this morning beginning to soften.
All right. Thank you, Emily. Well, amid the ongoing invasion of Russia into Ukraine, let's explore the tools still left to de-escalate the conflict and what may lie ahead. For that, I'm joined by Douglas A. Redeker, Brookings Non-Resident Senior Fellow in Foreign Policy, Global Economy and Development. Thank you for joining me. So now that the invasion is underway, despite sanctions from the US and EU, there is pressure for a stronger response. We heard from President Biden earlier today, but that could also potentially include the Export Administration Regulations. Now, you've called this a big deal that Putin didn't expect. What makes this so effective, and how might its use this time be different from prior use?
Well, let's pick apart your question. I said it's a big deal because it's a big deal. I didn't say it was going to be effective. And what I mean by that is the Export Control Act and the Foreign Direct Product Rule, so what President Biden described as limiting the ability for Russian high-tech companies and really more broadly to gain access to the technologies underlying the economies of the 21st century. That is going to impact Russia's economy over years and decades. And let's just say we don't think Vladimir Putin is going to be deterred by the potential for his economy to slow in the years and decades to come. So it has a serious impact in terms of what it will do to Russia's economic growth. It doesn't mean it's going to act as a deterrent, if that's how we define effective. And I would say the sanctions never really were a credible deterrent because we saw that they were incrementally imposed. They didn't stop the invasion. I don't think anybody credibly thought that it was going to deter what happened today. I think the idea was to at least make it painful so that Putin thinks twice about what he does in the future. But, you know, again, I question whether anything really was going to be effective. We took putting guns and boots and troops off the table. And as soon as we did that, if you're going to use your own guns and boots and troops, the other side really isn't going to be able to stop you.
And we did see a sense of emboldenment, because I want to get your reaction to part of President Putin's speech justifying his invasion and warning against intervention. He said, whoever tries to interfere with us, and even more so to create threats to our country, to our people, should know that Russia's response will be immediate and will lead you to such consequences that you have never experienced in your history. Now, is this a case of watch what he does versus what he says? And what sort of fallout should the US be bracing for?
Well, look, President Biden was asked about that quote. The media and others have inferred from that he was threatening nuclear war. President Biden didn't bite on that, and I'm not going to either. I'm not sure I would say exactly what he means by that. I do think, though, implicit in that is the sense that Vladimir Putin is not going to back down. And so for those who are looking at the scenarios of where this goes next and how this ends, I don't think a viable scenario is Putin says, oh, gee, the Ukrainians were tougher enemy than we thought, or the Americans or the Europeans slapped sanctions on me, so I'm going to create some sort of a paradigm that allows me to say, never mind. I think that Putin wants to control Ukraine, full stop. Whether he stops there or not remains to be seen. But I think what Putin's messaging is pretty unambiguous. He's saying, I'm going to do this, and there's nothing you can do to stop me. Now, again, that might be true. We can't stop him. We can make it very, very painful for his achieving whatever goals he thinks he's going to achieve. And I think that's the best we're going to get out of this, at least in the short to medium term.
So then how does the US then navigate sanctions now? Or is that even the best deterrent, given what we saw with Crimea, when we don't fully know the extent of President Putin's ambitions?
Well, as I said, I don't think a deterrent is the right way to think about it. I think there's a punitive nature to this. You want the other guy to pay a price for doing something that is outrageous and against international law and norms, but it's not going to deter anything that he's doing. What would deter him might have been if a decade or two ago, the world, not just the US, but Europe and the US had taken a different stance on a variety of different issues. But that's not what we're discussing right now. I think that Vladimir Putin is going to end up controlling Ukraine. I don't think it's going to be easy for him. I don't think Ukraine is going to roll over. I think it's going to be an economic and political quagmire. And I'm not sure he's going to be all that pleased with where this ends up, because we don't know what the Zelensky government is going to look like if it becomes a government in exile, or if Zelensky and his people are actually captured, tried, and executed, or if they flee and become a government in exile out of the country. There are a lot of different scenarios. Putin can try and put a puppet regime in place in Kyiv, which is what I expect he will try to do. But managing the country from that puppet regime without the ongoing presence of Russian troops across the country is going to be pretty hard. And if he has to do that, that is costly. That is likely to end up in humanitarian costs on both sides. And I'm not sure how politically viable that is. But I think that's what Putin has in mind. And right now, I don't see many ways that we're going to end up stopping him.
Now, I want to get your reaction to some sound that we got from President Biden, especially regards to things like markets and the volatility that we've seen as a result. Take a listen.
When a major nuclear power attacks and invades another country, that the world is going to respond, and markets can respond all over the world. So there's no doubt about that, number one. Number two, the notion that this is going to last for a long time is highly unlikely as long as we continue to stay resolved in imposing the sanctions we're going to impose on Russia.
So in terms of this perhaps not being a prolonged conflict as people are expecting, do you agree with that?
I respect the president. I think he's wrong on that. I think this is likely to be a prolonged conflict. It might not be a prolonged conflict in the sense that you've got the tanks and the artillery and the level of activity that will be characterized this first week. But as I said before, I think that if Putin wants to control the country and the country doesn't want to be controlled, that's a recipe for an ongoing set of conflicts and tensions. Whether that is considered war or just an ongoing resistance, I don't know. But I don't think Putin is going to stop at some negotiated settlement for the Donbass. He's made it clear he wants to control the whole country, and the whole country doesn't want to be controlled. So I think this is going to be an ongoing problem. I think some of the sanctions you saw today are going to have short, medium, and long-term impact on Russia and on commerce across borders in Europe and around the world. So I would say I disagree with the president that this isn't going to be a long thing. I think it is going to play out over an extended period of time. But I also think the markets are overestimating the fact that, well, the sanctions didn't seem to be as terrible as some people feared. And if this is a short-term thing, then, well, we're agnostic as to human rights. We're just in it to make money. So therefore, let's go buy the dip. I think that we're witnessing a seismic change in the global world order. This is no longer going to be the post-World War II world order that we all grew up with. And I think there are going to be real consequences to that. But in the short term, the markets may be overestimating how painless that's going to be. I think there's going to be more pain for the markets and longer term unsettling situation in the borders of Ukraine than many seem to be ascribing to right now.
And I just quickly want to get your take on what we heard from the Belarusian president, who says he expects to discuss the possible deployment of Iskander and S-400 defense systems to Belarus with President Putin. And also we heard the president, when asked about China and perhaps China helping the US with Russia, the president couldn't comment. But what does having another country, having Belarus now siding with Russia, what does that mean for the US and its allies going forward?
Well, Belarus is no longer an independent country, full stop. Belarus was the staging ground for attacks from the Russian military into Ukraine. Belarus is now going to be armed with what I would assume will be a permanent Russian troop presence. So, there were moments in the past when President Lukashenko tried to play a little bit of a pivot card. I'm not really beholden to Russia, and I'm going to try and make some feints to the West. That's over. Lukashenko is now a complete puppet of Putin, and that's just done and dusted. The big question out there, and it's a really big question, is the one you alluded to regarding China. China has surprised me. I thought that China would recognize that there's going to be a global hostility to what Putin has done, and that by their allying with Russia, that makes China look bad. And China has, the two biggest markets China has are the EU and the US. So if he wants to really he being President Xi, if he wants to get on the wrong side of the US and the EU, because he's going to stand by his friend Vladimir Putin in this action, I think that is going to have economic costs to the Chinese. And it would not surprise me if China comes in and plays a little bit more of a nuanced card than they have to date. But I've been surprised. I thought China would already have done that. They have not. And, that is likely to have more consequences for China than certainly maybe has been baked in to date.
We'll certainly be keeping an eye on that. A lot of developments, obviously. Thank you so much for your insights, Douglas Redeker there, Brookings Non-Resident Senior Fellow in Foreign Policy, Global Economy and Development. Thank you for your time today.
Just minutes left in today's trading session. Major averages climbing out of deep decline seen early in the session. We're going to give you the key levels to watch going into the close after the break.
Welcome back to Yahoo Finance Live. As we count down just minutes away from the closing bell, let's take a look at how markets have moved throughout the day with Jared Blickery.
Well, take a look at this screen right here. And I think if you had just woken up after, well, let's say you slept in late and hadn't caught us until 24 hours before this, you might wonder what's going on here with Europe down 3 to 4% and all our indices in the green, but a massive, massive staged comeback here. And let's check inside the market. As I've been saying, it's really all about the mega caps that are outperforming and a lot of those beaten down growth names. You can now see Microsoft up 5%, NVIDIA up 6%, Alphabet, Tesla, Amazon, each up over 4%. And you take a look at the sector leadership, just confirming what I've been saying here. Tech, communication services, consumer discretionary, now real estate, all of those are the outperformers. Staples having a pretty bad day, along with financials and energy, the value trade flagging as we see the yield curve flattening. Also want to check out some of our sentiment leaders here. And a lot of this is showing money flowing into a lot of those beaten down sectors. Is it a dead cat bounce? Only history will tell. But for right now, we're seeing solar, energy, along with the ARK Invest ETF, along with IPO, software, internet stocks, retail stocks, chip stocks, all of those are up 3% or more and outperforming right now. Want to check in on the travel sector because this was a dark sea of red earlier. We can see Carnival Cruise Lines up 2%. United had been down 4 or 5%. It finally turned green. So seeing a lot of these names finally attract attention in the right way. But again, is this a dead cat bounce? Only time will tell.
All right, Yahoo Finance's Jared Blickery. Thank you so much for that breakdown. And coming up, we've got the closing bell and more analysis on the market impact of Russia's invasion of Ukraine. We're also awaiting quarterly results from Coinbase. Stick with us on Yahoo Finance Live for all the details.
Welcome back to Yahoo Finance Live, everyone. Just a minute and some change away from the end of today's trading session here. I want to introduce our panel that's standing by for once the closing bell rings. We'll get their live analysis here. We've got Anna Han, who is the Wells Fargo Securities Equity Strategist, as well as Michael Lee, who is the Michael Lee Strategy Founder. Thanks to both of you so much for joining us here today. We'll get back to this panel in a hot second. I want to take a quick look at where levels stand going into the closing bell as of right now. You've got major averages in positive territory across the board. Roughly, we'll round it off to a 7% swing that we've seen on the Nasdaq nearly on the day, as we started off the day down by 3.5%. Right now, looks like we're about to close up by about 3.3%. S&P 500, that's up by 1.5%. And then additionally, the Dow Jones Industrial Average, you're seeing gains there of 102 points or 0.3% there. Sectors mixed on the day. You've got more advancers than decliners now. Technology leading the charge. We'll continue to track that going into Friday's activity. But here is the closing bell.
And that is the closing bell this Thursday, February 24th. What a stunning reversal to the upside we saw across U.S. equity markets. All three major averages closing in positive territory, shaking off losses from session lows, particularly seeing a major move to the upside in the Nasdaq Composite, up about 3.3%. The S&P 500 up about more than 1.5%. It had been down by about 2.6% at session lows, and also seeing the Dow Jones Industrial Average eking out gains after being down by more than 800 points at its worst point of the session. But turning back to our panel now for more analysis on the market action that we saw today. Michael, I want to get your response first. What a rebound we saw during today's session. What do you think equity investors were taking favorably from today's developments? And should we be bracing for more volatility from here?
Yeah, look, I think volatility is going to be a constant for the time being. I think there's a tremendous amount of uncertainty as to where the Fed is going to go and what inflation is going to do. And that is out of the headlights at the moment because of Russia. However, I think that's a key driving force. This morning, as markets are selling off, as I'm waking up at 5:45, I'm getting text messages and phone calls of people saying, what should I buy? So I think there's an attitude out there that this was a pretty substantial sell-off. You look at things like the AAII investor sentiment survey in the ultra bearishness. We were due for a relief rally. To see it happen in this fashion on this day, I can only surmise that's because so many people were hedged and short to the downside that as there was a little bit of strength, there was a lot of short covering and then a little bit of momentum to the upside.
And Anna, what do you think about today's moves? Do you think there were opportunities that you were advising taking advantage of here? Or do you think opportunities have now emerged with this move to the upside, potentially signaling a time to buy for investors?
Well, one thing I like that Michael pointed out there was, what do we buy? That's a question I've been getting as well, because there's two ways to play it when you have a high volatility environment. One, and you can go defensive. But the defensive haven't been the sexy trade, and they're not really what people are going into, and no one's really heading for the hills here. On the other hand, you can play offense, and the question is, what can we ride as the macro drop here is the Fed is tightening. We have some uncertainty, but we know what's coming in a historical sense, that with rates higher, you know that cyclicality play, and with consumer spending and services spending coming back strong, you can expect that these kind of COVID beta and reopening plays should, in a long term, play out. So that's sort of the approach we're taking, but something to keep in mind as well, one-day performance is one-day performance. Most of our investors are a bit longer term, several months, maybe a year. And if you think about in that picture, we are down 10% year to date. So we do think there's still opportunities to play on the upside.
And certainly what a difference a day makes. Michael, I want to bring you in and circle back to what you said about the AAII Investor Sentiment Survey, which measures the mood of individual investors. That's at a one-year bearish high of 53.7%. How can individual investors maximize their investment opportunities compared with some of these large institutional investors right now?
Well, it's the advantage that the individual investor has versus the institutional investor is you're not tied to quarterly performance. So you can take that longer term horizon and try to figure out what works for you and what you want in your portfolio. So the value trade that they've been talking about this year is mostly been led by financials and energy. And shockingly today, energy was down big. And so even if this crisis in Ukraine completely diffuses, I'm still a big fan of energy because you have a dramatic contango going on right there that's created by a supply-demand imbalance. And the bull case for oil and for energy, for the XLE, is that there simply isn't enough supply to meet the demand. You're starting to see that with front month contracts more expensive than future contracts, meaning people will pay a premium to get their oil right now. I don't see that changing. Okay, this Ukraine-Russia conflict that's going on right now, while very serious, won't really have a very material impact on the United States. I think once the economy is chugging along in America, despite its challenges, despite the deceleration of growth, it's very hard to stop it without a massive debt bubble. I don't see one coming anytime soon. So what I'd say to the individual investors is now find things that are cheap, because I'd imagine they'd play out over the next year or two. And if you don't like things that are necessarily cheap, there's still some high quality names out there that had some great days today. It'd probably be better to buy them this morning on the open than today on the close. But there's definitely opportunity in a market that's down double digits from its all-time high.
And as Michael was mentioning, that obviously Ukraine and Russia getting the bulk of the headlines as a global issue. But then what about, the Fed pressures and everything else? How is that informing your equity market outlook short term versus longer term?
Well, I think what we got to keep in mind is, yes, the U.S. economy has pretty low exposure directly to Ukraine and the situation with Russia. However, the important here is how does it affect inflation expectations? And that's really what we're keeping an eye on. For us, as that inflation becomes a variable for corporates, the potential for it to eat away at earnings or potential for it to really steer the Fed to accelerate or decelerate that rate hike schedule, that's what we're looking at. But keep in mind as well, depending on that, like you said, the short-term or long-term investment style, short-term, we do expect that volatility can remain. There is still uncertainty, and investors still should tread or expect a little more portfolio tracking risk than they've seen perhaps in the past. But in a longer term view, we think that, again, the exposure to the US directly is limited. It'll really be up to the Fed to set that pace for us, whether they want to shock the markets with a more aggressive or be on pace and go with the consensus, which looks like we're expecting 25 bips in March.
Okay, so staying with you for a second, Anna, because when we think about what the Fed will do and what was in play today, it seemed that investors were largely taking what they knew about the situation with what the Fed was going to have to do and perhaps stepping off of some of their more hawkish or more aggressive measures, at least in the near term, to say this is a buying opportunity, not just because of the dip and buying on the dip or this FOMO mentality that might be out there of missing that buying opportunity, but also because what we know the Fed is more likely to react on and be not just data dependent, but also all of the variable dependencies, especially from international conflict. So how do you expect the Fed to now squarely address what that international conflict is, the same way that they had to with regard to the US and China trade war a few years back?
That is a situation we've actually been comparing this to, so I'm glad you brought that up. The way we see it for now, we think the Fed will proceed with the focus really on inflation readings and on unemployment. And unemployment is quite low when you look at historical comparison. But of course, we do expect them to mention the situation with Russia or Ukraine, to be eyes wide open. But I think that the way the energy market has been, despite energy markets pulling back today, just in the broader scale year to date, you've seen that the inflation pressure is there. And that's something the Fed really wants to get a hold of, because they don't want a situation where we have stagflation down the road. They don't want to fall behind the curve here. So for now, our view, our house view, that the Fed will proceed with a hike 25 basis points. They will remain very vigilant on how they address inflation, but were we really to see a bigger impact or something that was unpredictable from Russia-Ukraine situation hitting domestically, I think that's when maybe they would consider slowing down, but that doesn't look to be in the cards right now.
And similar question to you as well, Michael, outside of the kind of international crisis that we've been tracking and the conflict there, what would cause the Fed to have pause in their strategy going forward in the data dependency that they've said they are going to be leaning into at this time?
Well, you know, what I would say, if we start seeing the month over month inflation numbers go from 1% growth month over month to 0.1%, if we see a slowing of the growth of inflation, a massive deceleration, which I don't necessarily think is going to happen. But I mean, if the next CPI print came out and we had a very large year over year number, but a low month over month number, I could see, you know, the dot plot and the Fed fund futures changing dramatically. I think what's going on right now, what's causing the volatility is you have smart people out there saying, you know, we're only going to see 3 or 4 hikes, and you have other people saying we're going to see 8 or 9 hikes. And the range of the consensus viewpoint is simply too wide for stocks to make a major footing either higher or, as we saw today, lower. So I think if we see a massive deceleration month over month, that's all that really would give the Fed cover. I don't, you know, maybe if this Russia-Ukraine really deteriorates into other countries, you know, let's hope that doesn't happen. We're not going to have to play out that scenario, but we would need a massive exogenous event other than the data really coming in much better than most are predicting right now.
All right, we do thank you for your insights. Michael Lee there, Michael Lee, strategy founder, and Anna Han, Wells Fargo Security Equity Strategist. Thank you for joining us today. All right, just ahead, beyond sanctions, what about the push to strip Russia of SWIFT access? We'll take a look next.
Welcome back to Yahoo Finance Live, everyone. We're keeping tabs on shares of COIN here in after hours trading as they are moving in negative territory now, it seems. After hours, want to bring in Yahoo Finance's Inez Ferre with more on the earnings. Inez?
Yeah, Brad, quite a bit of movement with Coinbase in after hours. Let's take a look at some of the metrics that the company announced for its fourth quarter last year. Taking a look at revenue, that came in at $2.5 billion. That was a beat. The street was expecting $2 billion. Adjusted EBITDA came in at $1.2 billion. That was also a beat. The company said that it ended the quarter with 11.4 million monthly transacting users. The street was expecting 9.8 million. So that was a beat. Now, what's interesting is what the company said in its shareholder letter. Quarter to date, we have seen a decline in crypto asset volatility and crypto asset prices compared to all-time high levels of Q4 2021. That's not unusual, as we've seen historical crypto market patterns where all-time high periods have also followed softer periods. It goes on to say, we believe that retail MTU and total trading volume will be lower in Q1 2022 as compared to Q4 2021. Now, that's what analysts had been looking to see, was how trading would be this quarter as compared to the last quarter, because they were expecting a strong fourth quarter, but some softness this current quarter. Also looking to see on user growth, what the company has to say about that. Year to date, the stock is down about 26%. Brad?
I'll take it from here. Yahoo Finance's own Inez Ferre, thank you so much for that breakdown. President Joe Biden spoke this afternoon of additional sanctions set to hit Russia amid its invasion of Ukraine. One measure that hasn't been unleashed is a move to boot Russia from the SWIFT global banking system. Yahoo Finance's own Brian Chung joins us now with more. And Brian, break down these comments for us. What is Biden saying about why sanctions have stopped short of cutting off Russia's access to the SWIFT network at this point?
Yeah, and it's important to just kind of take a step back and remember what the SWIFT network is. It's essentially the communications channel by which these large institutional banks around the world can communicate with one another to facilitate payments. But as you mentioned, President Joe Biden mentioning in his remarks earlier this afternoon that that would not be part of the sanctions, at least for right now. Take a listen.
The sanctions that we've proposed on all their banks have of equal consequence, maybe more consequence than SWIFT, number one. Number two, it is always an option, but right now that's not the position that the rest of Europe wishes to take.
Not the position that the rest of Europe wants to take. And that might be referring specifically to Germany. Some reporting from the Financial Times suggesting that Chancellor Olaf Scholz is not in favor of doing so at this time, even though the United Kingdom would prefer to have Russia removed from the SWIFT network. As a primer, SWIFT stands for the Society for Worldwide Interbank Financial Telecommunications. And again, it's the primary communications channel for banks to facilitate payments. And it also does the record keeping for the trillions of dollars of funds that zigzag around the world, which means blocking a country from SWIFT, which is essentially the banking system Slack network, if you will, would disconnect Russia financially from the rest of the world. That's something that was actually done against Iran in 2012 and then again in 2018. You could see how this would be a big deal, but there's actually an interesting argument about the effectiveness of banning a country like Russia from SWIFT. There's some concern that maybe boxing them out from the invoicing in which a lot of SWIFT transactions are done in US dollars might disintermediate the dominance of the US dollar. Might be a moot point because the Russian central bank has already made a lot of efforts in the years leading up to the pandemic to de-dollarize itself and instead stack its reserves with things like gold. So a lot of questions open and out there about whether or not a SWIFT ban would actually do the job of cracking down hard on Russia. Instead, the Biden administration emphasizing that its bilateral and targeted sanctions against banks like VTB and also Sberbank might do the better job of blocking Russia from financing around the rest of the world. Emily?
A delicate balancing act there indeed. Thank you so much. Brian Chung there for us. All right, next, a safe haven no more. How market volatility continues to change the narrative of crypto, especially Bitcoin as digital gold. Plus, Coinbase earnings are out. See how it fared after the break. red all day. Markets managed to get back in the green, but how did cryptocurrencies fare? To break that down, we're going to be talking to Lisa Ellis, Moffett-Nathanson, a partner at Moffett-Nathanson. Thank you for joining us today.
Hi, thank you.
So first, I want to talk about the reaction that we've seen from cryptocurrencies. Obviously, we used to see them as a safe haven, but now they're trending more with equities. Were you surprised by the response of crypto to the conflict in Ukraine?
Not unexpected, no. A couple of specific things about that region. Russia is the third largest crypto miner as a country globally after the US and Kazakhstan, which is where a lot of the China crypto mining capacity moved after China cracked down. So Russia is a major crypto miner, and then also the Ukraine recently legalized crypto and has been a very crypto, they legalized Bitcoin and other cryptocurrencies. It's been a very pro-crypto environment. So this conflict, is sort of viewed as a negative for the crypto ecosystem more broadly, in addition to just, it driving a bit of like risk off behavior. And so flight to, to lower volatility, lower risk assets.
So then is a safer bet to then invest in some of these companies that are instead more focused on blockchain technology rather than instead of taking your eye and looking at Bitcoin and Ether as well?
Yeah, I would say so. I mean, directly investing in the cryptocurrencies themselves, especially a basket of the major ones, is a very good way to get very direct, pure exposure to the technology and to the evolution of the space. But that said, yeah, I think the appeal of owning some of the companies like a Coinbase is that they're much, they're not as subject to the volatility, and they're beginning to diversify their businesses into other revenue streams more related to, developer environments and SaaS kind of models and things that are a little bit less volatile. And in those cases, you're betting more on just crypto as a technology versus like individual coins and the success of those individual coins.
Lisa, as we're amid this international conflict, a major question that investors might be asking themselves on the cybersecurity front for those very names that engage with the platform plays in crypto is how they're taking efforts to mitigate what is the risk of some of those cyber attacks or those malicious actors amid some of the threats that have now emerged.
Yeah, fighting fraud and various criminal activities has been and continues to be a challenge for the crypto world. I'd say the recent events and certainly shine a spotlight again on the importance of the crypto companies that do really good custody, digital asset custody. So really do very good KYC AML, so very good unique, identifying capabilities like unique identifier capabilities, but then also are very good at securely storing crypto. That's in my view, that is like the kind of keys to the kingdom of the cryptocurrency ecosystem succeeding. The linchpin of it is very effective custody of crypto assets. And I'd say some of these recent headlines around, again, theft, criminal activities, et cetera, shine a spotlight back on that. And that's where players like Coinbase, but also some of its peers in the US, like a Paxos, for example, are very strong and, pro-regulation in that area, which I think over time will benefit those companies.
Say we get regulation in the near future. We already know that there are going to be some of the regulatory bodies that are moving forward with their own studies. Congress is even trying to put together working committees. And so with all of that in mind, how much do you believe that not just cryptos will rally on that, but especially some of the annexed publicly traded or equity market names? We just had two of them report after the close here today, and Coinbase and Square, which had actually taken a loss in its own Bitcoin holdings. It's perhaps a different conversation, but how much they're next to the regulatory framework that could move forward over the course of this year or even into next year?
Yeah, it is a major overhang on the U.S. listed well, it's true globally as well, but particularly on the U.S. listed companies directly exposed to crypto. Because of that level of uncertainty and because these are long-term holdings, investors feel like they can wait. And so they're sitting on the sidelines waiting out the regulatory uncertainty. Frankly, clarity of almost any kind will be positive. Right now, you're just stuck with the enormous amount of uncertainty, meaning, there's uncertainty like, well, are a whole bunch of existing coins going to be treated as securities from a regulatory perspective, in which case then subject to SEC regulation, which is just a whole different animal and would throw the space into turmoil for a period of time, right? Like it's that kind of level. Now, is that likely to happen? Probably not, but there's so little visibility and so much uncertainty that it definitely creates a significant overhang on all of these companies that in my view, there's a lot of work to do, but even just getting any level of clarity, even if it's not the, ideal outcome from the crypto community's perspective, will help move us forward.
And Lisa, Brad was talking about some of the crypto company earnings that we got this afternoon. Coinbase fourth quarter results were better than expected on the top line. The question is, though, how does this company fare in the first quarter and this year, given the slide that we've seen in Bitcoin and other crypto prices for the year to date, which does tend to drive down user engagement as we've seen previously? Now, is there a way to protect against this exposure to underlying crypto price volatility for Coinbase and other companies like it?
Yeah, the major thing that because you're right. I mean, you've seen the stocks bouncing around like crazy after market because the in-quarter performance was actually a blowout quarter on pretty much every measure. But then their outlook for 2022 is quite cautionary because of the rising rate environment and the geopolitical uncertainty, which again, kind of brings off all these risk assets, brings the volatility down in the space, which is not good for their trading volumes. The number one thing they're doing to address that is their subscription and services revenues are a major source of investment for them. These are basically the revenue stream that is not tied to direct trading in crypto. It's kind of low double digits percentage of revenues, and they're investing very heavily in those service lines in order to grow that revenue stream. And I think if that can get up above 20-25% of revenues, then we'll start to see the stock less directly correlated simply with the movement in crypto assets.
Lisa, we got to leave things there on the day. Got to continue this conversation in the future. That's Lisa Ellis, who is the MoffettNathanson partner, joining us here this afternoon. And everyone, stay tuned here on Yahoo Finance. We've got influencers coming up today. Georgia gubernatorial candidate Stacey Abrams, along with now President and CEO Laura Hodgson on the show.
In this episode of Influencers, Georgia gubernatorial candidate Stacey Abrams and Level Up co-author Lara Hodgson.
There has to be a reevaluation of what we can get from these small businesses, especially women-owned and minority businesses, meaning that not everything is a unicorn. If everything's a unicorn, there are no horses. So we've got to recognize that there are some thoroughbreds out there that just need some cultivation and access.
We always ask ourselves, what is the systemic or infrastructural forces that are causing the problem to begin with? Because if we have the problem, there's a very good chance that others have it as well.
As someone who grew up working poor, I am privileged to be in a place where I can claim success. And it's a success I didn't enjoy 4 years ago.
Hello, everyone, and welcome to Influencers. I'm Andy Serwer, and welcome to our guests, plural, Stacey Abrams, Georgia gubernatorial candidate, co-founder of B2B invoice company Now Account, and co-author of the new book, Leveling Up, and Lara Hodgson, co-founder and CEO of Now Account and co-author of Leveling Up. Welcome, Stacey and Lara. Great to see you both.
Thank you for having us.
Thanks.
Stacey, why don't I start with you? Most people know you as a politician and a voting rights advocate. In fact, you're running for governor right now. How did your career as an entrepreneur, though, emerge alongside your political work? And why release a book about it right now?
My political work actually necessitated me becoming an entrepreneur. I was deputy city attorney for the city of Atlanta, decided to throw my hat into the ring for a state legislative seat. And I decided it would be improper, although it wasn't illegal, to stay at the city as a lawyer while running to represent the community at the state level. And so I launched my consulting firm. I had one client. It was a steady client. But I learned after a year that you needed more than one client to guarantee the longevity of your business. And lucky for me, I'd met Lara Hodgson. She and I met through a leadership program, and we decided to launch our infrastructure consulting firm, Insomnia, together. And so that was really my transition from reluctant entrepreneurship to full-on commitment to being responsible for my own paycheck.
And just to follow up on that, we often talk about, Stacey, whether CEOs should go into politics, but you're a politician who also runs a business. So I'll ask, do CEOs speak out enough about political issues, and how should they draw the line as to what warrants speaking out?
I believe it's important for us to understand that politics is about how we live our lives together. I've got a 15-year-old niece, and we were talking about the difference between politics and the economy. Economy is how we make and spend our money. Politics is how we make and spend our time, and how we determine how we will live our lives. And so it is disingenuous to think that you can separate economics from politics, or that a CEO can separate her responsibility as a political leader from her responsibility as an economic leader. The challenge is determining which questions require your input, but also deciding when that input is necessary. And any good CEO knows that you don't have to micromanage your processes. If you're doing the right thing, if you're hiring the right people, most of it will get done. But when those questions become so large as to impact everyone, or to impact your employees, or to have a seismic effect on your ability to continue operating your business, then absolutely you should be involved. And there are some conversations that are social in nature, others that are cultural, but those that are foundational, that cut across your ability to make good decisions, especially about how we live our lives, those are the moments where I think CEOs and other business leaders have a responsibility to step up and make their voices heard.
And obviously those points are salient to some of the things that have been happening in your home state, and maybe we'll get back to those in a second. But I do want to turn over to Lara and ask you about Now Account, which you and Stacey co-founded. What is the company trying to do, and what have you learned about small business challenges in that process?
Yes, Now Account grew out of a challenge that Stacey and I had with our former business. And as we were trying to grow that business, we discovered that it's getting easier to start a company, but ever harder to scale a company. And more businesses grow out of business than go out of business, because as you start to take on these larger and larger customers, they don't pay immediately upon receipt of your good or service. They will pay 30 days, 60 days, 90 days, even more later. And that creates an incredible burden on a small business that's trying to invest in growth. Having experienced that ourselves and looking at the existing solutions that were out there, not finding one that worked, we decided to create Now Account, which is a payment system that allows businesses to get paid immediately when they deliver their good or service, instead of turning to loans or factoring or the more traditional financing type structures. Our goal in doing this is really to relieve small businesses of the burden of being the largest lender in the economy and allow them to use their own revenue, their own cash flow from operations to fuel their business, which in turn allows them to play the role that they are being asked to play, which is the engine of the US economy.
And Laura, I understand you were an aerospace engineer by training. And so how did you two meet? And Stacey was a lawyer. But first of all, from you, Laura, how did you guys meet?
Yes. I joke, everyone, when they work with me and know that I'm an aerospace engineer, the term always comes up, it's not rocket science. And I always respond, well, that's okay. We've got that covered just in case. Stacey and I, as she mentioned, met through a program called Leadership Atlanta. And it was an incredible program. It is an incredible program that continues today, but it brings together current and future leaders from every corner of the community. And so I was coming more from the business side. Stacey was coming from having worked, as she mentioned, with the city of Atlanta, and then, moving eventually into more of an elected role. And we were lucky enough to meet in one of the first sessions. We met because Stacey mentioned something that I had never heard another woman say. And I thought, oh my gosh, I say that. I have to meet this woman. And I accosted her at the buffet line.
We'll be right back with more from Georgia gubernatorial candidate Stacey Abrams and Now Account CEO Laura Hodgson. Welcome back to Influencers. I'm Andy Serwer, and I'm here with Georgia gubernatorial candidate Stacey Abrams, along with Now Account CEO Lara Hodgson. Stacey, let me ask you about venture capital, because in the book you wrote, venture capital is not a meritocracy. I guess, we know that it favors white men, buzzy ideas. Is venture capital broken?
I think it's broken but fixable. And part of the challenge is that the fix can't come from the people who broke it. We have this cyclical imagination where venture capital is often created by those who made their money from venture capital. So you invest in a buzzy tech startup, you find a unicorn, and you thus are always looking for new unicorns. And it's the economic equivalent of if you're a hammer, everything is a nail. And the challenge is we need a broader toolbox for our economy. And for the small businesses that need access to venture capital, we have to be willing to acknowledge that there are these other devices that are available and other ways to improve the world around us. And so, yes, venture capital is broken, but I do think that there are those out there who are doing their best to try to create fixes, but those fixes have to be scaled. And the real challenge is that the innovative solutions that we're seeing are actually only being promulgated by a small cadre of VC firms. And those larger VC firms have to do more than pay lip service to investing. They've got to look beyond what they know and bring in people who understand that there is more to our economy and more opportunity that may be slower to yield, but will have the same overall economic impact.
One more for Stacey before I go back to you, Lara. So I want to ask you about the federal government supporting small businesses. For instance, restaurants. Congress has been dragging its feet about putting more money into the restaurant revitalization fund. Should the government be making more money available for small businesses at this point?
Yes, and going to your earlier question, it's once again a challenge of imagination. Small businesses are not miniaturized versions of Fortune 500, Fortune 100. They receive their capital in a different way. They spend their capital differently. And many of the programs that we've seen, including the PPP program, misunderstands how the small business ecosystem works. And Laura and I built Now Account around that very issue. As the person in charge of accounts payable for our earlier businesses, I can tell you that the ability to convince a large customer to send you their money is almost impossible. But the same is true of getting a large bank to loan you money. When the cost of doing a bank application is $5,000, whether you're a small business or a large business, their utility is best spent on that large business, which means that small businesses aren't getting access to the resources. And the regulatory schemes that are put in place to ensure against risk and fraud often cripple the ability of small businesses to even enter the conversation. The best small business program that we have seen was actually the Small Business Jobs Act, done in 2010, because it was designed especially and specifically for small businesses. I understand the urgency of responding to the pandemic and the fact that the federal government responded under both recent administrations by taking what they knew and trying to scale it down. But we have now reached a place where we know the pandemic is shifting to endemic, but the economic crisis is also remaining. And so we have to have an economic program that actually looks at the needs of small businesses, is scaled for small business, and has a regulatory scheme that protects both the federal government's investment, but also protects the ability of small businesses to access those dollars and to deploy those dollars effectively.
Lara, over to you. Other problems vexing businesses right now: inflation and labor shortages hitting Fortune 500 companies, but small businesses as well. And I want to ask you how they're struggling with it. Does this risk potentially put them out of business if they can't compete with the price flexibility and scale of larger competitors?
Absolutely. And, I think we all know that small businesses have borne a disproportionate amount of pain coming through the pandemic. And as we move into, as Stacey said, more this endemic stage. But it's a perfect example. We have a client that came to us, minority women in business, that's in an industry where she's very often in competitive bid situations with much larger companies. Those competitors can always outprice her because they can afford to be more aggressive in their pricing to get these large contracts. One of the things she did was use Now Account to offer extended terms, knowing that she was going to get paid immediately, which her competitors could not do. And so what she did that was so inventive is she changed the game. Instead of trying to compete on a fraction of a penny per gallon of fuel that she was delivering, she instead started to compete on the terms that she could offer. And so I think that's what's important. And it goes back to what Stacey said, is understanding the true underlying economics and cash flow of how small businesses work, and solving the problem by leveraging what works for them, as opposed to forcing on them historic solutions that have worked for much larger companies but don't work at a smaller scale.
All right, Laura, another one for you. Does remote work make it easier or harder for small businesses to recruit and afford talented employees? So advice for small businesses trying to transition back to the office, that kind of thing.
Yeah, we're going through it right now ourselves as we've transitioned back to the office and are still transitioning in many ways. If you think about it, small businesses have always had to be creative in terms of attracting talent. We don't attract talent by necessarily paying more money because we don't have it. But we've always attracted talent by offering things like, better work environment or better work-life balance or, better lifestyle type amenities. And that gets more difficult when you don't have that balance between an office environment and a home environment. And I think we're finding most people enjoy this concept of hybrid. But I will say it is much harder for a small business to scale when you don't have some ability for people to come together and collaborate, because so much of what drives small businesses is the innovation and the development of new ideas. And I think you can do your job well remotely, but it's hard to improve your job well remotely because you need that interaction with other people.
Yeah, we're finding that to be such a mixed bag, aren't we all?
Yes.
Stacey, over to you, because in the book you criticize something that, excuse me, that I find particularly interesting. And that's the role of big tech and how they play in terms of shaping small businesses. And Facebook, of course, really holds himself up as a champion of small business. But you write, companies like Google, Facebook, Apple, and Amazon can control how small firms and creators reach customers in the new algorithm-powered world of targeted consumer advertising. So I wonder just how bad you think these companies are. Are there any positives? And then how should we think about them in terms of the regulatory environment?
I think the critique is not good or bad, it's awareness. One of the challenges is that Facebook is doing things that are helpful to small businesses, but they're also doing things that if you aren't invested in the small business dynamic every day, you don't understand the consequences. And that's just true of any scheme that is larger than the small business, this applies to big tech, it applies to big finance, anything that is large that impacts small, large is always going to have an outsized effect. And what we wanted to really raise awareness of with that critique is that there has to be an intentionality of scale. For small businesses to scale up, large companies have to scale down. They have to understand how these points of entry work for small businesses. And when the cost is too high, when the ability to engage is too complicated, small businesses lose out. And we've got to remember, most small businesses aren't the 500 employee business that is still technically considered a small business by the SBA. It's the 5-person, the 15-person, the 29-person. And we have to be able to leverage every single mechanism so that they can participate effectively in that part of the economy. And so when it comes to advertising, if the algorithm is always going to privilege the larger, better financed company, then the small business is never going to be able to move forward.
We'll be right back with more from Georgia gubernatorial candidate Stacey Abrams and Now Account CEO Laura Hodgson. Welcome back to Influencers. I'm Andy Serwer, and I'm here with Georgia gubernatorial candidate Stacey Abrams, along with Now Account CEO Lara Hodgson. Stacey, I told you I wanted to come back and maybe ask you some questions about politics in the state, and I'd love to be able to do that now. So if a business in Georgia came to you and asked you your advice about the best way to protest the state's new voting law, what would you say? Would you ever tell them to consider leaving the state? How would you respond?
I've written about it. I have talked about it. I have echoed it several times. I believe you stay and fight for what you believe in. I think that as a Southerner, I understand the salience and effectiveness of boycotts, but economic boycotts in the 21st century have a very different dynamic. And where we are is truly a conversation about what happens in this country. And so I believe that the work that has to be done in states like Georgia and other states that are promulgating these laws is that we have to stay and articulate why our democracy has to work no matter where we are. And let's remember, this is not a partisan issue. This is an issue that when you break democracy for anyone, you break it for everyone. And we've already seen the early effects of this. We have to be willing to demand change where we are, especially for those that are more vulnerable, because they don't have the luxury of leaving. And so my belief is always that you stay and fight. And to Lara's point, the infrastructure that we need to build can be built right here in Georgia. And that's where I want us to start.
What are your priorities right now, Stacey, when it comes to governing Georgia? If you were governor, what do you hope to accomplish? Why are you running?
I'm running because I want there to be one Georgia with a singular belief that everyone is entitled to opportunity. As a small business owner who grew up working poor, Lara and I both come from economic backgrounds that don't predict that this is where we're going to be. My background is slightly different than hers, but as someone who grew up working poor, I am privileged to be in a place where I can claim success. And it's a success I didn't enjoy 4 years ago. It's certainly a success I didn't enjoy a decade ago. And that ability to be successful should be something that is accessible to every Georgian. And right now it's not. Right now, your zip code matters, your background matters, your access to power matters. And unfortunately, that's the type of leadership we have, one that cherry picks success. Instead, we have to do three things. One, and first and foremost, is expanding Medicaid is the single largest economic driver that can change the future of the state. We're talking billions of dollars to not only increase access to healthcare, which is important in a state that is losing hospitals in the midst of the pandemic, but it creates 60,000 new jobs, gives 500,000 people access to healthcare insurance, which means they're going to stay at work longer. And it increases the investment in property values in rural and urban communities, meaning we're lifting the entire state. Number two, fully funding education, not as a gimmick, but as a means of ensuring that our children have the education they need. And three, really focusing on our small businesses, doing more than paying lip service to small business, but instead targeting programs that ensure that access to capital, access to training, and access to commerce is made available to our small businesses with intentionality and with geographic diversity, because we cannot focus everything on Atlanta. It's more than half of our state's population, but it is not more than half of our state's opportunity. And we have to be willing to look at the entire state and invest everywhere.
And where do things stand in your mind right now with COVID restrictions, mask requirements? What do you think, Stacey?
You know, we are transitioning from pandemic to endemic. And the most important, and I would say egalitarian thing, is to follow the science. We need to make certain that we are doing what the science says we should do. Georgia is one of the lower vaccination rate states in the nation, which means we cannot operate as though we have already achieved the metrics that some other states have achieved. We have some of the highest infection rates, and that means we have to be very intentional about when we relax our mandates, and that we have to have plans. And right now, the challenge is not simply the lack of a plan, it's the announced intention of the governor not to create legislative plans. And so my concern is that inaction is almost as dangerous. We need to make certain that that leaders at the state level, at the school level, at the leadership levels of our municipal governments, that they have good access to information, but that they also have good leadership that says, here's the rubric you use to determine your plans, and here's what we recommend. And unfortunately, that has not always been a consistent behavior in this current administration.
All right, I'd like to ask both of you two questions to kind of wrap things up here. First of all, would it be helpful if more politicians in Washington were small business people? And then what do you see as your legacy? First of all, Laura, by the way, you say you have different politics. Does Stacey have your vote here with this?
Yes.
Okay. All right. What about the small business owners being politicians in your legacy, though?
So I would say it would be fantastic if more small business owners were also active in political, areas, whether it's local, state, national. And the reason I say that is that small businesses have never had a voice. If you think about it, almost every program that's ever been designed to help small businesses, it's been designed by people who likely were never in or around a small business, because that's not the career path that gets you into those roles. And so small businesses are used to being talked at, not with. And I think if more small business owners, also played a role in helping shape policy, then perhaps we could actually have a voice at the table as opposed to being the object of whom the voice is speaking to.
Okay. And Stacey, over to you. What do you think is your legacy at this point, and how are you thinking about that?
At 48, I'm hoping I don't have a legacy yet, but what I hope the longevity of this conversation will be is one, that we see small businesses as their own driver of economic success and of community success. Two, that the systemic solutions that Laura and I offer, both through the businesses we've started and the policies we recommend, that those really take root. And then three, that our ability to work together despite differences, our ability to navigate tough challenges, and our ability to succeed when failure seemed absolutely obvious, that serves as an inspiration. And if those can be our legacies, then I think we've done a good job.
Stacey Abrams and Laura Hodgson, co-authors of the new book, Leveling Up, thank you so much for your time.
Thank you so much.
You've been watching Influencers. I'm Andy Serwer. We'll see you next time.